8:30 Eastern Time as scheduled. Luke Teddy joins us now of Wilmington Trust to get into some of these issues. Luke, welcome to the programme, sir. Now, you have maintained a forecast of 1.8% GDP. Unlike the others who have been running around without their heads, you've maintained 1.8% and the world has come towards you. Luke, what did you see in the trend that told you that ultimately growth would end up where consensus is currently?
At the beginning of the year, when we had that 1.8% expectation, it was because we thought that consumers were front loading as late as the fourth quarter of last year, never really believing that consumers were that strong. Now we have moved to a call of recession with a probability of 55%. We made that call on April, I guess it's 4th, 2 days after the
Hey, Shades.
reciprocal tariff announcement. And I think what we've
How you
seen
doing, man?
in that Q1 data is exactly what you were just talking about. You do have front loading. We see that from
Trying to get
consumers
set
for
up here.
purchases of durable goods. We don't expect that to continue. We see it from businesses. Mike just mentioned the strong CapEx numbers. Within that, you had a 60% annualized increase in businesses investing in computers and servers and whatnot. So you see that front loading there. And then, of course, there was the buildup of inventories. And I
Yeah.
don't think that this should really make anybody feel that great about the first quarter. And of course, this data cuts off March 31st. It's right before the reciprocal announcement.
Paying for
And another
yesterday's.
point that I think
I'm
is
paying.
important,
I'm trying to
the domestic sales of domestic product
reconcile for
U.S.
yesterday's
consumers
sins.
either buying domestically or sending overseas declined 2.5% annualized in the first quarter, and that is the worst since the COVID shutdowns and before that, the global financial crisis. So I don't think that the front running is going to keep going. I don't think it's going to be sustained, and I think that we're looking at a decline here in the second and third quarter.
Luke, has the damage already been done? That's the key question as some of the discussions around trade have softened.
I think a lot of the damage has been done. Of course, it could get worse and it could get better, but when
All right.
businesses are dealing with significant historic uncertainty and start pulling back, either trimming around the edges with spending.
Okay, so what? I moved my fucking stop, dude. I got into. I tried to. I didn't take the pullback trade all day, and then at the end of the day, I decided to take the pullback trade, and it ended up being a reversal to a short, and I held my stop to the DLL. So I DLL'd yesterday. It was fucking stupid, dude. It was just so stupid. So I made a new rule. I'm only gonna take the EMA cross for the reversal. Yeah, it's just so stupid to keep doing that, man. You know what I mean? Like, this trade was perfect. Like, look, this was absolutely perfect. Rollover. We're gonna get it all, I think. You know, why are we not just taking these and not playing around in the fuck shit, you know, and the ignorant stuff, and then holding it thinking you're going to be right? You know what I mean? It's just, I made a new rule. I'll go, hold on, I want to focus on this for a second. I just want to get all I can.
As price pressures for imported goods, which is very different from inflation. You know, the textbook of inflation is that you've got price pressures that go up and drive
Following it down
prices in a general manner.
But
I don't think consumers
I'm gonna, let's see here. I'm only going to take entries when I can front run the EMA cross. So when the EMA is about to cross, those are the only trades I'm going to take.
Away from their spending on vacations, plane flights, you know, trips to wherever, haircuts, all of that kind of stuff, and you're going to be seeing the weakness on that side. So in the aggregate, we would see some higher CPI readings and PCE readings in the early months, but that would give way in the face of economic weakness.
So
I think that inflation is going to be a problem.
I'm not going to play in between the EMA crosses. You know, like right here, the EMA crossed. Look at this beautiful trade. You know, this looked good though because of the way it wound down. It wasn't like a quick snap trying to catch the fallen knife. But I'm only front running these moves from now on.
And of course, we don't even have any idea what's going to happen with China. But let's say there are historic tariff cuts and they come down to something like 25%, let's say. You've still got a quintupling of the tariff rate that we had as of January 1. You know, it's going to be between 12 and 15% or something like that. And that's not to say it's good, bad, or indifferent policy. What we're looking at is consumers that would struggle with those kind of price increases. firms, if they believe that it's permanent, even at those lower numbers.
So that's
They have a
because I
20%
keep
reduction.
trying to, like,
Businesses
you
have
know,
to change their operating structure. They have to change
it's good to call out the trade and
their
describe it,
investments
but
and really change
you gotta like,
in their hiring decisions, and that kind of
if the
transition
price action is moving really steep on the pullbacks, it's kind of hard
even with the kind of trade
to
deals
sit
that
there, and if you get run over, you want to hold it.
through a decent economic shock here.
You know what I'm saying? And it's, there's just better places to get in during the day to still get 2 or 3 trades without going crazy. You know what I'm saying?
I think the Federal Reserve knows everything that I'm
You know,
saying.
as I analyze
They
this
also
more.
need to watch to the upside for inflation. Of course, their biggest fears is inflation running up and going away. I mean,
So did you,
it's gonna to
what did you
they
price?
recognize the weakness in
So
the
you
consumer
were
demand.
trading London this morning?
That they'll also know that the labor market would not have been showing.
Were you on the
in
ES when you,
I think that given the possibility of the upside risks and that they can act
oh,
quickly
okay.
if they need
NQ,
to, it'll
okay.
become apparent.
Yeah, I might watch the NQ today because the ES was so slow yesterday.
Which is
Like you were only getting a
the
couple
market
points out of a move. So the NQ,
we're going to see the decline.
the price action was okay, but the moves were bigger. You know what I'm saying?
That'll be playing catch up
Yesterday.
at that point.
Hey, Luke, appreciate your time.
So that maybe would have been a day.
Of Wilmington Trust.
Oh, wow. All right. So you only need 1,000 on that account, or do you, or is that a 50K?
The rest of the world came towards him. Then after the tariffs,
Well, we got to be more consistent, man. You know what I'm saying? Like the places where we make money.
Is that they saw the slowdown
Yeah.
process going into year
Well,
one last year and continuing through.
so you're back.
2025. And
Is that the most you can do on it today?
we're looking for a boom off the back of this election
15?
result.
Yeah, you're done on that one for
Today, we're
today.
looking at a soft landing that was a landing, that was a deceleration that you were seeing.
All right, I'm going to follow this down
It's
tighter.
off of a pretty high place, but that continuing with the added pressure potentially against growth that you're seeing from tariffs could be a more negative kind of look. I just wonder, with given everything that he just
I can
said,
only do
why is
4,500
it
on mine.
55%,
Okay, yeah.
given that he didn't really
That's okay. That's good.
Optimistic. It was 55%, including the reprieve we're currently in. So that means if you figure even.
I'd like to just
dramatically
run
down
this
to
out
60%,
right
like
now.
The president promised on the campaign trail, but something like 20, 25% and 10% tariff ring
There we
around
go.
the United States. He still thinks this can mean a recession.
It's just I gotta quit hitting the DL. I gotta quit moving my stop loss, man. That's been my disease ever since I started this whole deal. Is once a trade goes against me, I'll move my stop loss and I'll add to the position, and I just fuck myself. If I just close the position, I would be good and I'd be profitable. You know what I'm saying? It's just it's frustrating, man. I was kind of bummed yesterday. I started talking about crazy shit like astral projection, and I started talking crazy shit.
Hyatt and Wyndham. Still, Marriott cut its outlook by less than those rivals, indicating affluent travelers are less affected by economic.
I was like, man, what am I doing?
Meanwhile, Kellogg delivered first quarter.
All right, I'm gonna.
Estimates shares are down more
This
than
is gonna go. I'm gonna sit
5.5%.
right here.
Organic sales declined 5.6%.
I get filled here. That's fine.
4.1% that analysts expected. The company also cut its annual sales outlook, pointing to broader weakness amid declining demand.
Yeah.
For cereal. And air traffic controllers.
All right, I got
Newark
15 in the bank
International
now.
Airport lost radar and
All right, let me
radio
grab that other one.
communication for over a minute on April 28th due to a technology failure. Sources telling Bloomberg multiple employees were placed on trauma leave after the incident, contributing to flight delays and cancellations. The FAA is working to address the issues. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. We'll get the
All
view,
right.
the schedule, the
Sit
agenda
right
from
here
Washington,
for now.
D.C., and we'll talk about
Sit
the
at the
markets
20.
with Oksana Aronoff of J.P. Morgan from New York. This is Bloomberg.
All right, I got 15 in the bank right now. I gotta get the NQ turned on, but yeah, I just want to get this thing qualified, man. And just keep my, I don't care how long it takes to get the payout on the XFA, I just want to keep it. So you just need 1,500 on one. Okay, so this NQ's almost. Yeah, I'd like to see you get that tomorrow. SM is digging it out. He's got like a 25K on a Bullinox or something.
India's time. It's us women who are going to transform
Yeah.
India.
Dude, that'd be
I
super
really
sweet,
feel
man.
that the time for Indian women has come.
I give you a lot of
They
confidence rolling
breaking
forward.
glass ceilings, but they are redefining. You know,
I think the most I've had are 4 or 5
sports,
active at a
medicine,
time.
it's in creative arts. They are everywhere.
Like
and I have
XFAs.
so much
Not with
positive
Top Step, but
energy
with
that comes back to me when I'm talking
like
to
Lulu
Indian
or,
women. And I just think at all
Apex.
these little girls and boys, I don't want to discriminate, who are now in school going age, imagine once education, sports, we empower them. What a difference they would make not only to India but to the planet and the world. And the world needs it now than ever before.
I'm setting up the NQ now. You want to watch the NQ?
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends.
If it gets too crazy, we'll go back to the ES. I'm just letting this one run.
Global business, finance, and tech news as it happens.
Yeah, I'm trying to get better at, like, if it's too slow, go back to the NQ. You know what I mean? So we can kind of control it a little better.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and
But
analysts.
if the price
in more
action
than
gets
100 bureaus
weird,
across the
we'll
globe.
go back to the ES.
Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The opening bell is about 44 minutes away, and when their session loads, we're down by 0.9% on the S&P 500 with some morning movers for you.
I think we're past the news for the day.
One of the worst performers on the S&P 500 pre-market this morning has been Palantir, down 8.5%. It had earnings after the bell yesterday. It raised expectations. It talked about
Trade
demand for
balance.
AI. But expectations for this company were so high. The best performer on the S&P year to date, up 63%. A little bit disappointment as well that its rest of world of demand didn't live up to what the U.S. figures looked like. We also heard from Ford after the bell yesterday, another decliner in the pre-market. That is down 2%, or just a bit more than that. Ford scrapping their guidance for the year. Another automaker to do this, seeing a $1.5 billion hit to their earnings for the year. Not as bad as some others like GM. That figure was around $5 million. Jim Farley, the CEO, said that he wants to try to build more parts in the U.S., but said he has been communicating with the White House and has been very clear about the cost of the changes that will need to be made. Wrapping things up with another automaker for you, this time Tesla, down 2% in the pre-market. We got some sales figures from Europe, and they continue to look really, really poor. UK sales for last month fell 60% compared to a year ago. In the Nordics, that figure got high as 80%. That despite the fact that they had a new Model Y to put into the market, so that sending shares lower this morning, John.
Stock is down by about 2%. Danny, thank you. Appreciate it. Your calendar looks like this. Through the next 24 hours and into the weekend, counting you down to the opening bell, your trading diary. As follows, at 10 a.m. Eastern Time, Treasury Secretary Scott Bessent testifying before the House Appropriations Committee at 11:30 a.m. President Trump meeting with Canadian Prime Minister Mark Carney on Wednesday. Disney earnings, day 2 of Bessent's testimony on Capitol Hill, and a Fed rate decision and Chairman Powell news conference just around the corner as well. On Thursday, another round of claims and a Bank of England rate decision. Down in Washington, Tyler Kendall joins us now for more. Tyler, set up the day ahead for us all.
Yeah, hey, John. Well, perhaps one of the most important things on the agenda is this really high-stakes meeting between President Trump and the new Prime Minister of Canada, Mark Carney, considering that it appears very little progress has really been made when it comes to the trade talk front. And Mark Carney actually sort of lowered expectations, if you will, ahead of this meeting, saying he understands that this will be difficult but constructive talks. Of course, as you well know, the U.S. and Canada have one of the largest trading relationships in the world. New data from Census Bureau shows that they exchanged about $916 billion worth of goods last year alone. Now, Mark Carney did outline sort of his strategy going into today, saying that he wants to move away from sector-specific talks to really looking at the comprehensive deal here when it comes to tariffs, because we have to keep in mind Canada has really been hit from all angles. That 25% levy on imports excluding USMCA compliant goods, the 10% levy on energy, but then also those sector-specific tariffs that really have been critical to this administration's push when it comes to reshoring on steel and aluminum and also autos. No doubt all of this will be on the table today. But Commerce Secretary Howard Lutnick yesterday, John, when asked if he was optimistic about the future of the deal, said that it's a really complex situation and that ultimately he thinks this is going to be a fascinating conversation.
Tyler, thank you. Appreciate the update. Tyler Kendall. Down in Washington, D.C., outside of the White House, joining us now, Oksana Aronoff of J.P. Morgan. Oksana, good morning. Good to see you.
Good morning. Great to see you.
The bonds don't work. They just make things worse. Seems to be the takeaway from you and the team. Why?
No, bonds can work, but you have to know how to use them, right? And it is really important to understand the risks, and we can't just kind of go to duration as de-risking, which is what we used to do in prior cycles. And this is what we've been talking about, and I've been here talking about it for a while, which is that when inflation is alive and well, forget all the uncertainty that the administration has introduced, which has pushed up the long-term premium, but when inflation is alive and well, the Fed's hands are tied to deliver the kinds of cuts that we've seen in prior cutting cycles, even if the data softens some, which is what we're starting to see. And the Fed is really, really between the rock and a hard place, right? At what point do they get involved? They still have over $7 trillion on their balance sheet. Can someone please explain to me why that is? And what would happen if that money, if those holdings found their way to the market? So it is really important to understand what is driving that long end of the curve, because it has really been counterintuitive.
Yeah, holding through that daily loss limit, man, is just like, it's painful.
The long end actually move up. And if
Like, I don't even know why I do it. I could have got out of that trade at a minimal loss like 3 or 4 times, but I kept doing it anyway. You know what I'm saying?
There's a lot to unpack here, especially ahead of a 10-year auction today at 1 p.m. Eastern.
It's like my demon now.
Do you discount the inflation that we are currently seeing as, and I don't want to say this, but I'm going to say this, transitory, since there is going to be some sort of deceleration in growth and a weakening in the overall economy that's going to pressure things on the other side?
Is there a way to adjust like the zoom on this?
Tariffs, and there is a difference of opinion there, right? So some people think it will not be inflationary because of what, Lisa, you're referring to, the slowing effects to the economy. Some people think it'll be a one-time shock. We actually believe that anytime inflation is in the conversation and tariffs are in the conversation, what is happening right now? Prices are going up, and manufacturers are still eating through the inventory that they have. They're not even really buying yet in large scale at these higher prices, right?
Maybe
They're
that's
already
better. anticipating
that prices are going up. And so is it kind of a snowball effect?
You went, oh, you missed the run up. Friggin' dog poop, man.
To give you a very simple example.
No, it's a pullback, dude. It's just a pullback. I still have one contract on. It's not to my break even yet. So if we run down, I'm going to add to it. So I'm thinking this is a pullback. I'm waiting for the stochastics to roll over. I'm on the ES. It's just a little bounce off this trend line, you know, standard pullback, and looking like maybe we roll over again.
Inflation is going to continue to be at best sticky, at worst starting to head up. And I think that the conversation will increasingly move towards, is this a stagflation? How do we navigate this? And I think investors really, at the end of the day, the answer is never like, oh, we can't, just lay down and kind of nothing works. We are in the business of anticipating various scenarios, positioning portfolios for them, and the idea is to diversify sources of returns. So you're not just relying on duration and falling interest rates, because zero rates are not walking through that door probably ever again, or not for a really long time, or possibly not in our lifetime.
When you look at the inflation outlook, though, so you're thinking it's more than just a one-time price fix. How much higher do you think we could actually see prices go?
So again, definitely not in the camp that we're going to see, a 9% type peak or a 7% type peak.
Right.
But I think it's really important to recognize that even if inflation is stuck in that 3% range,
36
right,
seconds
let's
till the
think
next
back
candle.
to the late 90s, and we've been pointing to that as kind of, for several years now.
Where's
So
everybody now that I
inflation-
got a good trade going?
Inflation was kind of circling around that 3% mark. Slightly
Everybody
below
seems to be
3%,
here
but
when
the
I'm
Fed's
when
been
I'm
too
doing
tight.
the
They maintained, Fed funds
full
rate between
retard
4.5% and 5.5% or something like that.
hold to the
And
DLL,
in that
even though I know
sort of
it's not never
chart
going to reverse.
where it's just really, really hard to get it down to 2%.
You're in a
it's
short on the
that
NQ?
a
Yeah,
really,
I'm still short
really
ES.
deep recession.
I'm waiting for I'm going to add to it as soon as I see the stochastic start to roll.
As you know, through much of April, it was difficult to find diversification between.
As soon as we start to roll. Oh, NQ is starting to roll. I'm going to give it a little more bendy bend, and I'll probably add.
How difficult is it to find diversification within the asset class, within bonds? And what advice are you offering people right now?
So that's a really interesting point, because when you look within the fixed income market, everything is highly correlated. So 5 years ago, your portfolio of different parts of fixed income had a correlation of 0.5 sort of within itself across the different things in there. Currently, that correlation is 0.9, above 0.9. So diversification is very hard to find. But April was a really exciting month, because if you are an investor with optionality, which is liquidity, we were working really hard and we're finding interesting things to do. Price really matters, because let's face it, bonds are not about price appreciation typically, right? Your high quality bonds are about
I got to reconcile my sales for last month. I had some cancellations that I think I can get back.
To actually benefit from price moves, they're just probably not at that 10-year part of the curve, because
So this is where I make my mistake, is I'm trying to get the continuation, the pullback and continuation lower, and then I'll get in the trade and I'll hold it too long.
Really engineer that diversification, which is really lacking in the markets within fixed income, between fixed income and
I'm
equities.
okay now because I've been in it for so long and I've already got
Helicopter into
profit,
areas of
but
vol, which are plentiful and will continue to be plentiful. Take advantage of that.
Nice going into moments like April when you've got cash already. Not many people did. Oksana, thank you.
Thank you.
if it doesn't hold to 50, then it's gonna be a rough one.
Market yields lower this morning, Lisa, particularly the front end of the curve. The 2-year down by 4 basis points as that 2-day Fed meeting gets underway.
You asked the right question. What does diversification mean? How do you do it within specific asset classes? And for a lot of people, it's been go out, buy a gold necklace, buy a gold ring, buy just gold, buy gold
bars
futures.
of gold from Costco.
From Costco?
Something
You did
like
that, right?
I have not done that.
You've done that in a suitcase.
Stop
when you
trying to
see
give people
John.
the impression that I'm carrying gold. That's a security issue.
When you see him in the airport, full of gold bars.
No gold. Coming up tomorrow, Julian Emanuel of Evercore, Prime Minister of JP Morgan, former Kansas City Fed President Thomas Hoenig, Tom Porcelli of PGIM. From New York City, thank you for choosing Bloomberg TV. For our audience worldwide, this was Bloomberg Surveillance.
All right, we're overbought. Now let's roll over.
Everything you need to get the edge at the end.
Roll over, roll over.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers. You're watching the close.
Get ahead of tomorrow's trading.
Problem is look, we got the EMAs about to cross for the long, and we're in a short. See, this is what I was talking about. I wanted to front run the EMA cross, and I'm rolling against it right now. And it's a very steep too. Look how steep it is. Yeah, I know. That's what I'm saying. It's a reverse. That's what I'm saying. See, this is what I did yesterday. Is I fucked up, and I'm short when I should be front running the long. I should have been completely out of this trade, even though I kept one.
All of a sudden, you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative.
So we should be talking about where to get in for the long, but
focus on working on that and delivering against.
I'm going to get out of this thing.
Pivoted to profitability. The world of what you can work on is a little bit.
As soon as I
open,
get back to
and there's a lot of
even on
different
this
ideas,
one.
and it requires more focus than ever to make sure that you are prioritizing.
But this is where I fucked up yesterday. I'd be short right here and I'd be adding to it.
In a booming sector gives them the luxury to play the long.
But you never know. This could reject. This still could reject. But you don't want to hold it too long. You know what I'm saying?
And where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased.
We're perfect for the rollover.
because we're growing our revenue so much.
Let's
we
see
wanna
what
grow
this
our
next
revenue
candle
into our
looks
existing
like.
cost structure, and there's no need
If
to
we
raise
roll
our
over,
costs
man,
more
this is a money trade, but
with what we allow
this
our
is the
customers.
dangerous part. This is the dangerous part. See, if you front ran the long, you'd be in like at the, you probably would have been in down here and you'd be looking good on the long, you know, and you could be at break even with no risk. Instead, we're taking heat on the short when it looks like it's going to go long. You know what I'm saying?
Has been focused on how can you elicit intelligence from brain cells in a picture.
If that makes sense. But that's the whole rule I wrote down yesterday, is I wasn't going to do this again. I'm okay now. All right, come on, let's just roll over, and I'll never do it again. I should have been completely out of this trade instead of holding the one.
You'll want to watch Primer because details matter. Lasers on. So do lasers.
There we go.
Oh, and it's on all these lovely
Are you still
channels.
short?
Hope you're jotting this down.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
So yes, I say yes. Nah.
Is over and futures are down 30 minutes until the start of
Oh, you got stopped out?
I'm Matt Miller.
Yeah, because you let yourself get stopped out because you're smart. Me, I'm gonna add and then hold it. Yeah, no, I'm already tight. I'm tightened right up. No, I'm tightened right up. I can't really get hurt, but I shouldn't even be in it.
Wall Street's winning streak comes to an end, and attention shifts to the Fed. Plus, earnings drag. Ford and Mattel join the growing list of companies warning of the impact of Trump's.
See, now we got the cross.
Treasury Secretary Scott Bessent heads to Capitol Hill to defend the president's fiscal agenda.
Let's see if we reject.
Watch on the earnings front, you have Palantir raising its revenue forecast, but Wall Street had very high expectations. More on that in a moment, but Matt, you can see.
But this is what I'm talking about right here. It's like we have the clear signal. It's just, are you going to get greedy and try and go too far in one direction and not follow the chart, you know?
More than $1 billion. Here's the CEO, Jim Farley, on the call last night.
Based on what we know now, our expectations
There we go.
of certain details will resolve around tariffs.
See, right now, if you went long at the 20, if you went long down here front running it, you'd be at your break even and you'd be okay. You're not hurt. You know what I'm saying?
Of 1.5 billion.
Let's discuss with Bloomberg's Global Autos editor Craig Trudeau.
Or maybe you add a contract to the long and you just make sure it doesn't go against you.
But they're going to bring some parts.
Instead, right now, I'm still in this with one. I'm break even on my one I'm break even at my one contract right now.
Yeah, that's right, Matt. And I
Hoping
I
it goes lower.
Sort of parse what exactly
And the
that
50
means
turns
in
into
terms of How
resistance.
they're going to mitigate things here, but I think it speaks volume. This idea that $2.5 billion hit to a company that of the vehicles that it sells in the U.S., about 80 of those are made in the U.S. So even in a position where you're outproducing the rest of the industry, the number two in the U.S. In terms of local production.
Oh,
Jim
green
Farley
again.
talked about last night, outproducing them by about 300,000 units. Even still in that position, because of the parts tariffs, this is going to have a substantial impact even for a company like Ford.
Yeah, it looks like Ford's set to wipe out its year-to-date gains at the opening bell. Let's talk about another car company. I want to talk specifically about Tesla because they rolled out this.
Hey, Snooze, how you doing?
Model Y, its most popular model. But you saw in Europe that sales absolutely plummeted. Craig, what do we know there?
Yeah, I think
I'm trying to redeem myself from yesterday's.
Take the steep declines that we saw in the first quarter for Tesla.
Yesterday's disaster. I'm on the ES. Hold on.
The expectation was that a substantial portion of that was this changeover to the Model Y, where you had
This is the same trade I've been in for. I've been in this trade for about 30 minutes.
Changing over to this redesigned vehicle.
Really?
And that's going to inevitably lead to disruption. That's commonplace for all sorts of manufacturers.
That's unusual.
For Tesla, this is
I've heard they're usually really on top of things over there.
This is not just a changeover issue. This is potentially a major issue in terms of Elon Musk, sort of hurting his biggest and most important company.
So I got into this trade up here on this,
of alienating a lot of would-be
on this like bear flag.
where, we've seen
And I took 5 contracts out down here, and I let this one run back, and now
Tesla has not been able to take advantage of
I'm
that.
trying to
Instead,
get
they're losing
in.
quite a bit of ground.
I'm hoping it rolls over and we head out. That's it. I'm out.
Let's go back to Palantir because this is an interesting one. The firm actually raised its
I'm out.
2025 revenue forecast, but Wall Street isn't impressed. You can see that in shares in the pre-market. Bloomberg
Here's
Technologies'
the NQ
Caroline Hyde
today.
is here with the details. Caroline, the company described ravenous demand for their AI
ravenous
products.
whirlwind.
It's not translating into the shares.
I mean, Dr. Karp has fruity language. He does it best.
So from here, I mean that,
You saw profitability adjusted EBITDA coming in like up 69%.
you're gonna, it looks like we're gonna go long. If you're gonna front run the long, now would be the entry. You got this little roll down that may happen, but I just got taken out. All right, I gotta go. I'll be back in a couple minutes. Oh, there's no news. The news is already in. So we're just waiting for the open. Trade deficit, trade balance was the only thing that came in at 8:30.
US is growing great guns. We're seeing
Shit, this is going my way. I got taken right out before.
71% year-on-year growth. We see resilient government spending as well.
This is feeling like kind of a short, isn't it?
The pullback, but no, they seem very well aligned.
And I was in it.
It's the international catalyst. That's what's missing, and people wondering, okay, how do they really grow into this valuation number right now?
Let's talk a little bit about, speaking of ravenous demand for AI, OpenAI, and their plan to shift to a for-profit structure. They're walking that back, and Microsoft is not on board with it.
Yeah, I'm only trading the cross today. Yeah, I'm only trading the cross. I traded this one because it was so obvious. It was already 4 candles into it. It was an obvious bear flag. Look at that. It took me out before it went back my way.
They were recompensing the charitable arm, the not-for-profit. They'd also had a big argument coming from Elon Musk, which co-founded the business back in a decade ago, walked away, now has his own rival, and many would say,
all right, I'll be back.
Doing this to slow us down, all the courts and all of the...
No, I didn't move the stops. That's why I got taken out. I'm not moving the stops today. I was already crying to Shades about it.
When it's thoughtful about doing all of this for humanity,
I was getting like all esoteric yesterday. All right, maybe just a little. Okay, just maybe a few ticks. All right, I'll be right back. I'll be back for the open.
Remember, they had a capped profit model that goes, so now they can keep on growing and they can hand back more money to private investors. SoftBank is in board. That's really important because they're, of course, the ones that still have about $30 billion to give in that recent mighty fundraise that valued the company OpenAI at $300 billion.
Yeah, one of the most valuable private companies out there. Some fascinating palace intrigue to go along with that. That is Bloomberg's Caroline Hyde. And you can catch her on Bloomberg Technology later today when the CEO of IBM joins the show. Looking forward to that one. But it's day 2 of the Milken Conference in Beverly Hills. And so far, investors are saying that they can live with tariffs and a reworking of trade, but they want progress soon.
What the administration wants to do, in my opinion, is not wrong.
He, I think, did the right thing in pausing tariffs, reciprocal tariffs for 90 days. And I think the next step probably should be, I call it a 180-day pause, take down the China tariffs.
You can sort of see the administration walking back some of the more novel ideas they've come up with.
I see us moving from what was hyper-exceptionalism to merely exceptional, because I don't think there are good alternatives to the U.S. today, but that can change over time.
To quote Queen Elizabeth, just stay calm and carry on.
The level of engagement everywhere around the world is absolutely tremendous. It's about scenarios right now. It will turn into action further down the year.
Sonali Basak is there in Beverly Hills. So, Sonali, who do we have lined up for today?
Another all-star lineup for you, Matt. We do have a lot of titans of private capital today. For example, Mark Lipschultz, the CEO, co-CEO of Blue Owl. We will be speaking to John Gray as well, the COO of Blackstone. Mark Jenkins, the head of credit at Carlyle. Later, we'll also be talking to, in the 12 o'clock hour, Todd Boehly, as well as Katie Koch, the CEO of TCW. Todd Boehly is actually a pretty interesting one today, guys, because that movie tariff that you're seeing from the administration, he's actually a backer of a major film studio, A24, behind some major films, including Civil War and Everything Everywhere All at Once. So we'll be hearing a billionaire's perspective of targeted tariffs that will directly impacting portfolio companies. Of course, I don't know if you caught it yesterday, Scott Bessent, the Treasury Secretary, spoke to the idea of private credit and just how much activity has been moving outside of the banking system under the weight of regulation into the arms of private credit. Now, we have seen a wide range of opinions here about the state of the economy and the underlying performance of these assets. Some say everything's going to be fine, but of course, there are cracks forming. We've seen it. We'll be talking to people a lot about what they're seeing.
All right, Shonali, looking forward to that lineup. You can catch Shonali all day in Beverly Hills at the Milken Conference, and we'll be back with her later this hour. Meanwhile, let's get a check on futures right now because it's another day of red on the screen. You can see the S&P 500 down about 0.9%, and it's big tech that's leading it, down about 1.2% on the NASDAQ 100. Small caps also getting caught up in the sell-off as well. It's interesting to see what the next catalyst will be, Matt Miller. Maybe it's Fed Day tomorrow.
Well, and it could be Bessent as well today. It's not that long ago that any talk of trade moved this market, right? And now we've grown a little bit numb to it, I think.
Yeah.
But we'll pay very close attention to what he says on Capitol Hill. Also, close attention to what's going on in Germany. Friedrich Merz is taking another shot at securing Parliament's backing as chancellor after a jaw-dropping miss this morning. The Germans are at peak Germanness right now. This is Bloomberg Open Interest.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The President of the United States does say he wants to keep a more mutually beneficial trade balance with these countries. What does a country like Egypt and Kenya and some of these others have to provide that won't completely dent their own GDP?
No, it's tough. I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China. In 2023, it's something like $40 billion. And whatever the tariff rate ends up being on China, it's going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
getting out of high interest. Look at what's making headlines around the world. Teflon Barbie, she is not. Mattel is withdrawing its forecast for a return to sales growth in 2025, citing President Trump's plan to impose tariffs on imported toys. Just 3 months ago, the toy maker had predicted sales of Barbie and Hot Wheels cars would grow as much as 3% this year, but Mattel plans on increasing prices on some toys and diversifying its supply chain to offset the potential impact of tariffs. The decision to withdraw guidance casts a shadow on what was otherwise an upbeat first quarter. And the European Union plans to hit over $100 billion worth of U.S. goods with additional tariffs in case ongoing trade talks fail to yield a satisfactory result for the bloc. The proposed retaliatory measure would be shared with member states as early as tomorrow, and consultations will last for a month before the list is finalized. Negotiations between the EU and the U.S. began last month, but little progress has been made, and the expectation is that the bulk of the American tariffs will remain in place. And in just a few minutes, Germany's Friedrich Merz will make another attempt to secure parliamentary backing as the country's next chancellor after his humiliating shock loss in an initial vote. Merz fell 6 votes short in a vote earlier today that had been expected to be just a formality. His failure to secure the chancellor's seat in the first round of voting was really unprecedented and an unexpected twist that now pitches Europe's biggest economy into uncharted territory. Let's bring in Bloomberg's Oliver Cook standing by in the Hauptstadt. Oliver, does it look like Merz can get it over the line in a new vote that's scheduled for just about 5 minutes' time from now?
Listen, Matt, it looked like he could get it over the line the first time around, and it didn't happen, and it absolutely shocked everybody. I mean, everybody that you spoke to about this, everything you read about it, all the preparations that everybody made, basically saw this as a rubber stamping this morning, the first step in sort of a series of steps that would lead to the end of the Olaf Scholz chancellery, handing over the power today from Olaf Scholz to Friedrich Merz, and that is not at all what happened. This was a complete shock to everybody who was observing it, to such a degree, Matt, that really people didn't even know what the next step, what the procedures would be. They literally had to take out the Constitution to consult it, to look at Article 63, to figure out what to do next, because this has not happened in modern German history. And we should just say that this was a government that was supposed to take Germany out of the political turmoil that it's been living over the last 3 or so years with that sort of three-way coalition that really didn't see eye to eye on a number of issues. This was supposed to usher in an era of stability, the Grand Coalition, the CDU, the SPD, a very comfortable political arrangement, generally speaking, within Germany, and that failed. And it just speaks to how conflicted the German political order is right now, and actually how weak this coalition is going forward, and how weak potentially also Friedrich Merz is himself a candidate. We expect the voting to start basically right now. If he fails again, Matt, that would be a major blow. There will be some serious questions about whether or not he is going to be Chancellor of Germany.
Well, let's say that he succeeds. If he does, I mean, given that we had this episode, as Matt called it, a humiliating loss, does this weaken his position?
I think it absolutely weakens his position. I mean, again, there was already questions about whether or not he was going to be the right man to lead the CDU into this election. There were some real doubts about that. He's not the most sort of charismatic leader. There's a lot of doubts about his ability to sort of get things done and really rally and unite Germany, which is also very politically fragmented. You're seeing a lot of the same rhetoric that you saw out of the United States in the lead up to the U.S. election, where you have the AfD, the far-right party here in Germany, that over the last couple of weeks has actually been polling #1 in Germany, and their pitch to the German population has been basically that the mainstream political system within Germany is broken, it is ineffective, they cannot get things done. And they will see this today as another example of exactly that. And I think it will also bring into question about how effective this government can be going forward in terms of deploying that debt-fueled sort of fiscal stimulus, that €1 trillion worth of fiscal stimulus that they've basically okayed on infrastructure and defense spending. There's going to be some real questions about how quickly that can get out the door. The idea was to get a chancellor into the office, get him in quickly, and hit the ground running. He didn't even hit the ground today.
Oliver, what happens if Merz fails to secure the amount of votes that he needs? I mean, he has been trying to get into the chancellor's chair for at least 20 years, right? And he's always sort of come short. He lost out to Angela Merkel for decades. Maybe the country and the parliament is behind these policies, but not Merz as a chancellor. Is there anybody else who could step up?
Well, listen, this is going to be potentially an active question. I mean, we heard from some of the lawmakers in the outcome of the vote right afterwards. We should say the moment that they announced the outcome of the vote, you saw Olaf Scholz's jaw literally drop, shaking his head. You had Alice Weidel, the head of the AfD, the far right, basically started laughing, erupted in laughter within the chamber. And we heard from a number of lawmakers, other ones from the sort of far left of the political spectrum, Die Linke, the left party, saying that basically if Friedrich Merz cannot even get the Berlin bubble to heal, get them together, how on earth is he going to unite the country? And maybe he's not the right person to do it. So listen, Matt, I think that we are sort of asking a legitimate question. I do still think that the base case is that Friedrich Merz will be able to make it through as chancellor. But again, in a world of sort of non-zero chances in sort of politics across the world, really materializing against the odds, we'll have to see what happens over the next couple of minutes as the lawmakers right now in Germany, as we speak, are voting on potentially bringing in their next chancellor. Let's see if it happens.
All right, Oliver, thanks very much. We're going to continue to cover this. Obviously, this vote going to take place during this hour, and there's a good chance that we'll get the vote before the end of 9 o'clock.
And to that point, you can follow along the vote in real time by going to LiveGo on your Bloomberg terminal. But coming up, we'll go back to the U.S. equity market because under 12 minutes before those bells ring, we'll start today's trading day with JP Morgan's Sitara Sundar. This is Open Interest.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Investors looking for safety should avoid U.S. equities and the dollar. That's according to strategists over at JP Morgan. They say that concentration risk in U.S. equities is, quote, extreme, and there is significant overvaluation. Sitara Sundar is JP Morgan Private Bank Head of Alternative Investment Strategy. And let's start there, because I imagine you're fielding a lot of questions from clients about where are we, where should we be putting money to work? How are you viewing the U.S. right now?
Look, I think that it's first, thank you so much for having me. I love being on. Look, I think that it's fair to say that some of the shine of U.S. exceptionalism that we and the entire street were expecting coming into this year has dulled a bit. I do think that it's important to note, however, that there are still, we just are in the middle or towards the end of Q1 earnings season. Earnings have come in strong. We're tracking at about 12, 13%. Obviously important to acknowledge that a lot has changed since 1Q. But tech companies have been doing okay. And the biggest thing that we've seen for us, from our perspective, is that we're seeing breadth from an earnings perspective. Healthcare is among the top of the leaderboard, financials too. So when we think about that entire mosaic of what's going on with trade policy, what's going on with fiscal policy, what's going on in terms of the policy priority shift that we've seen so far this year, we still think that there are opportunities within the U.S., but it's extremely important to be selective within that, because we're going to see volatility at the headline level like we've already seen so far this year. And the biggest thing for us is we also do agree. We've always said that global diversification is extremely important, but not all of our clients have that type of exposure. So what we've been telling folks to do is maintain your U.S. exposure. Perhaps if you've been leaning in a very meaningful overweight, taking some chips off the table and going towards more non-U.S. markets, Europe and Japan are at the top of the list.
But it seems like you're struggling with the same kind of soft data turning to hard data issue that the Fed is, in a sense, right? Earnings are hard data, but earnings were very good. I mean, 12 to 13% is incredible growth in Q1. How much of that was pulled forward, and how concerned are you about, growth contractions in 2 quarters? We heard that from Mark Rowan yesterday of Apollo.
So it's really interesting because 1Q came in better than feared, but what we've also seen is 2025 and 2026 earnings growth expectations coming down a bit. Now, not more than what we've seen in terms of historical averages, but still coming down. But our base case is still for moderate economic growth that's going to support above average earnings growth moving forward, both in 25 and 26. A recession is still not our base case. So what we're telling clients to do in this period of time right now, we have to acknowledge and have some humility as equity investors, the same way that you see companies either not putting out guidance or putting out different scenarios. We're also probability weighting scenarios when we're advising clients where to put that incremental dollar to work. And when we look at that entire mosaic, we're still constructive, but it's extremely important to be selective, and portfolio resilience is key. Within the United States, there's a big tech overweight that many of our clients have, adding to quality defensive, adding to quality dividend-paying stocks that are still trading at a meaningful discount to the index level. And international diversification gives you different return drivers within your portfolio and different access to a different pocket of growth, because when you think about investing for the long run, you want to have parts of your portfolio that are moving in different ways, given the amount of uncertainty that is out there, because I 100% agree. The near-term outlook is a little bit cloudier, but when we're thinking about long-term expectations, we're using the type of volatility to lean into areas that have been on our watch list and using that volatility to take advantage.
Well, Sitara, hold that thought. You're sticking with us through the opening bell. We're just a couple minutes away, and here's your setup as we count down. The S&P 500 nursing a second day of losses, if these pre-market losses hold, down about almost 1% before the bell. You can see that big tech is really leading those losses, with the NASDAQ 100 down about 1.3%. Small caps also getting caught up in the sell-off. We'll walk you through all of the opening action next. This is Open Interest.
First time, got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, and we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi.
Right.
And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley and LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading on what looks set to start as a down day. I'm Matt Miller. This is Bloomberg Open Interest. Futures off by 1% on the S&P after we closed down yesterday, ending a 9-day winning streak, the longest streak we've seen in 21 years.
All right, I'm back. Let's see here. Oh, we just hit the open.
Stock Exchange, you're going to see the NCAA Women's Basketball National Championship.
So we're just looking for the EMA cross today. That's all I'm hunting for. We're not hunting for the pullbacks. I got a nice little trade this morning. Right in this little bend, I got that short. I got tapped out on the ES before this last one.
Katie, what stocks are you watching
today
unrelated to the holiday?
I'm still keeping an eye on Palantir because
You're damned if you do and you're damned if you don't when you move your stop loss. If you got it too tight, you get taken out before the move. You move it too far away, and then it reverses on you. Wham, 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 all the way home. All right. So we're going to keep an eye on the NQ today. Everything's been running slower. Yes, I know. I know. No, only into profit. Yes, we're only moving it to take profit, not away from the profit. Yes, News. I promise. That's what I'm doing. And we're only going to front run. We're only going to front run the EMA crosses and see how we do. Not into the darkness. That's right. Not into the abyss. We're not going into the astral projection abyss. We're only going to the light, to the green light. Not the one in the tunnel, but the green light. All right, let me get this up. Super Dom. Okay. All right, everything's ready. So this is a pretty strong little pullback here. So we're watching both the ES and NQ.
and this is interesting because
I've got the NQ chart up today. Price action's pretty smooth. I heard when you go to the light in the tunnel that it's for you. Supposed to watch. That's for you to walk. Suppose instead of walking to the yes. That's right. I think that's what they say. All right, so we got a big move up here at the open. So here, see, like right here, this is the EMA cross we're hunting, but you don't want to do it during the open, during volatility. Price action is way too crazy right now. I'm watching the DOM and it's moving 5 points in the blink of an eye up and down.
offsetting about $1 billion of that, and I had to read this a few times in your story, Keith. By
So let's
using
see
so-called
what we
bonded
got for news.
transportation to shield parts from levies as they cross international borders. What does that mean? It doesn't even sound legal.
It doesn't, does it? Well, you've heard the story about car
All right, I got to turn my lead box
the
on.
Canadian, Mexican, U.S. borders several times as they're being built because so many different parts come from so many different places. They have found a form of transit that allows those back and forth movements to be untariffed. So that saves them some money. You know, the other way, Matt, they're going to save money, according to the analysts, is good old-fashioned price increases.
All right, Keith, really appreciate your reporting. That is Bloomberg's Keith Naughton. I will point out that Ford
All
shares
right.
actually inching back to unchanged.
Let me move the
right now.
news down
Had been
to the
down
NQ.
over 2% in the pre-market. It'll be fascinating to see how they settle up today. But
And they're up year to date
yes.
as the broader index is down.
Yeah, exactly. So they've actually done okay in this environment, especially relative to some of their peers. But let's broaden out this conversation.
All right.
Because still with us,
So really, U.S. Treasury Secretary Bassett testifies. Is that going to be on the White House?
Think about this market. It feels like trade policy, tariffs,
We might want to listen to that.
It touches every single industry. But is there anywhere to hide right now? Is there anywhere that is really sort of insulated from some of the headwinds that we keep talking about?
So I think that it's difficult to say that because we don't know what the future policy in terms of like trade, fiscal, the confluence of different factors are going to be in the future. I think it's difficult to say that there's going to be one specific place to hide. However, I do think we were talking about this a little bit earlier that there are ways in terms of how we're advising clients.
So we're clear news. We just gotta wait for the open. See right here, you see the CMA cross? That's what we're trying to front run today.
So what does that mean?
So
Portfolio resilience front, it's the international diversification point. It's the diversification within U.S. equity markets.
like right there, that's going to be the trade. But it's just so crazy you can't get in now.
And especially within the tech side, leaning a little bit more into software versus
Taking
sectors where the tariffs,
a trade right after the open is like walking into the darkness.
that we've seen a shift, or what we perceive to be a shift from the hardware to the agency side and the application software side. So building resilience that way. But even when we think about the private markets and advising our clients, infrastructure is an area that we've been leaning into pretty heavily, honestly, for the bulk of this year and last year as well, because you have two different things. One, from a resiliency perspective, infrastructure tends to be pretty durable over time. You have inflation protection that is embedded within these really long-term contracts. And then two, when you think about these secular trends like artificial intelligence and the amount of money that is likely going to be inputted and invested into the energy infrastructure, digital infrastructure, and power part of the ecosystem, which is now 60% of global infrastructure, you have a secular tailwind, which I guess is maybe
Okay, so look at this. EMA cross.
into secular and cycle agnostic opportunities versus those areas that are a lot more cyclical in nature, where you're seeing companies pulling guidance because the uncertainty in that part of the market is a lot more high than in secular parts of the market.
How much size do you have access
Yeah, no, I'm not gonna do it. I'm not gonna do it. Yeah, well, you can't. Well, the rule, we're gonna follow the rules. The rule is you don't trade till the trade box turns on. The trade box doesn't turn on till 10:15. So we're gonna follow all the rules. We're gonna follow all the rules.
But our clients aren't there. Our clients have been meaningfully underweight non-U.S. markets, which, by the way, for the past decade was the right place to be and where we were advising folks to go, to be overweight the United States.
You're gambling.
Portfolios are not just overweight the United States, they are
Shades is in on it. Shades front running that long all the way to the VWAP.
on adding to European equity exposure, adding to Japan exposure.
Shades has got one account half qualified this morning.
Meaningful discount, not just
Picked up another combine. He's working on that right now.
which we can get into as to why that valuation discount is there, but even trading below their historical discount. So there's some multiple expansion that we expect to
I got to
see.
reconcile my sales list. Oh, hey, chart. Let's see what you got.
This delta performance between U.S. and non-U.S.
Pulling it up.
over the past decade was the U.S. exceptionalism and the earnings and the mega cap tech companies being domiciled here.
Okay.
But
I like it.
Expecting to see that earnings growth differential even in the next 2 years, 2025 and 2026.
Trend line down.
To compress.
Do I have that trend line?
Expansion story and
Not
a
really.
secular growth earnings story as well.
Well, forgive my phrasing, but are clients buying?
So we're almost to it.
Talking about the European, the rest of world outperformance for months now.
We might have hit it already right here.
Skepticism out there as to
So you think we reject down and then that's the real move? Well, that could be the reversal, the 950 reversal, because we always move in one direction right at the open, then it kind of reverses and settles in. So that could be, we could be running up to that and then we could be grinding down. Because I think we start grinding down from here. Yeah, I think long term, I think we're grinding down from here long term.
And I hear what you're saying when it comes to position.
All right, Snooze says we're.
Valuation and earnings growth, but it just
Yeah.
feels like still there.
Yeah, take time. I agree.
Dip outside your home
Just look at what's going on in the
That's a pretty clean chart.
It's not confidence inspiring, is it?
So I'll tell you this. Having been in this space for some time, the pushback to non-U.S. investing has been pervasive and it's been there.
Are you in this long, Shades?
10 years, folks have been right to not do it in a meaningful
We're
way.
waiting. Are you in the long?
The dynamics that we've seen within the U.S. when you think about what's happening with the dollar, what's happening with fiscal concerns, what's happening with policy-related uncertainty and speculation, and even what
Oh, you're crushing it then, dude.
the U.S. trading like an emerging market.
Tighten up, man.
asset in certain periods of time has
ES is on the VWAP now, so there might be some resistance here. ES is all over the VWAP, so be careful.
diversification story is a big one too, and people are trying to diversify their assets outside of the U.S.
Starting to roll over. ES, all kinds of resistance. I'd pull up a little tight. That might be we might be at the reversal.
But do U.S. investment banks really have access to private credit in India or private credit in Asia, private credit in Eastern Europe?
Look, I think the opportunity set and the vehicles are expanding across the board when you think about investing within private markets globally. But the biggest thing that I'll mention here is this, which is one of the biggest reasons why we talk about private markets. It's not just the secular growth opportunities that are there, not just within the U.S., but broadly, but also we're seeing a trend in the environment right now where there are more and more companies that are staying private for longer. And you've seen that a little bit in terms of the muted deal-making activity. There was a expectation for a resurgence of deal-making activity when you think about M&A and IPO activity coming into this year, that post-Liberation Day and post the uncertainty that we've seen in tariff and trade policy, that has become a lot more muted. But that idea of a majority of the companies within the United States being private, and therefore you want to make sure that you have access to the real economy at the end of the day, and private markets is a big way for our clients to be able to do that. That story exists within Europe and Japan as well, and like the APAC region, where a majority of the companies, even in those areas, not just staying private for longer, but a majority of the
Did you tighten up, Shades?
are private. So when we think about portfolio resilience over the long run, ensuring that you have access to the actual return and earnings drivers across the board is going to be extremely important, and you need access to publics and privates to be able to do that.
All right, Sitara, we have to continue this conversation soon. Really great to see you. That is Sitara Sundar of JP Morgan. Meanwhile, we have some other movers on our radar because DoorDash is buying British delivery company Deliveroo, as well as U.S. restaurant hotel reservation company 7Rooms. You can see shares down almost 8% or so as traders digest some of the price tags there. Mattel, this is a really interesting one. It actually pulled its 2025 forecast, citing tariff impact on toys. You can see shares managing to rise just a little bit after the opening bell, up 0.7%. And then AMD pushing forward. AMD reports after the close, giving us an update on the AI chip race. You can see shares down about 2% right now, Matt. I'll note that they're down about 18% so far in 2025, underperforming the stock. So a really pivotal moment for AMD.
All right, coming up, we are going to be live from the Milken Global Conference in Beverly Hills. Again, this time joined by Blue Owl co-CEO Mark Lipschultz. And happening right now, German lawmakers are voting again on the next chancellor, hours after Friedrich Merz didn't get enough votes in the first round. You can continue to follow the vote in real time by going to Live Go on your terminal. You can see those Germans casting their votes in a secret ballot. This is Open Interest.
Hey, I'm working leads, guys. So, hey, Shades, tighten up on that if you're not already out. I think we start to roll over from here, maybe. But anyway, I got leads. I'm working leads. So we're just waiting for the trade box to turn on. And then we're hunting the EMA cross. So, like, maybe the first one, if this rolls over, maybe we'll hunt the short on the if the EMAs look like they start to, you know, they have a good slope, you know, an intersection angle. That's going to be our trades for today. We're rolling over on the stochastics. As long as the price action is reasonable, I'm going to stay on the NQ today. If it starts like jumping around more than like 2 or 3 within a blink of an eye, I'm going to switch back to the ES. So we're going to keep an eye on that. But all right, I got to clean up some of these leads. Let me know if you guys see anything.
You have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
I'm Shonali Bassick, and this is Bloomberg Open Interest. I'm here at the Milken Institute Global Conference in Beverly Hills. Joining me now, Mark Lipschultz, Blue Owl co-CEO and co-founder. And it's an interesting time to talk to you, Mark, because you heard it from the Treasury Secretary. He's got his eyes on private credit. More activity has moved out of the banking system into firms like yours. What did you make of his remarks?
Well, it's great to be, I couldn't be in a better place than with you at Milken, and what incredible people here talking. You know, I think the role of private credit, which is acknowledged in those remarks, is a good one for the economy. Of course, we want a healthy banking system, and you and I have talked about this. We're happy to have the banks in the market and be active, but private credit has clearly proven its mettle and proven its worth. We are a big part of stabilizing available capital in the marketplace, and you can see it over the last 5 years. Every time there's been a meaningful disruption, and the public markets, even this last month, right? We had syndicated markets go for the longest time.
Okay, so we're coming up on the EMA cross here.
To that end, it's interesting. A few days ago,
Okay, Shades.
when I asked if there are restructuring opportunities, will you step in?
Dude. Well, you're still good on the other account. We'll work on that one tomorrow. But all right, have a good day, man. We'll talk to you later. So this is the EMA cross about to happen. It's still choppy. I don't think I don't like how this is going. But that's kind of what we're looking for, is to front run that. But not this early. We're in our no trade zone, but this is the trade idea for today. So we're just going to let this play out and see if it comes back and develops again. You know, after the 10 o'clock time frame.
From a Blue Owl point of view, sort of why we exist, which is to deliver for investors. investors results that are stable, predictable, protected from that kind of storm.
What type of storm do you expect?
You know, look, sitting here today, trying to be bottoms up and data driven, at this point, things are still going well. Our companies are still performing well. Now, we're a very domestically focused firm. So I always like to acknowledge, one's perspective obviously influences, the view. And so from where we sit, we have most software is a big part of our business. Software doesn't have a supply chain. We have insurance services. We have business services. We have healthcare services. And so these are really domestic-oriented businesses that are less impacted by the sort of vicissitudes, magnitudes, timing of every trade deal. Now, of course, the global economy affects our business. But sitting here today, companies are really healthy. I looked last quarter, and on average, the EBITDA growth in our portfolio was higher last quarter than the quarter before.
So let's talk more about the potential impact here of tariffs, because over and over you're seeing one CEO after another say, okay, we're getting a clearer picture generally that tariffs will be higher, that they might be lower than those initial Liberation Day shocks that we saw to the system. Where do you think this ends up? How do you plan for it? And do you like it?
So I'm hopeful that we will see some trade deals. And I don't think it's overly optimistic to say soon. And of course, we heard that from the Treasury Secretary and other officials from the administration. There's clearly a lot of dialogue going on. And I think some early trade opportunities with Korea or with India would be really significant to advancing us down this next phase of the post-Liberation Day resolution.
So it's interesting because when you hear the words from the Treasury Secretary, a lot of Wall Street has taken a lot of confidence in him. They have really hung their hat on his plans. Now, it's interesting. The bond market is actually telling a different story this week. You had a 7-day decline in the 10-year, and then you've had a 4-day increase. We're watching day by day now because it is reacting. It's maybe the most important barometer these days of what's happening with the administration as it pertains to Wall Street. 435 on the 10-year is where we are today. If you were a betting man, is that higher or lower in a year from now?
So I've built a business on not being a betting man. So I've built a business on saying, you know what? It might go up, it might go down. I promise you, I don't know which. It'll be one or the other. But I don't know which. And our business is built to thrive either which way. So I mean this all due candor. I try not to take the view because I don't trade that view. Is it going to be 435? Is it going to be 444? There's some people I'm sure that are very skilled at doing that. I think it's hard to do. But I think you can build around a range of reasoned outcomes.
Reasonably, too. You do benefit. Your business does benefit when rates are higher, right? So it's not a problem for you per se.
That's right.
But do you think that what we're seeing right now would yield a higher rate environment? I mean, we're not just talking tariffs here. We're talking about tax policy and the fiscal deficit as well.
Yeah. Well, look, we're in a what I hope will prove to be a continued strong economy. We have some uncertainty here.
Damn it! Look at that.
To get through, but I hope it'll be continued.
What would have happened if we front ran that cross right there? That's what I'm trying to do today. This is how you get FOMO. Yeah, you hit your blue line, and it lined right up with the cross too, didn't it? So if we front ran the cross at like the 50 EMA or something, we would have got the perfect short. So the trade, so that's what we're doing. You know what I'm saying?
Administration officials over the last couple of days. By and large, what do you think of the policy? Do you buy
If I'd quit holding my stop loss to the DLL, I'd have this thing crushed by now.
From a school of thought that certainly sees the power in trade.
So we gotta wait for the next one.
And I understand the need to.
Did you get a piece of that snooze?
Again, look, I'm hopeful that this.
Or are you still trying to get your data figured out?
New deals in the foreseeable future will start to bring us down the track that I think is the strategy the administration has in mind.
Later today, I'm moderating a panel here on the future of capital markets, and everybody on that panel has asked me to ask about the long-term view, the 5 years, the 10 years. What decisions are you making today that will determine the way you underwrite for the next several years on the heels of this new order for the world?
Well, look, that's a great way to phrase it because we're in the long-term investment business. The short-term turbulence, that's part of what we're built to just see our way through. So long term, looking multiple years out, most important for us, we invest at the company level, right? We're not macro investors, so it's the bottom up. So what we're looking for are places that are going to be stable and predictable. So there are macro trends. Let's take the AI revolution. It's real. There's going to be some really interesting things on the cutting edge, but I don't know which of those will work. What I do know for sure is that there's hundreds of billions of dollars needed to invest in the infrastructure, the data centers, and that's where we specialize. Hyperscale data centers that will underpin this AI revolution. That's something I can say looking out 3 and 5 years. I feel highly confident that that is going to be a significant demand center for capital, significant demand opportunity for the users. And these users, like the Microsofts of the world, the Amazons, are fantastic partners for us. So that's the way we kind of look at the long term. Find things we can be really confident about and build safe strategies around them.
Mark, really good to see you this morning. That is Mark Lipschultz of Blue Owl, setting the stage for another very busy day here out in Beverly Hills. Katie, back to you.
All right, our big thanks to Sonali Basak and to Mark Lipschultz of Blue Owl. We'll have plenty more interviews from Milken throughout the day, including John Gray of Blackstone, Katie Koch of TCW, and Jenny Johnson of Franklin Templeton, just to name a few, Matt Miller.
Yeah, we're going to be watching very closely what comes out of Milken. Also watching the Bundestag right now. Germany voting. You saw those lawmakers lined up, putting their ballots in the box. Let's go back to Oliver Crook right now. He's standing by in Berlin. So, Ollie, how soon will we have a verdict?
So listen, we're expecting a verdict potentially within the next 20 minutes or so. And just to sort of recap for the audience here who might not be familiar with the procedural politics of getting a new chancellor in Germany, and we have to say that a lot of people in Germany were not familiar with it because it has never happened before to have the chancellor, basically the coalition agreement, the chancellor put before the Bundestag.
Damn, look at that. How nice would that have been if I'd have just said, fuck it, I'm going to get in there.
Happened this morning, and so they have now had several hours.
Well, you're playing with the volatility. You could just get snapped out because the wick's moving so fast. You'd have to be in way at the top of this range right after it started rolling over and just leave your stop loss where it is and accept the loss if you take it. And we'd have been okay. But maybe we'll get, it's almost 10 o'clock, so maybe there'll be a reversal. Maybe we'll get a run up and a run back down.
From the SPD who are not happy with some of the compromises, the left of the coalition? Was it from the right?
Can you do like a chat? Can you chat with them, Snooze? Like put up a chat box? That's what I usually do if I need something with NinjaTrader or Top Step. I leave up the chat box. Can you just buy what you need, or you got to change that before it'll work?
Appreciate your reporting. That is Bloomberg's Oliver Crook joining us from Berlin. You can continue to follow the vote in real time by going to LiveGo on your terminal. Meanwhile, a quick check on major markets. The S&P 500 down over 1% right now. We're hanging out near session lows. It's a wipeout across the board. On the S&P 500, only 62 stocks in the green right now, Matt. So really broad breadth when it comes to this sell-off.
Yeah, we had breadth on the way up, and now we're looking at breadth on the way down. I wonder if there's an opposite of the swag breadth thrust indicator. We come back. Treasury Secretary Scott Bessent is set to testify at a House Appropriations Committee hearing. We're going to bring you that live in the next hour. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Escape this morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Matt Piper. Canada's newly elected leader, Mark Carney, has vowed to fight back against President Trump's trade war. He'll get to say that to his face today as the two meet at the White House. CBS's Aaron Navarro.
The two are expected to talk about the trade relationship between the U.S. and Canada. But over the weekend, when President Trump was asked if he will talk to Carney about making Canada a 51st state, as he has done in the past, President Trump responded, quote, "I will always talk about that."
Columbia University says it will end funding to about 180 employees working on research impacted by the Trump administration's cuts to federal funding for grants. The reductions amount to 20% of people employed by the school who were funded at least in part by terminated grants. Could Alcatraz reopen? President Trump said he wants that to happen, but CBS's Elizabeth Cook talks to someone who knows the San Francisco tourist spot well.
It's a small prison, too. Its maximum capacity was 336, and it was never filled.
John Martini gave tours for the National Park Service, which took over what remains of the site. Is Alcatraz in any way, shape, or form ready to be a prison right now?
No, there's no running water, there's no sanitation, there's no heat.
Tomorrow is the deadline to get a real ID. The federal government says most people flying lately have presented ID that would meet the new standards, but about 1 in 5 have not. CBS's Christina Fan reports.
If you show up to the airport tomorrow without a valid ID, the Department of Homeland Security says to expect delays, additional screening, and also the chance that you may not be allowed to board your flight.
If you do not have a real ID, a valid U.S. passport will meet standards. Israel's military says it has launched airstrikes against Iranian-backed Houthi rebels in Yemen, fully disabling the country's international airport in the capital. Back here, lawyers for Sean Diddy Combs and prosecutors will work for another day to pick jurors in the music mogul's sex trafficking trial. CBS's Sharika Duncan has been in court.
More than 24 potential jurors were questioned yesterday. They ranged in age from early 30s to mid-70s. They were asked about their experience with domestic violence and sexual assault and if they had any views on hip-hop artists. In court, Combs sat with his lawyers wearing a sweater over a collared shirt. At one point, Combs told the judge, quote, I'm a little nervous today.
A common vaccine has an added benefit.
People who get vaccinated for shingles have a much lower risk of heart attack and stroke. A study in the European Heart Journal showed the shingles vaccine provides a 23% lower risk of cardiovascular disease that lasts for 8 years. Shingles is linked to a variety of heart problems.
Michael George there. This is CBS News. A Kentucky woman finds herself stuck with thousands of dollars worth of unwanted lollipops.
Big problem for Holly LaFavors of Lexington, Kentucky. Her son Liam, a second grader, ordered 30 cases of Dum Dums lollipops, apparently by mistake, on Amazon. They all showed up at her door, some 70,000 lollipops worth around $4,000. The cases sell for $132.95 each on Amazon. LaFavors asked for a refund, was turned down. Then she found some people willing to buy some of the Dum Dums. Now, the sticky situation is over. Amazon came through with a refund. She's going to donate what isn't sold to charity. Steve Kathan, CBS News.
Former Vice President Kamala Harris made an appearance at the Met Gala last night. In an interview with Vogue published ahead of the event, she emphasized the importance of art and how it intertwines with politics. Matt Piper, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube as well. Alex Steele and Paul Sweeney. This is the Bloomberg Intelligence Radio program. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. What's his Fed going to do? How are they looking at some of this economic data that we've been seeing over the last several days and weeks? Oliver Crook, Bloomberg Europe correspondent, will get us the latest reporting coming out of Germany. They're having an election there, and we're on to the second ballot, which in and of itself is big news. That has not happened since World War II. Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst on Marriott earnings. And how's the consumer doing out there in terms of spending in hotels and motels and all that kind of stuff in the casinos? Sam Fazeli is going to join us here, Bloomberg Intelligence Healthcare Analyst. He's in London. He's going to join us and give us the latest from the world of healthcare and biotech. But first, let's go to John Tucker and kick this thing off with a Bloomberg Business Flash, John.
All right, good morning, guys. This Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Risk off today. Major stock averages lower in the early going. The Federal Reserve making a decision on interest rate policy tomorrow. And right now, 9 of the 11 major industry groups in the S&P 500 are down. The Eco Data trade deficit widening to a record for the month of March. It looks like companies rushed to import more products before the Trump administration announced the tariffs. In the meantime, Sarah Hunt of Alpine Woods Capital says, you know what, investors are looking for direction.
And I think that we went from a fairly even reward risk situation to one now where as the market creeps higher, it's hard to see where the next leg higher can go.
DoorDash buying Deliveroo for about $3.9 billion. DoorDash, which controls 2/3 of the restaurant delivery market in the U.S., trying to expand its reach to more than 40 countries with this acquisition. S&P 500, 53 points lower. That's down about 1%, 55.96 on the index. The Dow Jones Industrial Average down 351 points. NASDAQ 100 down 264 points. Did you know WK Kellogg, they make Fruit Loops, of course, and Frosted Flakes, reducing their annual sales look. So consumers moving toward cheaper private label options. Remember the voice of Tony the Tiger?
Yeah.
Sure.
Duh.
You're
You're great.
He was also the one who sang the Grinch song. You're a mean one, Mr. Grinch. Anyway.
Well, that's interesting, actually. I appreciate that.
Toss that out there for your consumption. We check the markets for you all day.
All right. Hey, SM. Yeah, I missed that short too, but
Is your Bloomberg Business Flash?
it was pretty volatile. So we're gonna front run EMA crosses today. So this may be a long coming up. I'm working the NQ today. Are you on the NQ SM today?
Alex Steele alongside Paul Sweeney, and we're joined now by Bloomberg's Isabel Lee. Isabel, what are you looking at?
Yeah, stopped out.
We're looking at Palantir. Shares are edging lower by 14%. That's the most since
You're still on ES? Okay.
So Palantir dropped after
I'm just watching the NQ for now. No, I'm watching both, but like if volume's like it was yesterday, volume's good now, right this second anyway.
Demand for AI software as quote ravenous whirlwind, and it bumped its 2025 revenue forecast, representing 36% growth. So the company's growth was strong in the U.S., but enthusiasm was tepid in the rest of the world, which actually constitutes.
I'm gonna hold on a little bit before I do anything.
Analysts, and this was really striking to me because it's just less than one.
But we're only trying to front run EMA crosses today, where this would have been a good one. We talked about it, but I never got in it. You know, on the NQ, that's
so Palantir, as we
46.
know, was co-founded by Peter Thiel. It's best known for its military work and intelligence
like 50.
agency. So
50
that was
points or
surprising, yeah.
The stock's up 40% year to date,
That's
and up
true.
320% over the trailing 12 months. So a little bit of a give back was not surprising, I guess.
So-
What else we have?
Ford. So this is also, it has
On the NQ, this might be a long right here. If you get a step back to this trend line, that might be the long.
But it also suspended its full-year guidance, just like a long list of companies, of course.
But then you're running into the VWAP, you know, so the VWAP could reject it. So I'm gonna hang out for just a little bit.
Ford also said that
Yeah, I get you an alarm clock, man.
the levies to reduce 2025 adjusted earnings before interest and taxes.
All right, I got some stuff to clean up. I'm watching the chart. If you guys see something, let me know.
So this is why I think it's not as down, because we have Jeffrey saying that we felt management handled the public call better than previous events. We have Barclays saying that, okay, while guidance is pulled, there's favorable cost commentary, and they expect that they will have more clarity in the years to come, in the months to come. And Ford did say that they plan to provide an updated outlook when it reports its next earnings.
I mean, there's always the trade too. Like, is it just already baked in, right? Is the bad news baked in, or it's not as bad as potentially expected? All right, last up, what are you looking at? Constellation, right?
Constellation Energy, definitely. It's edging higher by almost 8%. So we have the stock reporting adjusted profit and EBITDA that fell short of expectations, but the company maintained its full year profit guidance. So I think that's really what's boosting investors. And the midpoint of the outlook is missing the average estimates, but still we have Bloomberg Intelligence saying that the group's performance will likely hinge on outlook for data centers. And in April, BI wrote that Constellation controls more than 20% of U.S. nuclear capacity, and they're going to be one of the biggest beneficiaries of the Inflation Reduction Act.
Yeah, I was talking to a CEO of a utility company, and I was sort of pressing him on, will we see big nuclear plants again? Like, and he's like, maybe, which would be an insanely different picture than it has been in the last couple decades.
Yeah, I'm kind of like, some of those people come in and they pitch you some of those smaller nuclear modular. That seems reasonable.
So yeah, they're called SMRs, and the idea is that they're designed sort of not bespoke. Right? So like, I'm going to build it here and then plop it down over there. Build one here and plop it down in a different location, but that's not necessarily proven yet on an economic basis. Can you really scale it up? Is it actually efficient?
Sounds like cool technology to me. All right, Isabel Lee, thank you so much for joining us there. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes of the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Let's go to Ira Jersey, because we've had a lot of economic data. We've had bonds in the treasury markets kind of moving around, yields moving around. So let's bring in Ira Jersey, covers all this interest rate stuff for Bloomberg Intelligence. Ira, what are folks in your market, the treasury market, what are they looking at these days? What's kind of the trade, the prevailing trade, do you think?
Well, there's not a prevailing trade in the long end. People have been making a big deal about, the bond market selling off a little bit the last few days. But really, we're stuck in ranges. If you look at the long bond, the 30-year treasury, we're probably going to stay in 4.60 to 5% range until we get some clear picture as to what the tariff situation and how that's going to affect inflation is going to be, and also what the Fed's going to do, because there's still a lot of uncertainty around both monetary policy and the economic effects of some of these other policies coming out of the Trump administration. So I suspect range-bound markets. The front end, though, when you look at like 2-year yields having gone down a bit lately, is a sign that the Federal Reserve might ultimately be cutting interest rates at some point this year. Currently we're priced for a cut come July. I think that might be a little bit too early, but nonetheless, that's what the market's currently pricing.
So, Ira, yesterday we got a 3-year. It seemed to be okay. The demand was there as long as yields were a little bit higher, and we get the 10-year today in an auction coming at 1 p.m. What's been your takeaway on the auctions?
Yeah, so auctions, we had a really bad 3-year auction last month. It was in the middle of all of that volatility. So I think the fact that we had an okay 3-year auction yesterday, as you said, Alex, like that was as average as you could get. In fact, our model gave it a B grade. So pretty average there overall. The 10-year, I think, will probably go okay. There's this big question about whether or not overseas investors are going to be participating as they have in recent years in the long end and long end auctions. Keep in mind, the foreigners have only been about 10% of the demand at different treasury auctions, 7-year, 10-year, 30-year in particular. So if that slips to like 8%, it's probably not a big deal. But if that goes way down, right, that goes down below 5%, then that means that someone else has to be picking up that demand, and that means that you'll probably have to do so at higher interest rates, at higher yields, in order to attract those incremental buyers domestically. I don't think that that's likely today, but that is something we have to look out for as we get more and more supply going into the summer months.
Yesterday, Ira, Treasury Secretary Scott Bessent at the Milken Conference touted the U.S. as the, quote, premier destination for global capital. We've seen a lot of volatility in the Treasury market. We saw some folks were saying some international selling. What's your market telling us about, I guess, international investors' appetite for U.S. Treasuries?
Yeah. What's interesting, everyone keeps on saying, like, what happens if international investors kind of stop buying? The international investors that in the financial markets, as opposed to like the real economy, the Secretary Bessent was talking about people bringing capital over here to build factories and the like. But when it comes to portfolio flows, it's really been private investors that have been big buyers, and that's where some of these trade flows and some of the angst around all of the tariffs is really showing itself. So we have, I've talked to a number of overseas investors, and they're like, look, we're just slowing down our purchases, but there's economic reasons that they want to buy treasuries. And that's because if certain investors buy treasuries and then hedge back their currency risk, they can still make more money buying treasuries than they can their local government bonds. And I think that until that situation changes and shifts, there's still going to be at least some incremental demand for treasury securities as long as it's economically beneficial to the investor.
All right, Ira, thanks a lot. Really appreciate Ira Jersey, Bloomberg Intelligence, U.S. Chief Interest Rate Strategist. We have some breaking news for you. German lawmakers apparently...
It's all right. We'll get it ironed out. So the long would have worked out if you front ran the long would have been good. So let's see. So now we're just going to wait for the next EMA. Shit, that long would have been really good. The short would have been good. So these are both trades that if we would have got in, we'd have been okay. So we're just waiting for the reversal for short. So let's just see if we got a lot of volume today. Got way too much volume on the.
Since the end of World War II, where
on the NQ.
On the first vote. So, we'll have to see how that plays out over the coming days.
All right, the trade box is on the ES right now.
And again, that was really important because we need to know how much the budget was going to increase in terms of defense spending. Defense stocks have gotten hit earlier in the day. Just taking a look at what's happening over.
So let's watch to see if we reverse to go short, and then we'll front run that.
Rise by about 4 basis points. That front end is pretty much flat. Roz Matheson, Bloomberg News Director for Europe and the Middle East and Africa, will be joining us on the latest news that finally the Bundestag has elected a chancellor. This is Bloomberg.
It's a long day. Let's not get FOMO this early. But that was a really good long I should have taken. On the ES, it's even better. We're over the VWAP now on the ES. We could have got in anywhere in the front run here. All right, I'm feeling good about it. We just got to wait for the next one. You went long? Good. Good. You're looking really good right now, I tell you that.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, no FOMO, SM, no FOMO. Are you still in that trade snooze? It's looking really good.
Right now, the major averages right now they're all pushing lower. But all the worst
Do
levels
not FOMO.
Worst performing stock in the S&P 500 that belongs to Palantir Technologies. The shares they're sinking. Its results relative to some of the elevated expectations. It's down over 14.5%. And then the best performing stock will go to Constellation Energy. crummy earnings, but they're keeping their guidance, and they also say their Calpine deal, that is still on. And Ford Motor suspended its guidance, also said auto tariffs will take a toll on profit. But Ford this morning, those shares up 3.9%. Overall, the S&P 500, 28 points lower. That's down 0.5%. We're at 5621 on the index. The Dow Jones Industrial Average down 173 points. That's a decline of 0.4%. And right now, the Nasdaq 100, 164 points lower, and that is down 0.8%. So Instacart thinks this is a new way, apparently, to throw a party. They're launching an app for multiple users to contribute to one order. You pay for your own stuff and have it all delivered together. So, you know, usually I just bring a bottle of wine or some shrimp.
Box of wine.
Box of wine. So it depends on the party I'm going.
Yeah,
if I'm going to the Hamptons, it's a bottle. Jersey Shore, it's a box.
This
Anyway,
is all fair.
we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out there. So it took longer than expected, but Germany now has a chancellor. Roz Matheson joins us, Bloomberg News Director for Europe, the Middle East, and Africa. Roz, like most Americans, I woke up to this news and then I was like, is that a big deal? Apparently it's a big deal not getting kind of elected on that first ballot. Can you give us the context there?
Well, that's right. I mean, it was supposed to be a pro forma moment. It was just a set-piece vote in Parliament for him to be formally confirmed by lawmakers as Chancellor. Then he would go off, start cabinet, and he was due to go to Paris tomorrow to meet with the French leader. So it was all supposed to roll off from there. And of course, he'd already done the work to get these big changes through Parliament in terms of removing the debt brake on Germany, big package around infrastructure and defense. So it was quite shocking to see this result, given, you know, that he had the numbers in theory to be voted through as Chancellor by Parliament. The question is, who voted against him? And if so, why? And so we had this second vote just a short time ago. He got over the line. He needed 316. He got a 325. So they got there. And now he will, of course, go off and be Chancellor. But the fact this happened is just a really negative sign for the start of the administration and for the difficulties that will lie ahead, potentially getting stuff done with Parliament.
So so he already didn't have a mandate. So then now is it like an extra non-mandate?
Well, I mean, he does have a coalition with his bloc and the centre-left Social Democrats. So he's got a functioning coalition in Parliament, but it just shows again that there are lots of strands against him, even within that coalition, and that some lawmakers may object to certain policies. It could be quite difficult to negotiate changes to policy, including with the Social Democrats, with whom which they're in coalition. And what was the intention of these lawmakers in voting against him in this minute was to send a signal that, you know, they are going to be hard on some policy platforms with him, that they're not particularly happy that he's chancellor. It's really hard to know what happened here today, and therefore the signals from it. But it's not a positive start of confidence really in his administration, you'd have to say.
Roz, what is the job one here for Mr. Merz and his government now?
Been a long time proponent of getting our fiscal house in order. And I applaud the president's attempt to get our fiscal house in order. During my tenure as chairman of the House Budget Committee, many years ago, I co-chaired the Joint Select Committee on Budget and Appropriations Process Reform. And many of our recommendations are included in Trump's request.
All right, 222 profit.
We're heading toward big and
beautiful
change within the federal bureaucracy.
Great trade. Great trade. I wish I would have got in on it here. I guess I got to get used to the new I got to get in. I haven't really traded it like that before. So I just got to get in on the next one. I got 1200 as a buffer today. Yeah, I got stopped out on that last short, or else I'd be up probably twice this right now. I left my stop too tight. I guess some of it's like knowing when to leave the stop a little more, but whatever. All right, we're waiting for the next one. Good job, Snooze.
Part of that has been bringing people back to the office. So on March
we reinstituted a work from your office program. And again, I think it's going to be efficiency. We have asked for more money for many of the priorities. The Treasury Foreign Intelligence Network and the Office of Foreign Asset Control, OFAC. So we will be keeping the American people safer. And again, we think through efficiency gains, the federal government historically does not have productivity increases. And as I've continually pointed out, DOGE is the Office of Government Efficiency, not the Office of Government Extinction or Eradication. So I think that it is not a big leap to do much more with less.
Are there $2.5 billion worth of efficiencies?
Well, again, just two of it is in the IT department. And if you were to look, Treasury processes about 1.5 billion payments per year, which is like a mid-sized U.S. regional bank. We have had many of these banks come in and talk to us about their payment programs, and their departments are 1/10 the size and 1/10 the budget. So allowing for the redundancies that we would need as a government agency, then we think that we do need to be bigger and more fulsome, but there are substantial savings to be had.
I want to ask one more quick question, because I know we're probably not going to have a second round. You have been a proponent for better financial literacy in this country, and your background is evidence of that. Quickly, can we do a better job in this country of educating young people on matters of financial literacy?
Any increase that we do would be a better job. We just hosted Financial Literacy Month at the Treasury. I only had 2 months to get ready for it. I can tell you that every April we're going to do more and more. But the key to financial independence is financial literacy, making good choices, and not. I don't think it comes from more regulation. I think it comes from more financial education.
Thank you very much.
The chair now recognizes the gentleman from Wisconsin, Mr. Pocan, for 5 minutes.
Great. Thank you, Mr. Chairman. And thank you, Mr. Secretary, for being with us. My main concern is, I think, what people are looking at the economy. The first 100 days, lowest stock markets since Richard Nixon, not usually a measure people are shooting for. On tariffs, the fact that last year we had an effective rate of about 2.5%. I think the Yale Budget Lab, and I believe you went to Yale, has said that effective rate is closer to 28%, the highest since 1901. I know that some of that's changed because the tariffs are on again, off again, some on again, some off again, somewhat chaotic. I believe as your term is what, Crazy Ivan style. I compare them to how a monkey throws dung. You're not exactly sure where they're going to land. And that's the concern I have as a small business owner, and I know Ms. Gluesenkamp-Perez is as well. I've got small businesses really worried. You made a comment about while cargo volumes have dropped 60%, you see this as a temporary detox. But for a small business that's getting by day to day, that's much bigger. You talked about Main Street. We want to finally focus on Main Street, not Wall Street. I think you were at a global investor conference in Beverly Hills yesterday. That's the cocktail party where you mentioned the Crazy Ivan theory. And before that, you were at a JP Morgan Chase World Bank private investor summit. All those things are not Main Street, right? Main Street is an auto body repair, a specialty printer. So my concern is on the tariffs. Who pays tariffs, Mr. Secretary? No. Answer the questions I asked, please. I only have 5 minutes. Who pays tariffs?
Sorry? Well,
who pays tariffs?
Sorry,
Mr. Secretary, please.
Excuse me.
The question is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question. He wants to answer other questions.
Well, Congressman, if the exporters, dislike tariffs so much, why wouldn't they, if I think what you're trying to get me to say.
Did you remember the question? I'm not sure you did. Who pays tariffs?
That It's a very complicated question.
Reclaiming my time. People pay tariffs, right? Reclaiming my time, Mr. Secretary. Reclaiming my time, Mr. Secretary. Reclaiming my time. You clearly aren't going to answer. I'm not going to waste my time having you go, Mr. Secretary, reclaiming, Mr. Chairman, I asked reclaiming my time. Mr. Chairman, and I asked to reclaim my time. Did I not? No, I said reclaiming my time because he's clearly not answering it. So, yeah, so as a small business owner, and unfortunately I'd like that time back since you failed to recognize me for 30 seconds. So I just recently from one of my suppliers got the tariff surcharge on things. And in addition to the tariff surcharge, guess what else got raised? American-made walnut plaques. That has nothing to do with tariffs, but companies take advantage and do that. So right now, we are getting screwed right and left because of the indiscriminate use of tariffs. That's the reality for Main Street. And you go off to Beverly Hills for private investor conferences and talk about crazy Ivan theories. Answer that. What is the crazy Ivan theory of tariffs that you mentioned at the summit?
Well, first of all, sir, I've had meetings with more than 50 small lenders. So I want to clarify that. I would also say that in game theory, strategic uncertainty, of which you seem to like the name Crazy Ivan.
Well, it's your words, correct? Didn't you use Crazy Ivan at the...
Well, you've used it 5 times. And
that's the question, Mr. Chairman.
I am saying the strategic uncertainty is part of negotiations. That should we say, here's what we'll accept. Please take this.
Okay, I've got your answer. Thank you. I'm going to reclaim my time again. So for a small business, we don't have that luxury, right? When the ports are empty in California and we can't get goods and people are stocking up for Christmas goods, Crazy Ivan is great for, please don't take this offense, really rich people like you, but for people like me, it's not, right? That's what makes small businesses fail. That's what makes people lose their jobs. That's what makes the stock market tank. So I'll ask one more time, who pays tariffs?
Sir, the history would show that it is a complicated mix of who pays the tariffs over various times.
So that's exactly the problem. If your answer, and you are a very educated person, you have a very impressive bio, cannot answer the question who pays tariffs because you won't answer that, and you say it's a complicated issue, it's not complicated. Consumers pay Trump's tariff tax. That's the reality. And I'll yield back, Mr. Chairman, but I do think next time if I ask to yield back, I would appreciate having my time yelled back.
Chair now recognizes the gentle lady from Iowa, Ms. Hinson.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Thank you so much for taking the time to come and answer our questions. I appreciate what the Trump administration is doing to try to level the playing field for American consumers and restore our economy to where it needs to be. So I really appreciate the work that you were doing to make that happen, Mr. Secretary. And I certainly, as an appropriator, recognize the importance of making sure that every tax dollar is spent appropriately, and I appreciate your opening comments as such. So with that, the GAO estimates the federal government loses between $233 and $521 billion annually to fraud. Those are alarming numbers, hard-earned tax dollars just wasted. President Trump has certainly acknowledged the absurdity of this level of waste, and he signed Executive Order 14249 to protect America's bank account against waste, fraud, and abuse. And I was proud to support this effort by introducing a piece of legislation to codify that, the Protecting American Taxpayers from Wasteful Spending Act. One of the provisions of this EO is directed at your department, the Department of Treasury, to establish pre-certification and pre-award procedures across the federal government to prevent fraud and improper payments. So can you define for the committee today what an improper payment is and some examples of what you're seeing and why these procedures were not already in place before, Mr. Secretary?
Well, it's a bit mystifying why they weren't in place. And what we are seeing is that there was a very complacent upper level of management in many departments across the entire government. What I can say at Treasury, that of the 1.5 billion payments we send out every year, they're required to have something called a TAS, a Treasury account symbol. We discovered that more than one-third of those payments did not have a TAS number. So as the Appropriations Committee, you should be shocked by that, because how can a payment be tracked back to an appropriation? Only through the task number. So there was no accountability. So that is why the 450 organizations that sit above Treasury, where Treasury acts as the paymaster, are unable to pass an audit. So we have the crack down on that. Every payment now requires a task number. Very simple. And I will tell you that the mid-level employees who I have had come into Treasury to talk to me about that feel liberated. That they have
ASM. I'm thinking it's fake. I'm looking at I'm not looking at doing anything until the green EMA is going to front run the slow red EMA for a short. So I'm not doing anything until then. I changed my strategy yesterday a little bit. I'm not doing continuation trades anymore unless it's just a super obvious like bull or bear flag. You know what I'm saying? Like this morning when I took that trade. So I'm waiting for the rollover and direction change, which may take a lot of the day, but I'm up $1,200. So there's no sense, you know, I'm just going to wait for, if I'd have taken that long, I'd be crushing it today. But I was a chicken because I'm kind of working. It's kind of a new way of looking at it for me. There's a lot of volume.
And this is taxpayer money, and we are charged with protecting it.
What other plans are in place to help implement that executive order? You've talked about the Treasury account symbol. Are there other things in that executive order that you are executing on today?
Well, again, the president, as you mentioned, has passed. We are trying to go more paperless with the checks, with the very important checks that the citizens across the U.S. receive, whether it's Social Security, veterans benefits, tax refunds. There is a substantial number of those are stolen. So the president has issued an executive order to try to make that more electronic. That will.
But this might be a bull flag. This might be a bull flag off that resistance line because it's only along, you know, if we're looking at the NQ. Stochastics are pinned, so pressure is up. So I could see the case. Yeah, this is a bull flag. So if you like went long off the line of resistance right here, I can see a long into this. I can absolutely see that. But I'm not trading that today. It doesn't mean it's not a good trade. I'm just not trading that today. Because what I'll do is I'll sell myself on this, and then we'll start getting a pullback, and I'll never let it go, and I'll pop out my DLL. So I'm not going to do it. But yeah, I almost kind of want to get in on that, but I totally see that.
Income strata you're in, your probability of being audited is equitable.
I agree. There's no entry for me, but I can see the flag into this zone. But I agree. I'm not doing anything. I'm just talking through the chart. I agree. It's looking pretty scary.
So that what you were saying is that those receiving the earned income tax credit are more likely to be audited. That would have just meant more auditing. There was also a proposal to track small payments, $600 on Venmo and things like that, which has been pushed back also.
But what is the forward program to ensure that there is an equitable? I mean, I have some quarrels with what you said, but what is the plan, the implementation plan to ensure moving forward we are getting towards a more equitable enforcement rate?
Look, we are reviewing the processes for who is audited at the IRS. There's been a great deal of politicization of that. So we are trying to stop that. And we are also going to look at the distribution of who is audited and why they are audited.
Look forward to hearing more about how that is being implemented and how we can help you with that. So I think you and I agree that the current trading system has failed working people who are turning wrenches, driving trucks, changing diapers. Could you expand on how the proposed tariffs would ensure that there is upward pressure on wages?
Well, Well, I think that there are many parts to that, but the key to upward pressure on wages is more job opportunities. And what we have seen since what the so-called China shock after China entered the WTO was a large decrease in manufacturing jobs. And studies have shown that workers in manufacturing jobs have more potential for large-scale wage increases than service workers do. So moving more workers from service work to manufacturing should do that. And the administration is also trying to bring down the costs for working families.
I agree, right? If you are trying to earn a living as a barber, you have to move to a city to earn a high wage. But if you're in a rural community where there's a factory job, you can own land, you can own your home. And I think one of your points about financial literacy is ensuring that we do have economic self-determination. You can buy the pair of boots that will last 5 years and not be in this pace. But there's a lot of work to do here, building real wealth and not the nominal kind of, I'm not really here to be a defender of the stock market. Most of the people I know don't trade stocks in my community. It's a question of being able to own land, having that capital access to start your own business, and frankly, some of the antitrust work to ensure there's a level playing field for small businesses like mine. I'm hearing from constituents who have questions about their tax returns and are having trouble getting a real person on the line to speak to. What can we do? What is your plan for decreasing wait times, for having somebody be able to actually talk to a human being when they call the IRS?
Well, again, this goes back to my three priorities: collection, privacy, and customer service. So we are moving money into customer service at the IRS. And it's almost imaginable that the phone banks had the same number of operators 24/7, 365 days a year. So if one of your constituents called on Christmas Eve, they'd probably get through because there were so many idle phones. If they called on April 14th, there was no surge to help them. So, as President Trump has repeatedly said, this is a common sense administration. So we're going to have common sense for the IRS. Playoff season is for the first, from January 15th to April 15th, game days April 15th, and we're going to make sure that it's better staffed then.
Thank you. I yield back.
Thank you very much. Chair now recognizes the gentleman from Texas, Mr. Cloud, for his 5 minutes of questions.
Thank you, Chairman, and thank you, Mr. Secretary, for being here. I think it was Albert Einstein who said that you can't solve problems with the same kind of thinking you used when you created them. And that's one of the things I certainly appreciate about you and the Trump administration and what you're bringing to the table. For a long time, we've seen the managed decline of America, and while many who run for positions that we hold will campaign on the need to do something, what we've seen is too often, and even because some of the politicking we've seen today, for the sake of politics, we've not been able to do the big, hard things that we need to change course and get us out of the $36 trillion debt pathway and growing pathway that we're on, leading to that wall that you talked about. The American people have watched this all play out, realizing that their nation's been in decline and seeing what they thought was kind of the promise that if we put the experts in charge, they would run the government, we would have a regulatory pattern that worked, the wealth gap would close, America would be strong, and that has not happened. What did the experts get wrong that you're correcting?
Well, sir, under President Trump's first administration, the wealth gap did close. That the bottom 50% of households by net worth saw their net worth increase substantially more than the top 10%. And we are aiming to do that again. That under President Trump's first term, hourly workers' wage gains were higher than supervisory workers. And look, what people got wrong was the shock. And there was this terrible policy of, it was essentially compensate the losers. And I do not think that the American workers are losers. they were simply cast aside as the necessary collateral damage in this unfettered free trade. And the free trade is not always fair trade, and we can see that from the large surpluses that these countries are accumulating on the other side. So we are aiming for fair trade to bring back high-paying precision manufacturing jobs to the U.S., and we are doing that. We're using tariffs, but we were also using the substantial deregulation, energy dominance. So we want to continue to make the U.S. an even more attractive location for manufacturing.
It's interesting you talk about manufacturing. I think it was in 2008, the intelligence community put out a report. I talk about it a lot because they said the greatest transition of wealth, power, and influence is happening right now. And this was some years ago. They said we expect it to continue, and it was going from the Western countries to the Eastern countries. And they said it was happening because we were sending manufacturing overseas and we were sending oil and gas revenues overseas. And yet they said it was like an unsolvable solution, yet we have the Trump administration who's coming in and solving what seems to be not an easy solution, but a very clear solution in bringing manufacturing back and bringing oil and gas back. And appreciate it. I wanted to ask you, because there was a comment about the bond markets, and certainly that's really is a concern. We need to make sure that they stay strong and that the dollar stays strong. Are the bond markets more affected by the tariffs and the concern we see in them now? Are they more affected by the tariffs or out of control debt and the fact that Congress can't seem to get our fiscal house in order?
Well, I will tell you that the large stock of government debt is why I'm sitting here now as opposed to back in the private sector. I became so alarmed by what was going on under the previous administration. This deficit that we had, highest ever, that when we weren't at war or weren't in a recession, and it's unsustainable. And I thought it was deeply cynical. And if we'd done it, if we'd continued it, then we would have gone into a malaise where we couldn't grow ourselves out. We would have probably been forced into looking more like a European-style economy, very high government spending, lack of innovation, and lack of mobility.
And that would matter for us here at home, but certainly even for the world, because we've kind of been the innovation engine of the world.
Yes, sir. But what we've created in the U.S. is this barbell economy, and the Trump administration is attempting to remedy that. On one side, we have financial services and the tech sector, which are forward-looking and the envy of the world. On the other side, we are a natural resources economy led by energy, which the previous administration stopped permitting for LNG facilities. But the arc in between is what we are missing, are these manufacturing jobs, and that's what we are trying to bring back.
Thank you, Mr. Secretary.
Thank you. The chair now recognizes the gentleman from Maryland, Mr. Ivey, for 5 minutes of question.
I appreciate you being here today, Mr. Secretary. I want to ask you a few questions about DOGE and the role it's playing at Treasury. You came into office, I guess you were sworn in on the 27th, was it? You were confirmed by the Senate on the 27th? Is that about right?
28th.
28th? Okay. And then you started working at Treasury immediately after that? All right, and DOGE began working there as well with respect to the payment systems?
Two individuals from DOGE who were actually Treasury employees were on site.
Okay. And I believe you were approached by the highest ranking career official at Treasury, David Lebrick. Am I pronouncing his name correctly?
I believe it's Lebrick.
Lebrick, okay. What was the nature of that conversation? I assume this was about the DOGE issue, but tell me briefly what that conversation was about.
Well, that conversation was about a discussion of the payment system. And when I go back to what I didn't know, I think...
Well, if you look, that was a good bull flag, Snooze. Look, all the way up. or SM, whoever's around. We hit the zone. If you went in at, we called that.
Short version.
Oh, no.
Okay.
Good at calling them. I'm not so good at getting in and making it happen.
Talking about the task that it was people like this individual who were.
So now we're just waiting for the EMAs to cross into a short. So that long is pretty much over. I'm not going to play any continuation long.
Feel free to send in the substance of the discussion in a letter. But I guess what I was going to ask was, you just mentioned there were two people working with respect to
the flag into the trend line, that happened, so that's good.
I'm not sure.
Not sure? You're not familiar with that?
I'm going to
name?
move this.
I don't recall that name.
Just wait and see.
I interviewed Tom Krause,
You know.
and personally recommended him.
All right.
for Treasury.
Okay. Well, Mr. Alez had worked at Mr. Musk's SpaceX company. And the Wall Street Journal issued a story, I think around February 7th, that talked about statements that Mr. Alez had made in the prior year. One was, you could not pay me to marry outside my ethnicity. Another was that he wanted to normalize Indian hate. The third was, just for the record, I was racist before it was cool. And another was, I just want a eugenic immigration policy. Is that too much to ask? This man resigned shortly after that article was published, but you don't recall him being there?
Congressman, I did not recall that individual's name, but that individual was terminated.
He was terminated, okay. Well, I appreciate that. Although it appears that he then later turned up that he was rehired, I guess, and that he's continuing.
Not by Treasury, sir.
Okay, but he was continuing to do work for DOGE, but in this instance, HHS and 3 other departments? You have no idea.
I didn't follow his career.
Okay. Well, you didn't catch J.D. Vance saying that he didn't think he should be terminated? Did you miss that too?
I don't recall that.
All right. Do you recall Mr. Trump saying that he should have a second chance?
I don't recall that.
No. Okay. And do you recall Mr. Musk saying he should be given a second chance as well?
No, sir.
All right. Well, I guess the main question too here is, what exactly was the vetting practice that you had in place before you brought on these two people and gave them access to the payment system, which is $6 trillion?
Well, sir, they did not have access to the payment system, or perhaps we have a different definition of access. They only had read-only abilities, and they were there for tech support to look at the payment system, the ERP system, just like any private enterprise.
Is this an individual that you would have brought on even in that capacity if you'd known that he'd made these statements prior to him becoming part of that team?
Congressman, that I think it's very difficult to monitor everyone's social media.
That's not what I asked. If you knew that he had made these statements, would you have brought him on in the capacity that he had at the Department of Treasury?
I think the Office of Personnel Management would have flagged that.
Would you have brought him on?
Sir, again, I'm not going to speculate.
The chair now recognizes the gentleman from New York, Mr. LaLota, for his 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Good to be with you this morning, sir. I'd like to use my time to talk about taxes and trade. As head of Treasury, you advise the president on taxes and trade, sir?
On both, sir.
Among many other things,
yes.
Of course, yes. And Mr. Secretary, in your estimation, how did President Trump's 2017 signature tax bill affect American job creation, employment, and wage growth?
Mr. Vice Chair, it provided a substantial non-inflationary impetus to the economy, which resulted in real wage gains on a non-inflationary basis for the American people and a robust economy.
I would add, I'm with you 100%. I'd add some data into there. 4.9 million jobs between the passage of the tax bill and the COVID pandemic. Employment rates dropped from the 4s to the 3s, and we had a lot of wage growth, especially within the middle class. And that sets me up for my next question. Congress now is considering extending those tax cuts, which expire at the end of this calendar year. Would that be a good idea, Mr. Secretary?
Congressman, what Congress is considering is making them permanent, which is a better idea.
We're considering a lot on that tax bill. We're also considering SALT, which I think is an awesome idea as well. But nevertheless, on the greater bill, public polling suggests that you're right, and that 8 of 10 Americans agree that extending those tax cuts are a good idea, recognizing that they help grow wages, they help lower employment, and help personal wealth. But I want to use the remainder of my time to talk about trade policy, Mr. Secretary. Is it true that America's trade deficit is about $1.2 trillion?
Approximately, yes, sir.
And with China, Mr. Secretary, about $300 billion?
Yes, and I believe it may have increased slightly.
Yeah. And Mr. Secretary, what impact is China's exploitation of child labor and near slave-like labor, what impact does that have on the trade deficit?
Well, sir, that it creates an unlevel, aside from the values problem that Americans do not believe in this behavior, that it creates an unfair trading advantage. And we can see that from the size of the deficit, but more importantly, from the size of the large surpluses they're accumulating.
And Mr. Secretary, what impact does China's notorious theft of America's intellectual property have on our $300 billion trade deficit?
Well, I think that is a problem for not just the U.S., but for every other country. And to the extent that they are able to leapfrog, whether it's with technology, whether it's with products, then that creates a huge advantage that has given them, it's back to one of the cornerstones of the problem of trade, that if you don't have to spend money on R&D, then you can spend it on manufacturing, cheap manufacturing.
And Mr. Secretary, are tariffs a tool to reduce America's trade deficit, specifically with China?
Yes, sir.
And are they also a tool to protect American jobs, Mr. Secretary?
100%.
And Mr. Secretary, you could probably tell by how far I sit in the dais, I'm somewhat new to Congress, but yet hypocrisy still offends me. And there's a lot of double talk and hypocrisy in this town. I'm going to read you a couple of quotes, Mr. Secretary. I'd like you to tell me if you think President Trump or somebody from the administration has said it, or if you think Senator Schumer has said it on tariffs. Quote, "Tariffs are a necessary step towards addressing the unfair imbalance of China's trade relationship with the United States." Did Schumer say it, or did Trump say it?
I would imagine the president.
Schumer said it, sir. Schumer was just a year ago, in February 2024, talking about tariffs being the answer to combat some of those issues in China, specifically ripping off our intellectual property and exploiting slave labor and child labor.
Well, Congressman, I would also note that many government officials, including presidents, were also in favor of a border wall until President Trump was.
Good point. That leads me to my second question. Who said it, Schumer or Trump, that tariffs are vital to protect American workers, American manufacturers, American innovation, and our national security? Who said it, Trump or Schumer?
I would imagine it was the ranking member.
It was the Senate Minority Leader, Chuck Schumer, said it. And like what you said, it was cool until Trump got in office, and now he's opposed to it. My time is about to expire, Mr. Secretary, but I want to commend you for fighting for American middle-class workers. I do think that extending the tax bill with a couple of tweaks like SALT is important. I do think that fighting for our middle-class workers is important, and I implore you to stay on the right path, sir.
Good. Thank you, Congressman.
Thank you for getting that SALT plug in, Mr. Lalota, twice. The chair now recognizes the gentleman from Georgia, Mr. Bishop.
Thank you very much, Mr. Chairman. Thank you for being here, Secretary Bessent. I wanted to ask you some questions about the reports that the administration is cutting IRS workforce roughly in half with a goal of 50,000, including many of the frontline enforcement positions. A recent study concluded that this would result in a loss of $19 billion in foregone revenue just in 2026 and up to $350 billion over the next decade. Such substantial cuts in staffing could cause reductions in voluntary compliance as taxpayers will feel emboldened to cheat on their taxes. And an IRS official previously testified that a simple 1% decline in the compliance rate translates into $30 billion in lost revenue for the government. If the administration is truly concerned about reducing the federal deficit, as you indicate, why would it consider staffing reductions that reduce the IRS's capacity to collect much-needed revenue that could be used to reduce the deficit or pay for critical services? A recent Treasury Inspector General for Tax Administration's report indicates that the IRS compliance workforce would be drastically hit 31%, with revenue officers 18%. They are paying the maximum taxpayer compliance responsibilities that are needed for revenue for the government. It appears that 31% of the reduction in force, and I think since January, the federal workforce has been reduced, and IRS started out with 103,000, and now it's down to 91,600, which is an 11% reduction in the workforce. That's 31% loss in revenue agents, 18% loss in revenue officers, 10% loss in contact representatives, and 10% loss in tax examiners. It seems to be really, really foolish to pursue that. Can you tell me why that makes sense? Briefly.
Sir, so I think there are two things here. There's the actual decrease that you just cited, which is about 11%. And then if you could tell me where you're getting this number that there's going to be a 40 or 50.
The IG.
Okay, so
There's going to be a 40 or 50%.
we're kind of in a little range here between this trend line and this historic line of resistance. We got two trend lines here. We're kind of bouncing between those.
Now that I have it, I think it's probably not strong enough.
Our slow control EMA is just popping over the 200.
Let me move to another subject, Mr. Secretary. Thank you. If you want to elaborate, you can.
This is a nice little range. We're in a full long. We're on the NQ right now.
This administration
Watching the NQ.
The price of groceries has increased by 5%
Waiting for
in 2 months, according to a recent report.
waiting for the control EMAs to change direction, and we're going to try and front run it. Yeah, I'm on NQ right now. ES is kind of dead. We're on the bottom end of the range over there. It's just not moving a lot. I'm going to watch the NQ SM.
Up from 26% in January 25 alone. What is the administration doing to bring down the cost of food? What is the administration doing to ensure that the impact of the tariffs don't disproportionately fall on our nation's farmers? I've got a list of headlines from farmers all across the country that are complaining about the impact of the tariffs on their capacity to sell their products. Can you tell me what the administration is doing to bring down the cost of food?
Well, a couple of things, Congressman. First of all, you may or may not know I am a farmer. Secondly, that we inherited a momentum. Food prices, like monetary policy, have long and variable lead times. The price of eggs was up substantially during the Biden administration. It has been brought down 52% in the past few months. And
it just went up the last 2 months. I just told you.
No, sir, I think that's not
since January.
And finally, we are bringing down energy costs. And energy costs, transportation is one of the single biggest factors in food pricing. So diesel prices across the country have come down, and that will result in lower food prices.
Chair now recognizes the gentleman from North Carolina, Mr. Edwards, for any questions he may have.
Thank you, Mr. Chair. Mr. Secretary, thanks for being with us this afternoon. Earlier this year, I co-sponsored a bill, the Anti-CBDC Surveillance State Act, that would prevent the Federal Reserve from issuing central bank digital currency. many of the folks that I represent are concerned about the security of such a currency and the privacy of their information were such a currency to be used. Can you give me your perspective and maybe the administration's perspective on the place for digital currency?
Sir, we believe that digital assets belong in the private sector. And my personal view is that having a central bank digital currency is a sign of weakness, not strength, because really the reason if there
Hey,
is
how you doing? This is
say,
Sean from
reserve
QuickBooks.
manager, or a foreign central bank holds U.S.
Yeah, no
dollars,
worries.
then there
All
is a
right. So I
wide
was just reading
variety
through our
of
chat
U.S.
here.
assets they
So
can
we're
invest in.
creating a brand new online
Create a
account,
central bank
correct?
digital currency just for ease of use because there are no good choices for underlying assets.
And so you're saying you would not be in favor of the Federal Reserve
So if
issuing such a
this is
No,
brand
sir.
new and we're not
Thank you.
attaching
Can you tell us real quick, at what point do you believe that our debt levels would no longer be sustainable? And then the second part of that is, what would that look like? If our debt were no longer sustainable, what would that look like to the American family? We talk a lot about debt up here. We put forth some elaborate graphs and charts, and we hear all kind of economists using big, long words. I need to be able to describe to the people back at home what that might look like in their lives were we no longer sustainable.
Well, it would look like a sudden stop in the economy as the credit would disappear, as markets would lose confidence. And I'm committed to that not happening. And again, it is a tipping point in debt sustainability is very difficult to pinpoint, but what is not difficult to pinpoint is a trajectory. And the trajectory is unsustainable when and if the markets were to uh, rebel against is very difficult to know. I think, just as I talked about the warning track for the X date, I think it's very important not to go on the warning track. And we've got to get to the other side of this and start reducing the debt. And the debt numbers are indeed scary, but the Secretary Yellen and I both agree that it is the debt to GDP that is the important number. So we are trying to both control the absolute level of debt, pay it down, but
You
also grow the
replied
GDP.
to the calendar invite,
so
but it's easier if I just ping you.
I applaud your approach towards the debt. Give us an idea of where is that tipping point? How close do you think that we might be to that?
Again, so I think what the market, having been in markets for 35 or 40 years, what the market is more concerned about is a trajectory. Are you on a trajectory?
RE Systems 101 at Gmail.
Are you, as we said during COVID, bending the curve? So the goal here is to both bend the curve, but to grow the denominator.
Yeah, that's what I'm going to set it up in. We're just corresponding through this for now.
To solve this problem.
So when you send that to me, if you don't use this email, just let me know who you are, and then I'll call you as soon as I get a chance. Okay?
What role would you
Like
say DOGE is playing right now in prolonging that tipping point and reversing our fiscal trend?
Well, I think DOGE or any other measure to constrain the spending is admirable, important, and necessary. And if we don't do that, as I've said, ranking member mentioned it, we do not have a revenue problem. We have a spending problem.
Thank you. I've got
Yep,
just a few seconds. Can you tell us what keeps you up at night regarding cyber threats to our Treasury system?
Well, it's cyber threats across the entire financial system, sir. And that's why at Treasury, we are leading the effort for more resilience within the entire financial system, whether it's across the banking system, the payment system, and the Treasury system. As you would have seen, Treasury was hacked last year. We've just discovered an OCC hack that discovered last year. So these hacks are real and dangerous.
Thank you, Mr. Chair. I yield.
Thank you. The chair now recognizes the ranking member of the full committee, Mrs. DeLauro, for any questions that she may have.
Yeah, I think it's 13. Thank you very much, Mr. Chairman. My apologies for being late, and apologies to you, Mr. Secretary, but lots of hearings happening here. So just a couple of points, and I want to ask my question. It's just a follow-up on this IRS piece. I think it's very interesting that, well, first of all, I totally disagree with you, Mr. Secretary. We have a revenue problem, and that's where the IRS comes in.
All right, have a good afternoon, and we'll talk to you later.
$2.3 trillion. That was
Yeah, no worries. We'll talk to you then.
Really built up with the tax cuts to the wealthiest and the biggest corporations in 2017. We're now looking at an additional $4.5 trillion in tax cuts, which are making their way to, again, the richest and to the biggest corporations. That is debt, and that is something that I don't know about yourself and others in the administration who refuse to see that kind of debt. And the almost unbelievable piece of this is the IRS 2024. We invested in it, able to recover more than $1.1 billion from roughly 1,600 millionaires. Projected at the time that investments in high-end enforcement data and analytics that an additional $851 billion would result in revenue over the next 10 years. The Inspector General has said IRS lost 30% of auditors under Elon Musk's illegal purge. People who are wanting to ensure that millionaires and billionaires are paying their taxes. And the issue is that we're going to pay for those taxes by taking it out of the hide of Medicaid and of children, of low-wage workers, and of seniors. The issue that I want to try to get to, I'm going to make another point, is your comments on your recent comments that seem to call into question the vitality of the textile industry in the United States and national security. I applaud the administration for the steps they've taken on de minimis and closing down that loophole. I think it was very, very important to do this. We need to go further. It needs to be applied to all countries, not just to China. But unbelievable commentary on the U.S. textile industry provides good jobs across this country, particularly in rural areas. The supply chain directly employed 471,000 workers, produced roughly $64 billion in product in 2024. Let me get to my question with only 2 minutes to go here. This is the dealing with standing up for a mechanism in the U.S. to screen our investments in China, to ensure capital, technology, and know-how are not fueling the capabilities of the Chinese Communist Party. I've had a bipartisan bill to do that for years, helped negotiate a bipartisan bill that nearly passed last year. And I strongly support executive action to address the issue. In fact, we got appropriated funding from Treasury to implement the executive order on outbound investment. Mr. Secretary, I understand that the administration is currently reviewing the executive order. There's a clear bipartisan consensus on the need for an outbound mechanism of that screening regime. Let me ask you, do you support the implementation of such a regime?
Thank you, Congresswoman. This is a very important issue. The Outbound Security Program is an important new tool in our effort to restrict the PRC from exploiting U.S. investment. The program just began a few months ago, and we are learning and we anticipate gaining important visibility into U.S. persons' investments involving PRC entities. We appreciate the interest from Congress, and while legislation is important and helpful, I would like some time for our process to inform any legislation. We would like any legislation to be both flexible and durable.
Well, you know, in your confirmation hearing in January, you noted, and this is a quote, "We should have a very rigorous screening process for U.S. investments in key sectors that could go to China." And in March, you said, "We will make sure that our outbound investment doesn't get used against us. We are going to continue investigating this and where necessary to block it." I heard your answer, and quite frankly, it sounds a little bit wishy-washy. I want to be clear about this. You have expressed support for outbound investment for months now. Has that changed in any way? What's the status of the administration's review of that order? What about the timeline on this, because it's an important issue? And can you commit that your department will enforce this executive order to its fullest extent?
I have not changed my position. As I said, we are looking at what is working, what isn't, and how the best enforcement mechanisms. And when a bill comes forward, again, we want it to be fulsome and durable, and a 2025 bill for all the nuance that goes with this.
Well, I'm out of time, but please understand, we have bipartisan support. It made it into the continuing resolution, but for the influence of Mr. Musk, and it is critically important for our competitive edge. And I don't believe there's any reason for the administration to roll back. My hope is that we will move forward and keep the pressure on in order to be able to preserve our competitive advantage and not cede to the Chinese communists.
We're in complete agreement.
Thank you. Thank you, Mr. Chairman.
I would not want to interfere with that bipartisan moment.
Okay. And it's bipartisan legislation, as you know.
I appreciate that.
Great piece of legislation.
And the chair will now recognize the gentleman from Nevada, Mark Emmett, for 5 minutes question.
Thank you, Mr. Chairman. Hi, Mr. Secretary. First of all, I want to thank you for your availability during this time since you've been confirmed and stuff like that. I know nothing's been going on that affects the Treasury Department in any way, and I appreciate having access to you via phone over an issue that wasn't important. So, thank you very much. I want to just ask you a couple of questions, kind of relative to our conversation, and that is, I know that the president has said quit producing the penny. A lot of reasons, arguably you lose 2.5+ cents for every penny you produce in Signerage, and you don't have to get up too early to do the math on that sort of thing. But I think in the timing of doing that, if we're going to eliminate the penny, which has to happen here, I would like to know who it is, who's kind of the point, the tip of the spear on your staff at Treasury. I already have the Mint information, but at Treasury, as far as those issues go, and I'll tell you why I want to know is, I think there are some issues regarding what it costs to produce a penny. I don't know if it's going to get you, I don't think it'll get you down to a cent, so it won't be that argument. But quite frankly, stacked up behind it is what it costs to produce a nickel and what it costs to produce a dime. I don't know about the quarter, but anyhow, to make sure that we are at least giving your department and the Bureau of the Mint the most tools necessary to, if you will, untie their hands when they're looking for who they buy their blanks from and stuff like that, that goes directly into what it costs to produce one. So my first question is, who's kind of in charge of that, since I know you've got other things to do, but ultimately, so that we can start that dialogue with where do we go from here, and if we're going to get rid of, and I know there's been legislation introduced in the Senate to get rid of the penny altogether except for collectors. So who's the point man or woman on your staff?
Congressman, it would be my recently confirmed deputy, Mike Faulkner.
Okay.
And I would also say, with the nickel and the dime, the nickel costs more than a nickel to produce, but we are looking at material changes in the materials that would reduce the cost to or below a nickel, and then I believe the dime is profitable.
Fuck.
And I guess that brings me to there is legislation. You might want to warn your recently confirmed deputy. H.R. 1278, bipartisan, gives you guys the chance, without coming to us every time, to basically make changes in the metal of that sort of stuff so that you can keep ahead of those sorts of things. So if you would, unless it's sitting here, whatever, it's like, hey, we're going to be calling you up. The idea is to solve the problem if it's solvable and move on from there so you guys can do other things with your time.
Yes, sir. We've been reviewing that.
Good. Glad to hear that.
So have you taken a look at the Senate bill that says no more pennies? And I guess other countries have rounded up to the nearest 5 cents. And my research says, well, it wasn't the end of the world, so.
Well, sir, we are also encouraging rounding down.
Okay, that's good. Great answer. You know what? I'm going to reward good performance. I yield back, Mr. Chairman.
Certainly appreciate that, Mr. Amidei. I understand you have the hard stop at 11:30. I'd like to honor that. I want to be fair to my fellow committee members, though, in doing so. Not all of us will be eligible for a second round, but certainly my ranking member, Mr. Hoyer, would request that he have a chance to ask you another question before the stop.
Mr. Secretary, first of all, let me say that I believe the Congress is being taken for granted in the policies being pursued. I think, frankly, some illegal things are being done, not by you. I'm just talking about the administration in terms of federal employees. I represent 77,000 federal employees who came here to work for the government, and that's why they're here. I've worked very well with Republicans throughout my career, which is now in its 45th year. I want to do that some more because I think that's the best sense of the country. I believe you're one of those who has a shot at keeping us on a somewhat even keel. I mean that as a compliment, but obviously it's also a concern. When you say, and I want to reiterate this, that we have a spending problem, and I retort to you, no, what we have is a paying for problem. If I make $1 million, I can spend $999,000 less taxes. But if I make $500,000, I spend $1 million. That is a paying problem because I don't pay for it and I accumulate debt. That's how debt goes. Now, I was here in the Reagan administration some period of time ago. We were told that the tax cuts that were passed in 1981 were going to pay for themselves. They did not. It perhaps will surprise you, maybe you know this figure. The largest increase in the national debt was under Ronald Reagan, the only president who had a triple-digit, 189% increase in the national debt during the course of his term. It might also surprise you that Clinton is the only one who was 30% or lower since Ronald Reagan. Clinton is the only one who balanced the budget. Now, one of the reasons we did so is because we had bipartisan objectives. The Republicans wanted to cut taxes, which is their mantra, and we wanted to invest, as we call it, as opposed to spending, in children's education and people's health care, in safety, et cetera, et cetera. If we continue this logic that we have a spending problem and discount taxes as spending, when we did the tax increase under in 2017, you may recall, the Republicans gave themselves a $1.5 trillion headroom. The reason it was limited to that is because the senator from Tennessee wouldn't go higher than that. So in other words, a $1.5 trillion unpaid for headroom to give a tax cut. That is spending because you're cutting prices while increasing costs. That's what causes deficits. Some of my Republican friends, I'm a strong supporter of national defense, but I do not delude myself that raising $150 billion in national defense expenses don't cost taxes. We don't have $150 billion to either cut taxes with or to spend money with, so we borrow.
And when my friend talks about hypocrisy, we all know if you spend more than you get, you go into debt. And that's what we do as a country on both sides of the aisle. And we need people like yourself to be honest with those with whom you work and honest with the Congress of the United States in terms of the ramifications of the actions. I know you are a strong supporter of permanent increase. You're not a strong supporter of paying for it. And you can cut all of non-defense discretionary spending, and you won't get there. And this game that Mr. Musk has played, he had no sense of the ramifications of the actions he's taken. He knew how to do it. He was prepared. As one article in the Atlantic Journal said, the blitzkrieg, which our speaker calls flooding the zone, been pretty effective at that, just trying to watch where the ball is and see if you can respond. But, Mr. Secretary, I have a lot of questions. I'm going to send them to you, ask them to you, and I would like to take some time with you on that. I have great respect for your background and your abilities. And I am really praying that you will bring a voice of reason and rationality to our deliberations. My time is over, and I appreciate the chairman's forbearance. But this is serious business. Very serious business. And I agree with you. A $37 trillion debt is not sustainable. And we all have to do it, but we have to do it together. That's the only way it will get done. Thank you, Mr. Chairman.
Thank you. Do you have a response, Mr. Secretary?
Congressman, thank you for that. And I would note that while President Reagan substantially increased the defense budget, the Clinton administration was able to capitalize on the peace dividend. But as you said, the defense budget dropped dramatically post the fall of the Iron Curtain, which contributed to the fiscal soundness. And through, as you said, through bipartisanship, working with Speaker Gingrich, they worked together. So I would hope that we could do that again.
Which, by the way, cost Gingrich's job. The right wing of his party was incensed that he did that. And what it did was had a rational policy because both sides participated.
So, the senator from Tennessee is actually my neighbor. So I see him quite often. And look, there are ramifications here. And
you're not talking about any current senators from Tennessee. He's left.
No, I know.
Yeah, okay.
Senator
I
Corker.
want to make sure we had the right Tennessean.
Senator Corker.
Yes.
Yes. Is my neighbor.
Uh-huh.
So, and I look forward to inviting a bipartisan solution.
Thank you, sir. And with that, our time is concluded. I'd like to thank you, Secretary Besson, for being here today. There may be some members, as the Ranking Member Hoyer has indicated, who have questions. We're going to submit those questions for the record. And we ask any of the, please submit those questions to the subcommittee staff within the next 7 days. I would ask that you try to respond to them within the next 15 business days after receipt. Thank you. With that, the subcommittee stands adjourned.
Thank you.
West. I think what we're doing differently from a positioning standpoint is, number one, we have a broad, diversified global business. So I just think that we're giving investors a lot of choice as to where they want to play and what risks they want to take. As probably one of the pioneers or leaders in private credit, we're one of the few managers that actually has a track record that goes, back 20, 30 years, where people can see how we've performed through cycles. And then, as we often talk with investors, if you look at our private credit strategies today, broadly across real assets and corporate, we're generating 12 to 15% rates of return right now. So on a relative value basis, I think with this amount of uncertainty on the forward path of earnings, valuations, I think most investors are just finding it, frankly, easier to take shelter in the credit markets and make those kind of low to mid-teens returns without having to worry about that equity risk premium.
Right. What's fueling that return? Is it because rates have remained higher ultimately?
Yeah, it's clearly a reflection of the base rate environment. Rates are now starting to drift down, as everybody knows, but as they are and concerns about economic weakness are seeping in, credit spreads are starting to widen out. So while rates are coming down, I think people felt the asset class was going to be much more rate sensitive than it actually is, because we're making up for that reduction with credit spreads widening.
As I talk to you and your peers, I can't help but think that there might be actually around the corner, in the wake of some of this turmoil, a golden opportunity that's forming to deploy larger and larger dollars, given how much valuations have corrected.
Yep.
What does that opportunity look like?
Yeah, look, I think we now, having been in business for 30 years, have seen that we actually have grown faster through periods of dislocation. So the fastest growth we ever had was through the GFC in terms of our profitability and our AUM. Second was through the COVID pandemic. And that's a combination of just the unique structures that we manage, the capabilities that we have. So typically, whenever we have volatile markets or dislocation, it creates opportunity. What's unique about this moment is the amount of investments that have already been made in the private markets at high valuations that were reflecting the lower rate environment is of a magnitude that we haven't seen before. And so the resolution, if you will, of all of those assets that need to reset basis, we think is going to be a massive opportunity in places like secondaries, opportunistic credit, opportunistic real estate. So, around the halls of Ares, we're actually quite excited about the future.
So secondaries is a good place to dive in for a moment here, because you are seeing a lot of limited partners looking to sell. Some of that is their own liquidity concerns that we're hearing about, but also, Mike, the private equity industry has been holding on to assets for years. The IPO window has not opened in a meaningful way. This was supposed to be the big year. Didn't happen, not really yet. Yep. M&A also pretty stalled. What does that mean for the private equity industry? Can they keep borrowing to keep the party going?
I think they can. I mean, the financial incentives in private equity are aligned to long-term equity value creation, and that may require holding these assets for longer. There's a real tension in the market now from limited partners who want to see a return of capital before reinvesting. But the opportunities for liquidity have gotten much more innovative and creative and complex. So if you're a private equity GP, today the entire market, there's about $3+ trillion of private equity invested. 60% of that private equity is 4.5 years old or more. There's about $1 trillion of equity that has not been invested. And so the challenge that the private equity industry is facing is, do I take my $1 trillion and invest it into this new market where there's probably good opportunity, or do I use it to support valuation and growth in the existing portfolio? But you can't do both, and that's where secondaries comes in. So we're seeing significant demand from the GP community as well as the LP community to kind of figure out how to recapture some of that $3 trillion and get it back to investors.
If you had to describe that tension between investors and their private asset firms, what is it?
I'm not sure there's a tension. I actually think that most sophisticated LPs, which is largely all of them, understand the world that we live in, and I don't think that they want to see assets getting monetized at valuations that don't reflect the intrinsic value. That being said, they want to participate in this new vintage. And so if there's a tension, it's really, how do I capture this wonderful opportunity set that you just referred to without compromising value creation in the existing portfolio? And that's just a dialogue, and GPs and LPs are all going to be in a, different place, depending on their liquidity or the age of their portfolio or, frankly, the performance of the underlying.
It's certainly the topic of the day, and Ares is right in the middle of it. Mike, we have to leave it there. We thank you so much for joining us here on set. That is Mike Arrighetti, of course, the CEO of Ares here at the Milken Global Institute.
All right, that was Shonali Basak speaking to Michael Arrighetti, Ares CEO. Much more coming up from Milken throughout the next couple days. Amazing interviews coming from our team there. Let's get you caught up right now with a Bloomberg Business Flash with the amazing John Tucker.
Thank you very much, Alex. Right now, the major averages, they are lower. You have 8 of the 11 major industry groups in the S&P 500 down. Healthcare, the biggest drag. Yeah, that's home to Vertex. Their first quarter earnings missing close of the session, though, after the Treasury Secretary, Scott Bessent, said a lot of countries have good offers in the trade war. Again, he said some deals may be announced as soon as this week. Meantime, Jeffrey Rosenberg at BlackRock says investors are still grappling with uncertainty.
We're, having a nice little rebound from the April, Liberation Day surprises, and we're not out of the woods in terms of the uncertainty here, and it's tough to measure.
Palantir Technologies shares sliding by the most in nearly a year. Its financial results and projections.
Okay, caught up with real work. Got a call to make. Got to call a guy real quick in a second, but looks like we're just hammering along this trend line here, waiting for a reversal. There's no long here, I don't think. I don't know where the entry for a long would be. If you want to play the pullback, I really like this zone for the pullback. A lot of resistance here. We get a pullback in here, maybe looking for the long, but you got to remember this is where we get caught. So if the EMAs cross, if it's a quick pullback and the EMAs don't have a real high degree of slope facing each other, like the cross is imminent, then that may be the continuation to go higher, like quick pullback higher. But if it just rolls over and plows through, then we're going to be looking at front running the short on the EMA cross. That's kind of what we're looking to do today. So, all right, I got to make a quick call and then I'm free for a little bit, so I'll be right back. Looks like Trump is going to sit with the new Prime Minister of Canada. So I hope we don't have a Zelensky incident there. The trade issues seem to be
and not provoke the president, because that I think he knows where that would go.
Kind of a contentious point. But, all right, be back.
Carney, who's a technocrat, builds himself as a problem solver, likely wants to dial down the temperature between these two leaders, because in just over a month from now, Carney will host the president at the G7 in Kananaskis. So the two will likely want to, make bygones be bygones, have this constructive relationship ahead of that G7 when the president is on Canadian soil.
Do we know for sure that the president is going to that G7, Richard?
He hasn't said he isn't. So we just have to go on the assumption that the president will be attending, along with his entourage, Secretary of State Marco Rubio, et cetera.
Okay, that's good to know. The last time that the president was here for a G7, it didn't go very well. It went well until it didn't, and he left and was very upset. Okay, I am seeing the official photographers for the Prime Minister there position themselves behind a tree, behind a shrub, as they wait for the Prime Minister to pull up. We should tell you that the Oval meeting was set to be at 11:45, so things a little bit delayed. Obviously, Paul?
Delayed. We've seen this before. We're told it'll be at least another 5 minutes before the Prime Minister shows up. For what that's worth, we'll see. I would say a couple of things based on what you and Richard were talking about. I mean, we see the posts on Truth Social a lot. This is Trump, right? I mean, again, back to his sort of historic negotiating strategies. Shoot for the stars, maybe end up with the moon, right? Punch hard, slam the door, make noise, break dishes, and see what you get. Maybe you get everything, maybe not. But the harder you push, the more you're going to get. So there's that. At the same time, as we've said throughout the morning, Trump has been, I don't know what the word is. Generous is maybe going too far, but he's been softer on, certainly he's been softer
Polite.
on Carney
Yeah, he's
than he
been
was on
polite.
Trudeau,
Yeah.
obviously.
Yeah.
He's been polite. That's a good word. He's
Yeah.
a a very nice man, a very nice
Yeah.
gentleman, I think he
Yeah.
said. So how do you, that versus the Truth Social thing we just saw, where are we going to end up on this? I think one of the things that Carney and the rest can say that they really want out of this meeting, as much as anything else, is clarity. Like, where does this go? Like, what is the thing that you're looking for? I mean, fentanyl is an example of that, let's say, right? Like, what is it, what do we have to do? It's not saying we will do everything you say, but what is it that you're looking for? And again, this gets back to the explaining of the $200 billion subsidy versus, and what does that actually really mean? I can hear some sirens going now. Maybe that's just DC. So I think clarity is an important goal for the Canadians going in there today. Whether they'll get it is another matter, because as much as Trump may put this out on Truth Social before the meeting, who knows what he'll put out afterward.
Right.
All the more significant then to hear what Mark Carney has to say at that 3 p.m. Press conference at the embassy, which of course will be after all of this plays out, most of which will be behind closed doors at that working luncheon after the spray in the Oval.
But just to go back to the substance here, this is really the first time now that Canada has been able to engage with the U.S. administration for more than 5 or 6 weeks, right? Because of the election, everything was on pause to some extent, although there were moments when the Prime Minister paused his campaign to respond to the president. But all of that campaign, there were conversations about this moment, about getting to this space where this meeting could happen, some sort of negotiation could take place. So to your point, Paul, about clarity, the Canadian economy has sort of been on pause in many ways, waiting for something to move. So whether or not there's progress today, I think a lot of businesses and business people will just be reassured.
Okay, so we're getting a little bit of a pullback here.
The beginning.
Kind of challenging my zone.
At least there is the potential for some sort
So we're looking to either front run the short or to see if this zone holds up the price. We're not in a hurry to get in. You were on TikTok. TikTok's addictive, SM. You got to be careful with TikTok. It'll suck you in. I don't really do anything on TikTok. 1041.
Which gets back to the, don't expect white smoke comment.
That's right.
This is literally the beginning.
Oh, your time. That'd have been 11:41 my time. Okay. Yeah, if this, I could see that.
I guess, that led to the
Yeah.
Kuzma. They went on.
You'd have crushed that too.
Right. There is not a.
All right. So this is probably a continuation long, to be honest with you.
It is meant to be a beginning on the right foot.
I kind of want to go long here.
Amicable relations to make sure everybody understands.
Of course, it hit my zone and went long without me.
Hoping to get out of this. Those would all be victories coming out of today for both sides, in fairness. Trump could say, hey, we've established a path forward on this. We've got some more talks to do, but everybody seems willing to make it a go. That arguably is a win that Trump could point to, as we see people still waiting for Trump to come out the door. But there's lots of ways to frame this or spin this as a positive for both countries, even simply by saying we have begun.
Yep. Okay, we are told the Prime Minister is about 10 minutes out, a little less than 10 minutes probably at this stage. So my belief that he was a punctual Prime Minister has perhaps fallen apart now on his first visit to the White House, but we'll stand by and bring it to you as it happens. Catherine Cullen is also joining us here in the Ottawa Bureau, of course, the host of the House, and my colleague, to give us some perspective about the Canadian side. Catherine, I mean, just to what I was saying there to Paul, this is sort of the moment after the election that the Prime Minister was waiting for to begin.
So the pullback into the zone would have been good for a quick long.
Engagement will happen is certainly something.
So now we got to look at, are we going to transition to the short or are we going to continue back to the trend line? That's kind of what we're considering here.
About what the expectations are for Mark Carney going into this. That on the one hand,
because Canadians are so angry by and large, opinion polls reflect this, with Donald Trump for this 51st state talk, that even a worst case scenario where, Mark Carney got sort of a Volodymyr Zelensky type treatment, that Canadians would ultimately side with their prime minister because of this swelling sense of patriotism. The other very different perspective on this moment is certainly conservatives, some of whom are trying to set the bar quite high for Mark Carney, saying, listen, this was your pitch. It all comes down to this. You've got to deliver now. You see Andrew Scheer, who may or may not be named interim leader of the party, or interim leader in the House of Commons, I should say, while Pierre Poilievre seeks a seat, has said that from where the Conservatives sit, the bar is either Mark Carney getting the tariffs dropped today or coming out of here with a concrete plan that spells how these tariffs will be dismantled. And that is a pretty high bar. The Prime Minister himself has said there's really two things going on when he has these meetings. One is this question of the trade war and trying to address that, but also this broader set of negotiations. And he has been signaling this for some time. This is where he wants the conversation to go. This is not just about renegotiating CUSMA. It is about both the economic relationship and the security relationship and what that looks like going forward. I think it's fascinating, too, to think about this 51st state question, Rosie, and how the Prime Minister might handle that if Donald Trump were to raise the issue in the White House, right? This question of whether Mark Carney needs to stand up for Canadians or not provoke Donald Trump. And I was thinking back to where this started politically for Mark Carney. And you have to remember at the beginning of his leadership, he had that surprise appearance on The Daily Show with Jon Stewart. And part of, I think, what attracted a lot of attention around Mark Carney was not just that stage, but the way in which he handled those questions. He used a lot of humor, right? He was joking around with Jon Stewart about how, we don't want to move in with you, but we could be friends. Maybe we could be friends with benefits. And it is that perhaps the use of humor, but just navigating a challenging moment, finding a way to sort of come out of it on the upside that is very much, we think, going to be tested today. Yeah, I was thinking about that too, about the Prime Minister's sense of humor and whether he would use it in this moment, and then how that would go over with Canadians. I think Donald Trump. And Donald Trump. Yeah, I mean, I think that's the kind of delicate dance there for the Prime Minister, if it gets raised at all. Who's to say if it does? The other thing, and just want to bring people up to date here, Mark Carney is not, this is not Mark Carney's fault that he is late, apparently. The delay is on the American side, and the Prime Minister is in the car. He's ready to go, but he has to get the green light from the White House that he can pull up. So just so you know, that's what we're being told. He will arrive in just moments. The other thing I was going to bring up there, Catherine, was the fact that the Prime Minister, in managing expectations, has also sort of laid the ground for, if this goes badly, if the President is not interested in a conversation, the Prime Minister has said, okay, we've got other things to do. Like, we've got other people to talk to and other plans to help Canada. Not all of our eggs are in this basket, is the other way he's been framing this. In a few different ways. One line that we heard a lot during the campaign, we can give ourselves more than anyone, Donald Trump, the Americans can ever take away. That comes down to things like dismantling interprovincial trade barriers, but also, Rosemary, you and I were both on Prime Minister Carney's first trip, right? Very purposeful, yes, the symbolism of meeting with, going to the UK, going to France, going to Iqaluit and talking about the founding peoples of Canada, but also very much about sort of setting out his stall that we can build these other relationships, we can strengthen these other relationships. Now, all of that said, and I do think, the election reflects that there is clearly some appetite in this.
All right. So here's our short opportunity.
You mentioned it earlier, Rosemary.
So I was on banging away on the computer.
Concerns of so many Canadians on his shoulders, and we just have to.
We got this rotation up, so I'm wondering if this rotates up and then the real short comes across.
Washington today, and speaking to people in the film and television industry who are just sort of bowled over by these comments out of nowhere from Donald Trump, where he's suggesting that perhaps there could be a 100% tariff on work that is done outside of the United States.
But this is how you can get wrapped up in a continuation long, but it's really a transition short. So I'm not going to go short here. I want to be short up here at the 20. So if we get a quick spike up, I may get in up in this zone. So this zone is no longer any good, but this zone, like right here, if we get a quick shoot up, then I may get in up here.
Carney's pitch during the election. He had
But
his
there's the
line
short.
used a
We
few
missed
times
it.
where he said,
Fuck.
I'm good in a crisis.
No
I'm good
FOMO.
in a crisis. He joked.
Because we
I'm not
get down into the
necessarily
VWAP and things
in
can
the
get
wrong.
funny. So
But that word crisis was so essential to his pitch to Canadians. And, the pressure is on now, as it perhaps, well, certainly has never before been in his lifetime. I'm sure during the 2008 financial crisis, I'm sure during Brexit, the pressure felt enormous. But this is, the stakes are so high at this moment.
Yeah, and it is different when you are elected, right? When you are versus being a public servant. It is different when you are going to be held to account.
All right.
Canadians. Richard, I think you have an update.
So let's just kind of see.
Incremental minor update.
You think this is the short entry, SM?
Vantage point, Rosemary, but the gate is open. I can see an SUV at the top of the driveway with a Canadian flag.
I'm just worried about these stochastics making one more rotation and then the real downward is coming. But the short was really the short. You know, if you were going to front run the short, you would have been in already. Let's see what happens with this next candle. Yeah, I know. I know. That would have been perfect.
You can see the president now at the door, Richard, just so you know. Donald Trump is at the door. Mark Carney.
Yeah.
And from your vantage point, you can see the motorcade arriving. That's great. So things are happening. The Prime Minister, again, his first visit to the White House as Prime Minister, not his first visit as he's been there in other capacities, we understand, and also not his first time meeting Donald Trump. They've also met before in previous capacities, but not like this and not under these circumstances. The U.S. President posting to Truth Social just moments ago that he doesn't want to, quote, subsidize Canada any further. Okay, here is the arrival. There you go. That is Prime Minister Carney arriving at the White House, the U.S. President welcoming him there with some questions being shouted, no answers being given. Handshake went fine. Off they go into the Oval Office to see where things go. There you can see also the cabinet ministers arriving, the ambassador, some of the clerk of the Privy Council, the chief of staff right now, Marco Mendicino, and some other officials also accompanying the Prime Minister on their delegation, some of his directors of policy and other aides there with him as they make their way into the White House to begin these conversations, the important conversations between the President and the Prime Minister. The next thing to happen will be the Prime Minister and the President inside the Oval Office.
All right. So we're starting to get our rotation up.
And we will eventually hear from the Prime Minister directly at 3 p.m. Eastern Time at the embassy, where he will take questions. As David said, the Prime Minister wants to be the sole Canadian voice on this issue today. But Paul Hunter is there too. That looks like a pretty friendly greeting there, Paul. I'm not going to try and interpret body language.
Shall we analyze it?
No, let's not. But you do know when things go wrong, and they did seem genuinely happy to see each other.
Yeah, I mean, I don't want to draw too fine a point on it, but it was a friendly greeting for Vladimir Zelensky as well. That is not to say it's going to go the way of that one went, by no means. This is standard fare. It is a part of the process. It's staged, it's choreographed, and now it really begins. Well, it'll begin soon enough. They walk into the foyer, make their way to the Oval Office, which is just a few steps.
All right.
And then, interestingly, as we've been noting this morning,
No FOMO. That's right. No FOMO. We gotta wait. This is we're not ready yet. FOMO alert on SM.
Be polite and generous without having to give details of what they talked about.
There is no FOMO.
Where they hope this to go, and then take questions. Pointed questions, one hopes and presumes. And by the way, just to keep expectations where they are, the questions may or may not be all about Canada. It's a chance for U.S. reporters and other reporters who are in there from other countries to ask the President or Mark Carney anything they choose. But we should hear a lot on the expectations of Mark Carney and Donald Trump for that working luncheon that comes ahead. This is a big moment for Mark Carney. And, you're right to say
All right.
He wants to be the guy on this. He is the prime minister.
All right, I'm just going to watch these stochastics here for a little bit and see how they act
in Ottawa, that he wants to get things done
before I decide where my entry is going to be.
His chance to make headway on the biggest thing on his plate right now, which is the Canada-U.S. relationship. And he is in the room with the president. This is that moment for that to begin.
Yeah, a critical moment for him and for the country as the Prime Minister tries to reset the relationship between the two countries after, of course, the departure of Justin Trudeau, a taxing election where this was very much the issue that was top of mind for so many Canadians, and the expectations that they have with this Prime Minister are real. Katie Simpson is on the White House grounds now, too. Katie, give us your sense about how you think this might unfold between the President and the Prime Minister. Oh, I can't hear you, Katie. There you go.
Oh,
there
we go.
Gotcha now.
I expect things are probably going to move very quickly. So I've done a couple of these before, and as soon as that greeting happens, I actually saw the Canadian pool team. I believe they've been ushered into the building, so I would not be surprised if very soon we start to see a live image from inside the Oval Office once everyone is sat down and everything gets underway. And then, of course, we'll be having that moment where reporters will have an opportunity to ask questions of President Trump as well as Prime Minister Carney. The expectations on the Canadian side versus the American side are somewhat, the goals are somewhat different, but expectations all around have seemed to be set low. And, in the moments just before Mark Carney was scheduled to arrive, Donald Trump posted on his social media page an idea, a suggestion of where he's going to go in this conversation. And we can actually pull that up for you. It says, "I look forward to meeting the new Prime Minister of Canada, Mark Carney. I very much want to work with him, but cannot understand one simple truth. Why is America subsidizing Canada by $200 billion a year, in addition to giving them free military protection and many other things? We don't need their cars. We don't need their energy. We don't need their lumber. We don't need anything they have other than their friendship, which hopefully we will always maintain. They, on the other hand, always need everything from us. The Prime Minister will likely be arriving shortly, and that will be most likely my only question of consequence." So Donald Trump is setting the stage there to air his long-standing grievances with Canada. He throws around that $200 billion number. The number has changed from time to time. He's specifically talking about the trade deficit. Canada does have a trade deficit with the United States when it comes to sales and energy, because Canada sells energy into the United States at a discounted rate. But if you take away the energy, there's actually a trade surplus for the Americans on goods and services.
All right.
This is a long-standing point of
Starting to feel like it's going to flag out.
He is angry that, Canada and the United States, Canada does not put as much money into
keep watching. Let's keep watching.
Allies have. Sometimes the way he describes it, he talks about it as if it's paying a fee. It's not sort of how NATO works. Countries agree to pledge a certain percent of GDP. Right now, it's 2% of GDP toward defense spending to be a part of the alliance. Canada does not meet that target and has not met that target. So that is something that Canada has said it will work toward. It is something that a number of American administrations have brought up. It hasn't just been the Trump administration, though this is something that Donald Trump really seems to focus on. But if that Truth Social post is any indication, Donald Trump is prepared to possibly have a very difficult discussion with Mark Carney about the grievances that Donald Trump has so very publicly spoken about in interviews, on social media, not directly to the Prime Minister's face, as could be the case here. But again, predicting how Donald Trump is going to behave, you can't do that. You just have to watch. That's the only thing you can do in this moment.
Yeah, I mean, I also take some encouragement from that Truth Social post, and maybe that's because I'm naive, Katie. I mean, he says he wants to work with Mark Carney. He says that we have each other's friendship. Hopefully we can maintain that. There are some signs of positivity here, and we should point to those as well. I would also remind Canadians that the Prime Minister campaigned to get to that NATO goal of 2% before the previous government did. So perhaps he will have that to say to the President as well. Because as you rightly point out, when the president talks about that $200 billion, he is likely also including the military spending, which has long been a problem for the United States. And I wonder, I'll let you go after this, but whether you think a promise or being able to point to an accelerated spend on the defense side by Canada would be something that would be welcomed by the president. Maybe not enough to talk him off everything, but certainly a point that would be.
Yeah, that's what we're watching. We're watching to see if we reverse to go long, and if we do, we're close to the entry right where we are. Yeah. So, you know what? I'm going to go long right here. I'm going to take it. I'm going to front run the long right here.
That is something that Donald Trump always wants. And that is sort of a baseline of what Trump is always trying to achieve, something he can point to as a victory. The other thing
I'm in long.
Social Post, though, is that it's the trade talk that worries so many auto workers and people who work in different sectors when he says we don't need their cars. He very openly talks about what his goals are when it comes to the tariff agenda. He wants to take jobs even at the expense of other countries, even at the expense of allies, if it is the case, and bring good-paying auto jobs, good-paying manufacturing jobs back to the United States. Now, the way the Trump administration has sort of talked about some of those jobs, it's unclear of what the bigger, bolder vision is. You know, Howard Lutnick, who's the Commerce Secretary, has said on a number of occasions that, listen, we're going to build these state-of-the-art factories, and there's going to be a lot of robotic technology, and the good jobs are going to be people maintaining the robots, those kinds of things, and building the factories. So, you know, it is mixed messaging, but at the end of the day, Donald Trump is openly talking about how he wants to bring more jobs, grow jobs in America, even if it's at the expense of allies and other countries.
Yeah, good points, Katie. Thank you for
I'm
that.
front running long. Let's see if we can make it happen.
Washington, go over to Paul Hunter now, who also has a thought. Paul?
Hey, Rosie. Yeah, a couple things. I'm just watching on our monitor off screen, by the way, the camera pool that is gathering outside the Oval Office. So that's, I guess, evidence that this will be carried live. If that was in doubt, oftentimes these things are what they call tape turns. They go and they record it on videotape and then bring it back and play it back live. So we will expect to see this, and they are gathering now. Sometimes I've seen this before. They can stand there for 5, 10, 15, 20 minutes, so don't get your hopes up that it's imminent. But they are gathering. And I would also say a message to our control room, not to be careful with the audio on these things, because sometimes the camera people are chatting about what they had for dinner last night, so it can be complicated. Anyway, picking up on some of the stuff that Katie was talking about, I mean, it's worth remembering that, I mean, Mark Carney himself said this will be a difficult.
No, just got snapped.
Right? I don't think anybody's kidding themselves, right? And it's also we've talked a lot about what Donald Trump needs to get out of this, but like, you know, you talk about what Mark Carney campaigned on. Effectively, it's to stand up to this guy, right? So people watching in Canada, this is where he puts his money where his mouth is in many ways, while being mindful. I think they're about to walk in, so I'll be very brief. To be respectful, but to be forceful. Generous, but not unctuous, right? To get things done, which is the bar that Mark Carney has set for himself. As I think now the crew is going in to the Oval Office, it's very bright here, and I think, at least by my mind, you can see it. I don't know if you can take it up there, but I see them sitting as we speak. There we go.
Okay, we're going to listen in here a little bit.
All right, we're going to get break even. We kind of are.
Okay, there are cabinet officials, secretaries, and ministers on each side of the leaders there as they wait for the cameras to come in. We'll see what the two men have to say to each other. To Paul's point about things. We'll listen in.
It's a great honor to have Prime Minister Mark
Stopfeld
with us. As you know, just a few days ago, he won a very big election in Canada. And I think I was probably the greatest thing that happened to him, but I can't tell you what. His party was losing by a lot, and he ended up winning, so I really want to congratulate him. It was probably one of the greatest comebacks in the history of
order
politics.
canceled.
Oh, I just canceled my order.
But I want to just congratulate you. That was a great election, actually. We were watching it with interest, and I think spoke before the election quite a few times. And it's an honor to have you at the White House and the Oval Office. You see the new and improved
Order filled.
as it becomes more and more beautiful with love. Handle it with great love and 24 karat gold. That always helps too. But it's been a lot of fun going over some of the beautiful pictures that were stored in the vault.
Well, this isn't going good.
Many, many years, in some cases over 100 years. They were stored in vaults of the great presidents or almost great presidents, all having a reason for being up, every one of them. So it's very interesting. But I just want to congratulate you.
Order filled.
You ran a really great race. I watched the debate. I thought you were excellent. And I think we have a lot of things in common. We have some tough points to go over, and that'll be fine. And we're going to also be discussing Ukraine, Russia, the war, because Mark wants it ended as quickly as I do. I think it has to end.
Order filled.
We had some very good news last night. The Houthis have announced that they are not, or they've announced to us at least, that they don't want to fight anymore. They just don't want to fight. And we will honor that. And we will stop the bombings. And they have capitulated, but more importantly, we will take their word. They say they will not be blowing up ships anymore. And that's what the purpose of what we were doing. So that's just news. We just found out about that. So I think it's very, very positive. They were knocking out a lot of ships going, as you know.
All right. We're going to be doing all right in a second here.
On the edge of my seat, actually. But thank you for your hospitality and above all for your leadership. You're a transformational president, focus on the economy with a relentless focus on the American worker, securing your borders.
All right, let's see here.
Scourge of fentanyl and other opioids, and
Look at that.
and securing the world. And I've been elected with my colleagues here, with the help of my colleagues here. I'm going to spread the credit to transform Canada with a similar focus on the economy, securing our borders. Again, on fentanyl, much greater focus on defense and security, securing the Arctic and developing the Arctic. And the history of Canada and the U.S. is we're stronger when we work together, and there's many opportunities to work together. And I look forward to addressing some of those issues that we have, but also finding those areas of mutual cooperation so we can go forward.
Very nice. Thank you very much.
Mr. President, is USMCA dead?
No, it was actually very effective, and it's still very effective, but people have to follow it. So, that's been a problem. People haven't followed it. But it was a transitional step a little bit, and as you know, it terminates fairly shortly. It gets renegotiated very shortly. But I thought it was a very positive step from NAFTA. NAFTA was the worst trade deal in the history of our country, probably in the history of the world. And this was a transitional deal, and we'll see what happens. We're going to be starting to possibly renegotiate that if it's even necessary. I don't know that it's necessary anymore, but it served a very good purpose. And the biggest purpose it served was we got rid of NAFTA. NAFTA was a very unfair deal for the United States. Very, very terrible deal. It should have never been made. It was made many years ago, but it should have never been made.
I had the long right, but guess what? I got tore up before the long came. So I'm on to something here. And I'd be just fine right now if I didn't blow myself up yesterday.
Through the ranks, when he wasn't given much of a chance, and he ran a really great campaign. He did a really great debate. I think that debate was very helpful. I'm just going to raise my hand. I don't know if that's good or bad. I shouldn't say that. That might hurt you. But no, he ran a really great.
Yeah, I know. I know. I mean, we're so fucking close to having this thing figured out. It's driving me like completely bonkers, man.
He ran a really great election, I thought. And yeah, something could happen.
Or at least enough.
Yeah, please.
If I hadn't have done what I did yesterday, I would have had enough room to let that run a little bit more until that green candle, and I would have been golden. What a swing.
We're going to be friends with Canada. Regardless of anything, we're going to be friends with Canada. Canada is a very special place to me. I know so many people that live in Canada. My parents had
Yep, I know.
lived in Canada.
I know it was. The chart said it was. It's just,
I love Canada. I have a lot of respect for the Canadians.
whatever, man.
I mean, how good, the great one. You happen to have a very
But, you know, it's my fault I didn't catch the green because I blew myself up yesterday for no reason. And if I would have had that margin I could have played with, I'd have been fine, and I would have caught this long for about $3,000. So it's my own fault once again. But now it's getting a little crazy to be on the NQ. I think we might want to switch to the ES.
No, well, I still believe that, but you know, it takes two to tango, right? But no, I do. I mean, I believe it would be a massive tax cut for the Canadian citizens. You get free military, you get tremendous medical cares and other things. There would be a lot of advantages, but it would be a massive tax cut, and it's also a beautiful. You know, as a real estate developer, you know, I'm a real estate developer at heart. When you get rid of that artificially drawn line, somebody drew that line many years ago with like a ruler, just a straight line right across the top of the country. When you look at that beautiful formation when it's together, I'm a very artistic person, but when I looked at that beauty, I said that's the way it was meant to be. But you know, I do feel it's much better for Canada. But we're not going to be discussing that unless somebody wants to discuss it. I think that there are tremendous benefits to the Canadian citizens, tremendously lower taxes, free military, which honestly we give you essentially anyway because we're protecting Canada if we ever had a problem. But I think it would really be a wonderful marriage because it's two places that get along very well. They like each other a lot.
Well, if I may,
Did you come out ahead, or did you get snapped on the down candle before it went?
You know, Buckingham Palace that you visited as well, and having met with the owners of Canada over the course of the campaign last several months, it's
So,
not for sale. Won't
did
be
you?
for sale.
You were too early, like me.
The opportunity is in the partnership and what we can build together. We have done that in the past.
Right here.
And part of that
Did you get some, or were you green, or did you get wicked out?
is committed for a step change in our investment in Canadian security and our
Okay, so you're green. Okay, all right.
that the president has
I was in way too early.
international security, revitalized NATO, and us playing our full weight in NATO, and that will be part of it.
And they have. I must say, Canada is stepping up the military participation because Mark knew, you know, they were low, and now they're stepping it up, and that's a very important thing. But never say never. Never say never. Well, we'll be talking about different things. Look, you know, we want to protect our automobile business, and so does Mark. But we want to make the automobiles, and we want to, you know, we have a tremendous abundance of energy, more than any country. We have, just in Alaska alone, ANWR has been reopened now. ANWR is probably the largest find anywhere in the world. They say it's larger than Saudi Arabia. I don't know, but it's a lot. But we have tremendous amounts of energy. Other countries don't. We're both lucky in that way. They have energy. We have energy. We have more than we can ever use and more than we could ever sell, actually. And you have the same thing. So we're two countries that are very lucky. If you look at China, they
All
don't
right.
have that. You know, it's a big disadvantage. other countries, most countries don't have. Most countries don't have that. So Canada and us, we have a lot of advantages over other places.
When you consider what Mr. Carney just said, that Canada is not for sale, does this make the discussion a little more difficult to start on?
No, not at all. No, not at all. No, time will tell. It's only time. But I say, never say never. I've had many, many things that were not doable, and they ended up being doable, and only doable in a very friendly way. But if it's to everybody's benefit, Canada loves us and we love Canada. That's, I think, the number one thing that's important. But we'll see. I mean, over time, we'll see what happens. China.
I was hoping you could clarify something. Earlier this morning at Capitol Hill, Secretary Besson said that there had been no negotiations yet with China. You have said something different.
They want to meet, and they're doing no business right now. And those ships are turning around in the Pacific Ocean. Big turn. Those are big ships. Those ships take about 10 miles to turn. And, we lost $1 trillion to China on trade because of an incompetent president that we had who preceded me, grossly incompetent. You're finding it out more and more now. And by not trading, we're losing nothing. So we're saving $1 trillion a lot. But they want to negotiate and they want to have a meeting, and we'll be meeting with them at the right time.
But you haven't met with them yet?
I have not met with them. Of course, you would know if I met. I'd tell you they want to meet, but we are right now. Look, they're suffering greatly. Their economy is suffering greatly because they're not doing trade with the U.S. and they made most of their money off the U.S. Don't kid yourself. They don't make the money off other countries like this. And they were making. We had a trade imbalance. We had a deficit, or they had a surplus. Another way of saying it, of more than $1 trillion. Think of it, more than $1 trillion. And because of 145%, that's the only reason, but because of they have now 145% tariff, there's no trading. You can't trade with 145%. We are, therefore, making, in a certain way, I guess, $1.1 trillion. In other words, we're not losing $1.1 trillion. Our deficit...
On your eval? Is that on your eval or on your...
billions of dollars
on the funded?
That's rapidly turning around. We looked at numbers this morning. So we were losing the United
Eval.
States.
Okay, well, that's good. You don't have much more, and you'll have two of them.
I won't even give you numbers.
How'd you do? Are you back to even on the eval or on the funded?
A day on trade.
You got some of the pie?
Rapidly turning between the tariffs. Don't forget.
Trying to get set back up here.
25% on cars, 25% on aluminum, 25% on steel, and maybe more importantly, massive numbers of companies are moving into the United States. Honda, we have tremendous, the car companies are moving into levels we've never seen before.
Oh, that's okay though. That's overcome. You can overcome that.
Trillions of
you can
dollars.
overcome that.
I would say we could be at $9 trillion. You could go back to other presidents. They haven't had $1 trillion for their entire term. Look at Biden. He had bad numbers. People were leaving. They weren't coming in. They were leaving with Biden, and he didn't know the difference. The only thing he knew is people coming in. You know who they were? Illegal immigrants. Okay, from prisons, from mental institutions, from all sorts of places that weren't good, from gangs, from Venezuela. They were coming in and they were criminals and murderers. 11,888 people that murdered, and at least half of them murdered more than one person. This is what Biden led into our country. I'm bringing in big companies. We have Apple is investing $500 billion. We have Jensen, as you know, is going to be 500 biggest chip maker, chip thinker, I call him. He's really a thinker more than a maker. But we also have the maker, Mr. Wei.
All right.
I got to know them all in the last. It was a cram course, but they're all moving into America because of the tariffs, and I don't think people have appreciated it. Some people do. Some of the smart people do. So we have more money coming in. It's really an amazing thing. We have more money being invested in the United States now than at any time ever before in our history, and it's not even close. And I think the real number could be 9 or 10 trillion. We don't know everybody that's doing it. We have many. I just heard about a plant that's being built right now, a very, very top-of-the-line company. And they didn't come to the White House. They're just doing it because they're making it, because if they build here, there are no tariffs. And this is the big market. This is the market. That sets us apart from it. This is the market where everyone wants to be. Now, if I didn't come here and do this, all of a sudden we wouldn't be the market where everyone wants to be. So we're able to do it in time. But we're going to have a great announcement. And I'm not necessarily saying it's on trade. Going to the beginning, we're going to have a great announcement over the next few days, an announcement that will be so incredible, so positive. And I'm not saying, I don't want you to think it's necessarily on trade. Just to finish, we also have a situation, because everyone says, when are you going to sign deals? We don't have to sign deals. We could sign 25 deals right now, Howard, if we wanted. We don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market. They want a piece of our market. So we can just sit down, and I'll do this at some point over the next 2 weeks, and I'll sit with Howard and...
All right, I think we're on to something here. We just gotta focus and concentrate.
We have some good news to report on a lot of fronts.
I just reset. I just said fuck it and I reset it. We're starting fresh.
Put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal.
Looking for the crosses. Well, we had that cross right. I mean, I just got in too early, didn't have enough margin, and I added to it. So let's just do it right. Let's just do it right.
A little bit wrong, so we'll adjust it. And then you people will say, oh, it's so chaotic. No, we're flexible. But we'll sit down and we'll, at some point, in some cases, we'll sign some deals.
We're looking for the crosses. So we're about to cross to go short now.
Down a number and say, this is what you're going to pay to shop. And it's going to be a very fair number. It'll be a low number. We're not looking to hurt countries. We want to help countries. We want to be friendly with countries. But you keep writing about deals. When are we going to sign? When? It's very simple. We're going to say, in some cases, we want...
So we can cross either way, the way it's looking now. Looks like we've got support on the 200 to go higher. But we're outside of our volume band. So I'm going to hold on a few candles here. I got a fresh one, so let's just slow down. Because right now this is like a downward reversal. It's not, it's when the fast is moving down, that's the direction you're looking to go. You're looking to front run the short, but you've got all this resistance on the 200. So we kind of got to, let's just take a look here. And plus the NQ is getting a little crazy. I might switch over to the ES.
Whatever we want, or to bring whatever we want. It's very, very simple.
All right, we're just going to take a look. I got some leads to clean up.
We will sign some deals, but much bigger than that is we're going to put down the price that people are going to have to pay to shop in the United States. Think of us as a super luxury store, a store that has the goods. You're going to come and you're going to pay a price, and we're going to give you a very good price. We're going to make very good deals, and in some cases we'll adjust. But that's where it is, and we've been ripped off by everybody for 50 years, and we're just not going to do that anymore. We can't do that, and we can't let any country do that to us. We're just not going to do it anymore.
The deal that you've reached with the Houthis that you mentioned?
No, it's not a deal. They've said, please don't bomb us anymore, and we're not going to attack your ships.
And where did you hear about that?
It doesn't matter where I hear. The very good source, I could tell you. Very, very good source. Would you say Marco? I would say pretty good, right, JD? A very good source. They don't want to be bombed anymore, Sort of thought that would happen. We use it for certain things. We have the USMCA is a good deal for everybody. I won't say this about Mark, but I didn't like his predecessor. I didn't like a person that worked for. She was terrible, actually. She was a terrible person, and she really hurt that deal very badly because she tried to take advantage of the deal and she didn't get away with it. You know what I'm talking about. But, so, you know.
All right, guys.
We had a bad
Who's feeling the long?
relationship having to do with the fact that we disagreed with the way they viewed the deal. And
We're actually on the ES. We're in a short. If you look on the ES, there's nothing right now. There's too much volume, and Trump is talking. So I'm going to wait. I'm not going to mess up this eval. I think I kind of got this figured out now. I think I found a way to tiptoe through the nonsense. SM is looking to go long. I like the long too. There we go. Our trade boxes are on. Are you looking at NQ or ES? Snooze, you looking at NQ or ES? NQ actions, okay. Yeah, me too. NQ action looks okay. I think I'm gonna.
Canada decided not to shop in the American store as much as before.
All right, I'm gonna sit right here.
Well, we don't do
Order
much business
submitted.
with
I'm gonna
them
sit
at
right
the
there.
moment. They do a lot of business with us. We're at like 4%, and usually those things don't last very long. You know, we have great things, great product. The kind of product we sell, nobody else can sell, including military. Look, we make the best military equipment in the world.
Yeah,
in Canada.
we got our volume back now.
Our military equipment, which we appreciate, but we make the best.
The
military
action
equipment in the world
is
by far.
just
The missiles,
barely
the
tenable here.
Submarines, everything we have is really top notch. I rebuilt
Order
our
filled.
military
All right,
during
I'm
our
in.
last
I'm gonna
trips.
get in right
Typically, we
behind
gave
it.
some away
Hold
to
on.
Afghanistan, which shouldn't have happened, but that was, I think it was the most embarrassing moment in the history of our country. There was
All right,
just
I'm break
very
even.
incompetent people. But if you
I'm break even.
look, the man that's now the Joint Chiefs, he led
Target
the attack
filled.
All right,
on
first
ISIS,
target's
and
filled.
That's why he's the head of the Joint Chiefs. And Raising Cane, he was unbelievable. And as you know, we defeated ISIS in 3 weeks. It was supposed
I'm
to
gonna
take
wait for the
5
next
weeks.
candle
We did it in 3
to
weeks.
see if it's a good idea to add. I'm probably gonna go ahead and move this up a little.
I went to Iraq, and we agreed to a plan, and that was the plan. And as you know, we did it in record time. So we have the best equipment in the world. We have the best, a lot of things, and but Canada, it does a lot more business with us than we do with Canada. Yeah.
Let's go rotation up. Let's go rotation up. I like where my second stop is. Yeah, I'm long right now. I'm long. I'm front running the long. Yep, front running the long. That's the call. I'm front running the long. And I'm good. I already took profit on one. And I'm waiting. Okay. I'm way in right now. If the 50 turns into support, I'm going to add. I'm past break even. I'm way past break even. I'm at 1901 is my break even. Or 901, I'm sorry. 19901.
If you didn't have, and I don't want to be a wise guy, but if you didn't go with the DEI, if you didn't go with all of the different things woke, if you weren't woke, you couldn't even use the money. You had to have a certain percentage of this and that and that and that. It's impossible to have. The people, the companies actually complain to me. They say they gave me all this money, but nobody can get these people to do anything. I mean, look, President Obama, and if
I'm not going to touch it.
help, I'd give him help because I'm a really good
I'm not going to move my stop.
on budget. He's building his library in Chicago. It's a disaster. And he said something to the effect, I only want DEI, I only want woke. He wants woke people to build it. Well, he got woke people.
All right, next candle.
Cost overruns a job.
We break out. I'm good.
I don't know. It's a disaster. And I don't like that happening because I think it's bad for the president.
Move this up here. There we go.
He's got a library.
There we go. Oh, let me get that out of there.
Politically correct. And
Stop filled.
All right, I'm out.
Good, hard, tough, mean construction workers that I love, Marco. I love those construction workers. But he didn't want construction workers. He wanted people that like never did it
If
before.
I come back to the 50, I'll double dip.
Like millions of dollars, many, really many millions of dollars over budget. And I would love to help him with it, or somebody else. I could recommend professionals, but it was not built in a professional manner.
I'm gonna sit here and wait. Otherwise, I'm happy with what I got.
A little train going from San Francisco to Los Angeles that's being run by Gavin Newsom, the governor of California. Did you ever hear of Gavin Newsom? He has got, that train is the worst.
Order filled.
All right, I'm back in.
It's like,
I'm gonna go grab and get back to evening.
all right, we won't go into San Francisco. We'll stop 25 miles short. And we won't go
Okay, we're
into
working
Los
along.
Angeles. We'll stop 25 miles
I moved to
short.
break even.
It's hundreds of billions of dollars for this
Order
stupid
filled.
project that should have
Get
never
me out.
been built. And then they realized that it would have been a lot less costly if we just gave limousine service back and forth and gave it free. They would have saved hundreds of billions of dollars. They have airplanes that go there for one 1/100th the cost. And they have cars. They have a thing called the highway that goes back and forth. It's not fully utilized.
All right, I'm getting into break even.
With this project, and Gavin, you know, I always liked Gavin. I had a good relationship with him. I just got him a lot
Break
of water.
even.
You know, I sent in people to open up that water because
Stock
he
filled.
refused
All right,
to
I'm
do
out.
it. And we just got him a lot of water. If they would have had that water, and if they would have done what I said to do, they wouldn't have had the fires in Los Angeles. Those fires would have been put out very quickly. But if you think about it, and you got to take a look at this, it's the worst cost overrun I've ever seen. I've watched a lot of stuff.
All right, I went long twice. We're front running the long.
That's the worst cost overrun I've ever seen.
I'm gonna go again
Order submitted.
at the bottom of the zone. If it takes off without me, I'm fine. We played it right.
Our very great
We're playing it right.
Transportation's doing a good job. Sean Duffy, I said, we're not going to pay for that thing. They are just, it's out of control. This is something that you don't have things like this. It's not even conceivable. Like 30 times over budget, 30 times. It's the craziest thing. And now it's hundreds of, it was supposed to be a simple train. And I think the media should take a look at it. And I'd love him to run for president on the other side. You know, I'd love to see that. But I don't think he's going to be running because that one project alone, well, that and the fires and a lot of other things, pretty much put him out of the race.
All right, is anyone else in for the long? I double dipped twice.
We're going to work on some
Ride or die. SM's ride or die. Don't move. Once we clear the 20 EMA, move up. Move up. Don't move it against you. If I get one quick spike down, I'll get back in, but I've already made 1,000 on this move.
or something like that for the tariffs, but we're getting along very well. Right now, going.
I'm just holding where I am. I don't want to go up and try and get in at the 20 yet.
Even parts. You want to discuss that, Howard? With respect
How you, Snooze?
Canada out.
Sure. So we've made arrangements with car companies that 15% of their USMCA parts are included, and then
This might be it right
15%
here.
of foreign parts
It's starting to hold the 20 EMA.
manufactured suggested retail price are not tariffed to help domestic manufacturing really thrive.
So it gave them a chance to be able to build their car parts factories if they're going to. A lot of these companies already have factories, and what they have to do is just fill them out. But they're able to build them in the United States, so we gave them a pretty substantial period of time.
Mr. President, is there anything the Prime Minister can say to you today to change your mind on tariffing Canada?
Tariffing cars.
Tariffing Canada. Is there anything he could say to you in the course of your meetings with him today that
You're not in?
lifts tariffs on Canada?
No.
Why not?
Just the way it is. Sure, I would. But this is not necessarily a one-day deal. This is over a period of time they have to make that decision. Yes, go ahead.
Yeah, if I may. Respectfully, Canadians' view on this is not going to change on the 51st day. Secondly, we are the largest client of the United States in the totality of all of this. So we are the largest client of the United States. We have a tremendous auto sector between the two of us, and the changes we've made have been helpful. 50% of a car that comes from Canada is American. That's not like anywhere else in the world. And to your question about is there one
It didn't get me for this run.
bigger discussion?
Let's go, SM. You can do it, buddy. I might mark it in depending on how the next candle acts.
Why we're here to have those discussions, and that is represented by
You got wicked out? Oh, did your stop, your trail, did your trail get hit?
This is not going to be like we had another little blow up with somebody else. That was a much different. This is a very friendly conversation, but we want to make our own cars. We don't really want cars from Canada, and we put tariffs on cars from Canada. And at a certain point, it won't make economic sense for Canada to build those cars. And we don't want steel from Canada because we're making our own steel, and we're having massive steel plants being built right now as we speak. We really don't want Canadian steel, and we don't want Canadian aluminum and various other things.
Well, you got Al Green, right?
And we, because of, past thinking of people, we have a...
We got the buy order block.
Canada. In other words, they have a surplus with us. And there's no reason for us to be subsidizing Canada.
I'm sitting, you see where I am? I'm not going in unless it comes to get me. I'm not doing it. If it comes down to get me, I'll go along. If not, I'm good. We had the call right. I made $1,000. I'm happy with that, and I'm not going to chase it. If we get a wick down and it wants to pick me up, then that's okay. But I'm not going to get chopped up right now.
If the price of your cars went up, or if we put a tariff on your cars of 25%, what would that mean to you? He said that would mean the end of Canada. He actually said that to me. And I said, that's a strange answer, but I understand his answer. But no, I mean, it's hard to justify subsidizing Canada to the tune of maybe $200 billion a year. We protect Canada militarily, and we always will. We're gonna, that's not a money thing. But we always will. But it's not fair. But why are we subsidizing Canada $200 billion a year, or whatever the number might be? It's a very substantial number. And it's hard for the American taxpayer to say, gee whiz, we love doing that. Thank you very much. We're going to have a very...
I do too, but I don't want to get in now and then get wicked out. The whole point is to front run it and then move up behind it and not get yourself hurt. You know what I mean? I'm not saying don't do it, but I'm just saying.
I would say in there, and I'll bring in Richard Madden and Paul Hunter, who've been listening along with me. The president saying right off the top to the prime minister, I was the greatest gift to happen to him. Mark Carney sort of smiled and chuckled, but there were some important moments as well where Mark Carney stood up to the president when he was talking about the 51st state, saying there are some places that are not for sale. Canada will never be. This is an opportunity in our partnership. Talked more about the security.
And if it gets me, I'm going to be behind it really quick. Well, I don't like how this looks, to be quite honest with you. This is getting goofy for me.
At another moment, saying that this issue of Canadians' view of the idea of the 51st state would never change. And he said at one point that when it comes to CUSMA or USMCA, some things will have to change, that the United States is taking advantage of it in certain areas as well. He also clarified for the president that Canada remains the largest client of the United States, and talked about how this is a bigger talk, that this is not one thing that is going to fix it. They both agreed on that. This is part of a bigger, broader conversation. But the president rather made it clear that this is a very friendly conversation. He certainly didn't insult or criticize the prime minister directly. In fact, he applauded him for his performance at the debates during the campaign and his win, and then pointed back to the former prime minister as the source of some of the problems that Canada and the U.S. has had. Let's bring in Richard Madden and Paul Hunter, who've been listening along with me. We're very used, obviously, to these displays.
I'm taking an enterprise order while I'm doing this.
Kind of performs in some ways for the camera.
What do you think, Squeeze? Do you think you think this is still a bull flag, or do you think we're rolling over to the short?
For Canada is this time Canada's prime minister was sitting there, and a couple moments I wondered, is he going to get in here? Is he going to make a point? And he did on a couple of occasions. Paul, give me your impressions on what we just saw.
Well, I was certainly watching Mark Carney's body language at the end when it felt like...
Hey, Snooze, what do you...
conversation word respectfully, which Mark Carney did as he was making his points about some of
Order
the
filled.
All right, I'm in. Shit. All right, I gotta go grab it.
or on trade issues. But I thought, I thought it began.
I gotta go grab it.
Remarkably friendly with some of the things that that Donald Trump said. I think he said as well that he not only did he watch the debate in Canada, but he said that I think he called it the greatest.
Stop, Phil.
All right, I got stopped.
Comeback ever, perhaps even better than mine, said Trump. But then they both kind of stood their ground.
Order filled.
On the
All right, I'm back in.
It was interesting to hear Trump say it takes two to tango. The suggestion being, I guess, that if Canada doesn't want to, he wouldn't press it. You never know with Trump. But then he went on to make his case. But then on trade, then he went down the path that he has gone so many times.
Stop, Phil.
Ah, damn it. All right, so this is the short. I almost pulled it off earlier, damn it.
As Mark Carney sat there, I guess deciding whether to interject or not.
Do we fall in love with the long, or do we admit that it's a short?
Or will we wait until the luncheon, which is the business lunch, which is beginning as we speak, presumably to pick up from where they left off? But I thought the other thing I would say, Rosemary, is it was interesting to hear Trump describe the USMCA, as they call it here, CUSMA as we call it, as a transitional deal. Perhaps Trump's way of saying that's why he signed it. And now it's time, as both countries suggest, time to work towards something.
Order filled.
I think both said in that back and forth will take time.
Yeah, you're right that the president was also quite flattering to the prime minister, saying, I have a lot of respect for this man. So that's sort of the bar that they're starting from, which I think is probably useful in this conversation. But he did repeat again and again, Richard, the comments that he believes about trade, that the United States is subsidizing Canada, that they're losing billions of dollars, that this isn't a deal that works.
Stop, Phil.
At one point, he talked about
What am I doing?
how USMCA was a good deal for everyone, but it does need to change. He alluded to a bad relationship with his predecessor and also, I think, to Chrystia Freeland, who was part of the team that negotiated that deal. But it doesn't sound like, I think Paul's right. Each person stood their ground in terms of what.
Order filled.
I don't know how that helps then a negotiation. But I don't think that the Prime Minister put Canada in a weakened position in the Oval Office.
No, I agree with you. It was notable, Rosemary, how Carney stayed mostly silent throughout this bilateral meeting, letting the president take center stage, so to speak. It's a bit
Order filled.
when we saw French President Emmanuel Macron and British Prime Minister Keir Starmer really trying to interject themselves in the conversation. But Prime Minister Carney did try to push back gently when the president started talking about the auto sector. Carney threw statistics and so forth. And you did see that little bit of tension when I think the president said, this
Order
is going to be a
filled.
conflict. So I expect that that's what's going to be discussed behind closed doors, the auto sector in particularly, energy exports, and lumber. We heard the president repeat himself as well. I think the shiny object that the American networks are likely going to pick up, of course, is that whole debate around the 51st state. Obviously, Carney came prepared with his response saying, look, like in real estate, some things aren't for sale. Then the president went on to say, well, never say never. I think that's the shiny object, but the substantive side, I think the president hinted of what that might be. Autos, I think, is top of the list.
Okay, I'm going to put you both on pause just for a minute because otherwise I'm going to lose my next guest, and that's Canada's former ambassador to the U.S. and former premier of New Brunswick, Frank McKenna.
I should be on the ES right now.
Listening in there. What
Stop,
did you make
Phil.
of how the Prime Minister did?
Well, I thought he did just fine.
Order filled.
Look, it's an event being held at the White House. One has to be respectful, as we always are, to the host. And I thought our Prime Minister asserted himself where he could and was respectful and didn't try to interject where it would have been inappropriate.
The moment that he did let's look at the two moments where he did interject. One on the 51st state, which clearly he could not allow Trump to say something without a response, saying, listen, in real estate,
Target filled.
they're not for sale, just like this place. It's not for sale. Canada never will be. That's not something that Canadians will ever change their mind on. What did you make of his response there?
Yeah, I like that a lot. It's just important to get it on the record because that probably will be the news item of the day.
Sure.
But he also made it clear that we're the biggest client of the United States of America.
Yeah.
And I think that's important as well. Because, Rosemary, what's very disturbing about what happened today and what's been happening all the way through is this constant litany of Trump's greatest hits, all of which are lies. Basically, they're lies. We have the largest trading relationship in the world and the smallest trade imbalance.
Yeah.
And that's only because we send them our raw materials to be processed by them. And that's not even to speak about services where they have a massive surplus with us. And the president is just wrong. They do need our oil. 25% of their oil comes from Canada. They need our aluminum. 70% comes from Canada. They need our potash. 75 or 80% comes from Canada. And I think it's disrespectful for the president not to acknowledge that Canada does bring something of value to the relationship. That was hard to listen to, quite frankly.
Sure. Did you think though, that the president was respectful to the prime minister? Put aside how he treated Canada, did you think he was largely respectful to Prime Minister Carney?
He was respectful to our prime minister. He was not respectful to the facts.
Yeah.
But he was, and I think perhaps this is the beginning of a good relationship because he seems to be quite effusive in his praise the prime minister at a personal level. Yes.
The other moment where the prime minister chose to step in, and I understand you probably wouldn't want to step in on everything because you'd be talking all the time if you were trying to correct the president and some of his assertions there about Canada. He stepped in on Kuzma, saying to the president, some things will have to change. You have taken advantage of it in some issues as well, and other elements is what we will discuss today. I wonder what you made of that, like almost a challenge to the president in some ways.
Well, that was intriguing, that discussion, because the president started off by saying NAFTA was the worst deal ever made, and then Kuzma was a good deal, and all that really changed was the title. Most people would say that there wasn't much more than that, but it was Trump's deal. And then he went on to say it's a good deal for all of us, which would be Mexico, the United States, and Canada. And then he said it's supposed to be renegotiated, which it is in 2026, and we'll have to renew it or tear it up, I guess. It actually is in existence until 2036, and it's simply a reopener clause in 2026. But it was interesting that he talked about that, but it was our prime minister who said there's some things about this deal that have got to change.
Yeah.
And I think specifically the fact the United States is using emergency powers on steel and aluminum and trade powers on film and on...
Oh, this is the short now. We're not going long anymore. I overworked the long.
Basically, disrespecting the agreement in its entirety. So I thought our prime minister was right to speak about that, but I was rather surprised that President Trump actually was defending Kuzma as a good deal.
What do you think is going to happen?
Falling in love with the long is what I'm doing.
That's an impossible question, Frank McKenna, but I'll ask it of you anyway.
Well, I think that some of the things that our delegation couldn't say in the larger public meeting will be said behind closed doors. I think there'll be a level setting of the facts. There is not a $200 billion imbalance. That's factually incorrect. On trade this year alone, it's been reported, it's about the $36 billion trade imbalance on the biggest trade relationship in the world. It's almost a rounding error. I think we'll get into that. I think we'll get into the deficit going the other way on services. I think we'll go into raw materials going to the U.S. I think we'll get into border security issues and how fentanyl is not an issue. Fentanyl coming from Canada to the United States. I think we'll get into the fact that this border has two sides to it. As Margaret Atwood once said, it's like a one-way mirror. We see the Americans and they see the Americans. But we have issues as well. Guns coming across the border should be an issue. Softwood lumber is an issue for us. The fact that our oil trades at a discount in the U.S. costing us $80 billion, that should be an issue for us. So I think we need to make them understand this is a two-way negotiation, and we've got a lot of issues that we want to put on the table as well. And that will be taking place at this luncheon session.
Frank McKenna, we speak almost every week now, and I don't mind it at all. Thank you for making the time, sir.
I thank you.
Okay, good to see you. All right, as we continue to digest a little bit what happened inside the Oval Office for about 30 minutes as the leaders and their teams now head into a working lunch. And again, we'll hear from the Prime Minister directly later this afternoon. David Cochrane was inside.
Let's just wait for the control EMA to start facing upward if we're going to go back up. We kind of fed too long. I should have pulled that off when I was sitting down there. I talked about it 3 times, but that's all right.
It was interesting, Rosie. From my vantage point, I was to the president's left.
Trying to get the new strategy going.
Couch where J.D. Vance, Marco Rubio, Howard Lutnick were sitting, and Stephen Miller, one of his advisors, and Susie Wiles, his chief of staff, and Caroline Levitt were all there. So I couldn't see the faces of the Americans beyond President Trump, but you could see all of the Canadian delegation, the ministers, the ambassador, the chief of staff to Prime Minister Carney were all there. And the level of physical discipline that they maintained throughout all of that was quite remarkable. Mark Carney reacted occasionally because obviously the cameras are on him. You could see him shift and change his facial expression. But Dominic LeBlanc, Melanie Joly, David McGuinty, very stacked, would smile at the appropriate times, but did not have reactions to some of the, shall we say, interesting things that the president had to say. Because, while the tone of that meeting was very...
So I'm going to try and front run the long again. If we confirm on top of this trend line and we start to roll up, I'm going to try and front run that. For me, just to see if I can. I should have pulled off. I didn't like the candle here. I didn't like the way these candles worked, and I should have pulled out.
I thought, Rosie, when he was asked, Donald Trump, is there something Mark Carney could say to get you to take tariffs out of Canada? He said no, and why not?
All right, so let's give it a little bit. We need to confirm above the VWAP and some of that other mess there. Let me get this turned back on.
But to do it in the United States, we don't want your steel, we don't want your aluminum. None of the things that Canada wants to see some movement and flexibility on, at least outwardly and verbally, there was no indication of flexibility and movement from the president. So while it started off very friendly with the praise, for Mark Carney as a person, for his great political win, and
so let's see. It could break right down, and we could just be in a really short for the rest of the day. But that's when we're in the middle of that, we got to read the chart too. It rolled over, and we were still trying to. So let's just see what happens. I don't really feel too bad about that whole thing, to be honest with you.
To Mark Carney, he wasn't particularly respectful to the facts and to the country. No. And I wonder how much of the conversation this afternoon has to be about trying to imprint upon the president and the people around him that some of the things he's saying simply aren't true. And that Canada is in.
No, I'm not going to full port. No, I'm not. No, not now, because it's kind of like once we blow out this fair value gap, we're kind of looking like we're going short for a while.
Is there an agenda of any kind? And then
see, we're falling in love with it long right now because we've seen that big candle. We got to you got to be able to pivot. I think it's yeah, we're dropping. I think I really do. I love the idea of it going back up and catching the long again, but really this last pass through was the short, and we had a chance to get out, and we didn't do it.
On the planet, certainly Democratic leader on the planet, and the stakes are in the billions. And as Frank McKenna pointed out, Rosie, like the $200 billion subsidy number that the president keeps quoting, it started at $100 billion and went up to $250 billion. It's back to $200 billion. It kind of shifts. It's not accurate at all. But it's something he keeps sort of like rubbing in the face of Canada and then talking about how we give you free military protection. We're going to do that anyway because you're right there. We'll look after you. But then he also referred to Justin Trudeau negatively, talking about Mark's predecessor, to quote the president, and then obliquely taking a shot at Chrystia Freeland as well, talking about that woman who worked for him and how terrible she was. So there was sort of a lack of respect overall to the Canadian government, to the aspirations of Canada to make hers, and live up to the negotiated trade arrangements. But where that meeting goes from now, I mean, that's going to be the real test. They're getting to the meeting. It's not like where things went sideways with President Zelensky, though Donald Trump did reference that at one point, and it got a big laugh from Howard Lutnick, the Commerce Secretary, who was sitting on the couch. The discipline of the Canadian delegation and the measured, interjections by the Prime Minister, I think the public portion of that went pretty well for Canada. The friendly tone of the president, even if what he said, the way he said it was friendly. What he said, though, was, as I said, kind of menacing and alarming. It's a question of whether there can be any progress. It's hard to know from what the president says in a situation like this versus how things go in that private meeting. We're going to have to wait a couple hours before we hear from Mark Carney, when he speaks at the Canadian Embassy. And I suspect even then, Rosie, details
All right.
will be tightly held and a bit scant, perhaps, and where to go unless there is something significant that does come out of this.
Yeah, and I would say, just given the things that the Prime Minister has said before, just being in a situation where you are in some ways negotiating in public, probably not his ideal situation either. So we'll see how this works behind closed doors. David, thank you for that. I'll let you get off to the next part of your day. David will be back, of course, with this special, and then back for Power and Politics at 5 p.m. Eastern. There'll be a lot to talk about. David Cochran in Washington.
Canada's auto industry, of course, a key focus in U.S. President Trump's trade war. And we got some breaking news from one of Canada's automakers just hours before today's meeting.
Okay, so this is a full-on short. So the next trade is we're looking for the control EMAs to cross to go higher.
Workers, they can expect fluctuating and alternate work schedules over the next 12 weeks.
And we'll take another swing.
With the union local adds that Stellantis is also postponing the start of a third shift at the assembly plant for a year. Stellantis is making it clear the shift changes have no link to the trade war. I want to now bring in Brian Kingston. He's the president of the Canadian Vehicle Manufacturers Association. Brian, it seemed, thanks for joining us, by the way, it seemed like, I don't know, a cordial interaction is maybe a good word between Carney and Trump today. What do you think of that, if you agree with that? Is it a sign that there might be a way out of this trade war?
Yeah, I mean, this is a difficult environment to go into, and I'm optimistic that there seem to be at least the beginnings of a positive relationship. Of course, there are comments about Canadian vehicles and steel, but the reality is we didn't expect that we're going to come at it today with an agreement or a lifting of the tariffs, but it's the start of a discussion, and I think the Prime Minister can be proud coming out of that it went as well as you could hope for, and hopefully it lays the foundation for further discussions and we can get past these tariffs.
I was obviously sitting here watching and listening to it, and it struck me that it started out sort of remarkably friendly, and then just at the very end, it kind of took a turn. David Cochran using the term menacing in the words that Trump was using, and he reiterated again, the U.S. doesn't need Canada's cars. Do you believe that? Is that true?
No, and I just come back to the facts and the economics of the situation. We hear that comment a lot, but the reality is we've got a deeply integrated supply chain built over the better part of 60 years. And in fact, the Americans need the Canadian market just like the Canadian market needs the U.S. We are the biggest export destination for U.S.-built vehicles. American-built companies have about 40% market share in Canada, and the Americans run a surplus with Canada in automotive. So this is a relationship that works well, and it in fact works better for the U.S. than it does in Canada by virtually every metric. So, I think the facts eventually will come to the fore and we'll get to a mutually beneficial understanding. But this is going to continue to come up, and we'll just have to continue to make the case for the benefits of an integrated market like we've understood for 60 years.
How much of this do you think is politics from a Trump perspective, given the votes that he wants across the river from Windsor in Michigan, and that's who he's speaking to, would say some when he says all these things? What do you think that's a part of this discussion from Trump's perspective?
Oh, absolutely. I think that plays into it for sure. But I think that's a bit of a dangerous game because if you see what's happening right now to the U.S. economy and the auto industry, the administration is literally driving it off a cliff. We're looking at $107 billion US in tariff costs that is being
All right, so this is kind of like front run territory here.
this week that they are suspending their forward earnings guidance because the tariff situation is just too difficult to predict and costly, and their exposure. General Motors has a $5 billion tariff exposure. Ford just announced a $1.5 billion tariff exposure. Production forecasts for this year are coming down by almost 1 million units in North America. So this protectionist positioning is doing serious damage to the U.S. economy and U.S. auto manufacturers. So it's a bad outcome. I think the pain is going to start to be felt by American automakers and the economy.
Order filled.
All right, I'm in.
I hope that allows for a rethink of these policies because this is not positioning the industry for success right now.
But look, so we see the Stellantis news, and you know, it's not a part of this, says Stellantis. But look at what happened in Oshawa not so long ago. I mean, which leads to the question: yes, there's pain on the U.S. side, but on the Canadian side as well, right? I mean, how, in your view, how resilient is the auto industry in Canada? Can it survive if this war persists?
Yes, absolutely. Look, the industry has been building cars in Canada for 120 years. Automakers
I'm going to get right behind it as soon as I can. All right, I'm behind it.
20 years. What will happen if this is the policy that is pursued by the United States right to the end? We are going to put up barriers across North America, get rid of the integrated supply chain.
Target filled.
All right, I took one off.
And you'll have production
I got one running.
focused on the Canadian market. This is what we had back before the Auto Pact, before we had free trade with the Americans. It's possible. It's deeply inefficient.
I got one running.
It's not the best outcome for consumers in the U.S. and Canada, but that's where this takes us. You have smaller production focused on the market that the facility is based in. So, look, I don't think that that's a good outcome, and I ultimately hope we can avoid that. But that's where this goes. If the Americans truly want to create a very small, divided North American pie.
Bottom line, though, just quickly, you know, Trump, often says that the rest of the world, including Canada, needs the
Stop
U.S.
filled.
more than
All right,
the US
I'll let it take me out.
Your thoughts?
Well, no, I mean, that's not how the global economy works. You know, we have a globalized supply chain in automotive, and ultimately that's allowed manufacturers to be more efficient, bring costs down,
Order
introduce
submitted.
new technologies to consumers. You can't unwind that. It's just not possible in this environment.
Order
Look at
filled.
All
what's
right, I'm
happening
back in
now with the
at the
supply
bottom
chain,
of the range.
the U.S.-China tariffs. We're at a point where you could see manufacturing stoppages in the next couple of weeks because China has put a ban on rare earth exports. So you can't unwind these things. We're too interconnected now, and you know that
Okay,
will come
I'm
to
back
be
in
realized
profit.
by the administration as the U.S. economy starts to contract.
Order
I'll
filled.
leave it at that for now. Thank you for your time.
Thanks, appreciate it.
It's Brian Kingston. Brian Kingston, president of the Canadian Vehicle Manufacturers Association.
Okay, today's meeting, obviously, highly anticipated and ongoing after that Oval Office moment, 30 minutes or so with the President, Prime Minister, and members of their cabinet. They have now moved into the Roosevelt Room to have substantive conversations, more substantive conversations about the way forward. We've got all the angles of this story covered for you. Karina Roman is here in Ottawa to talk about the Ottawa perspective, and Katie Simpson in Washington to talk about the Oval Office and the President. Let's start with Katie Simpson. Katie, you've watched, and I've watched many of those Oval Office moments. It's certainly where the President likes to take hold of the spotlight and sort of use it as a
Target
platform
filled.
for himself.
All right,
What
I
did you
got those
make of
three
how
off.
that particular encounter went for
So maybe we'll let this run.
Well, it seemed to start sort of in the sphere of a best case scenario.
Yeah, break that resistance.
Sort of was talking off the top, and he teased to reporters in the room, like the showman that he is, that he's got a really big announcement. He's not going to get into the details now, but he's sort of building it up, talking about how in the next few days he'll deliver this major announcement. And Mark Carney, who happened to be sitting on the edge of his seat, joked, "Well, I'm sitting on the edge of the seat." And Donald Trump sort of slapped his knee and seemed to chuckle. That's not something you sort of see in a meeting with Donald Trump unless he's getting along with someone, unless he likes someone. But while there is body language, that moment, at the same time, Donald Trump
Yeah, I'm moving back to the ES after this trade.
and concerns that really
Come on, run.
on edge.
I'm back to even now.
Want their cars, trying to take jobs
I'm
from
going to move
Canada
my...
and reshore them to the United States. Doesn't want Canadian energy. Never say never when it came to the 51st state.
I'm going to
This
go
likely was
crazy.
going to stand
Move that
out
up
as
there.
sort of one of the bigger takeaways, the uncomfortable moments where Mark Carney had to sort of insert himself and interject and talk about how the Canadian position that Canada is not for sale. Have a listen.
Mr. President, you have said that Canada should become the 51st state. Were you joking?
No. Well, I still believe that, but you know, it takes two to tango, right? But no, I do. I mean, I believe it would be a massive tax cut for the
All right,
Canadian
maybe on the
citizens.
next candle I'll add,
Free military, get
if
tremendous,
we don't get
medical
taken
cares
out.
and other things. There would be a lot of advantages, but it would be a massive tax cut.
Stop
It's also
filled.
Oh,
beautiful.
I got
As a real estate
stuck.
developer, I'm a real estate developer.
taken
at
out.
heart. When you get rid of that artificially drawn line, somebody drew that line many years ago with like a ruler, just a straight line right across the top
Not
of
yet.
the country. When you look at that beautiful formation when it's together, I'm a very artistic person.
All right, I'm going to switch to the ES. I'm switching over to the ES.
But I do feel it's much better for.
We're in VWAP chop mode. I got back to even almost, so.
That unless somebody wants to discuss it. I think that there are tremendous benefits to the Canadian citizens.
Thank you, though, man. It's so, like, juicy because of the way it moves.
Anyway, because we're protecting Canada. If you have had a
All right,
problem,
I'm going to sit right in here on the 20.
I think it's.
Order
I'm
submitted.
going to sit right there.
Marriage because it's two places that get along very well. They like each other a lot.
Well, if I may, as you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, Buckingham Palace that you visited as well.
That's true.
And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever. But the opportunity is
Order filled.
partnership and what we can build together. We have done that in the past, and part of that, as the president just said, is with respect to our own security. And my government is committed for a step change
Stop
in
filled.
our investment in Canadian security and our partners.
I turned away.
And I'll say this as well, that the president has revitalized international security, revitalized NATO, and us.
Now I'm back down.
In NATO, and that will be part of it.
And they have.
So in that answer, Mark Carney sort of, reasserted the point that Canadians do not like that 51st state talk, that Canada is not for sale. Later in this Oval Office news conference event, Donald Trump went on to say never say never. He came back to that point again. And then he talked about the policies that he has in place, or the policies he wants in order to build the American economy even at the expense of the Canadian economy. So, while there was a more respectful tone, Donald Trump
Order submitted.
complimenting Mark Carney, even laughing and sort of joking off the top. Still at the core of what Donald Trump is saying, it is the
I just got
things
stopped
that,
out on that one.
have really created such massive tension in the Canada-U.S. relationship.
Well, it's
Which
looking
gotta look at.
juicier now.
Yeah, and the very things that the Prime Minister himself has set as a line, a red line, that he doesn't want to hear from the President anymore in terms of respecting Canada's sovereignty. That struck me as well, though, Katie, when he said, over the past few weeks, I've met with the owners of Canada, and they're not interested in this idea, speaking about Canadians that he met on the trail. Okay, so this part in front of the cameras is done. They're now moving on to other meetings before we hear from the Prime Minister later. Give us a sense of how that might unfold.
Well, the big thing to look for next is when
All right, I
obviously
got to make a call. I'll be right back.
questions from reporters around 3 o'clock this afternoon. But it's what are we going to hear from the Trump administration officials? Often we'll see some of Trump's, his key cabinet members, Howard Lutnick, Peter Navarro, the trade advisor, Scott Bessent, who's the the Treasury Secretary. They go out on U.S. cable news and they sort of are there to speak on behalf of the president and make points for him. And oftentimes we've heard these high-profile cabinet ministers.
All right, I got a call. I'll be right back.
Come out and attack Canada. So what I'll be watching for next after the closed door session is rounded up. We're going to hear from the Canadian side, but it's what are the Americans going to come out and say? What is Donald Trump going to post on Truth Social about what happened? Is it going to take on a respectful tone? Is he going to send out his attack dogs into U.S. cable news and really go after Prime Minister Carney or maybe some of the points that he made in the Oval Office about some of those policies he wants to help grow the American economy even at the expense of Canada's? Those are the kinds of things to be watching for, because remember that the sort of the baseline goal here for the Canadian side is to start resetting the relationship so that eventually things can get back to a respectful, constructive place of dialogue and trade negotiations can begin. One thing that Donald Trump did say in that Oval Office event, is like, is there anything Mark Carney can say or anything that can be done to, get him to change his mind about tariffs on Canada? He said, no, it's just the way it is. Yeah. And so that really is the baseline of where we are right now.
Okay, Katie Simpson, glad to have you. We'll come back to you through the afternoon as well. That's Katie Simpson just outside the White House there in Washington. So we've been talking about that side. Let's talk about the other side in terms of how this went for the Canadians, where this might go from here. The relationship has been tense. It was tense under the previous Prime Minister. Certainly heard more personal respect for Prime Minister Carney than we've heard for the former Prime Minister. But whether that changes anything, I think is what we're all wondering. Karina Roman is on top of that part of the story, and she joins us from our parliamentary bureau. Karina, obviously the stakes are high for the Prime Minister, but we now at least have a sense that the President does seem to be showing some respect for the Prime Minister. How that changes inside a meeting, whether it comes to anything, I'm not sure.
And he had shown it before
Order
as
submitted.
well after the one phone call they had early on in the first 9 days of when Mark Carney was Prime Minister. But this is high stakes because this is why Mark Carney got elected. This was his ballot box question. Canadians agreed with him to the most part that, yes, you're the right person to do this job, to face off and stand up for Canada against Trump. So if you're the right person, go do it. And that's what he's doing today. So this is his number one job that he defined for himself, and then Canadians agreed with him on. But early on, we had a concerted and deliberate effort by Mark Carney and those around him to really temper expectations and make sure that Canadians understood that there's no deal coming out of today, that tariffs, even before Donald Trump said that there's nothing he can say to change the tariffs at this point, that he said the expectation was we weren't going to see tariffs lifted after today. So really trying to temper those expectations to make sure that they could claim success just by getting the respect that was shown and the cordial interactions for the most part that were shown. Carney has said the relationship is probably going to zig and zag because of the unpredictability of Donald Trump and his administration. And so a lot of today was bracing and preparing for that unpredictability, especially in the Oval Office. Obviously, that was something that was of concern. Not just would respect be shown, but what would he bring up or what would be asked of the president that would put Prime Minister Carney, in a position to choose, do I intervene? Do I let that one go? Lots of blatant untruths, as we saw there with the $200 billion subsidy talk, the questions about the 51st state. So I know we just played that clip with Katie, but the part where Mark Carney answered or asked to say something on that 51st state issue was notable. So I want viewers to see it again. Have a listen.
It's a great honor to have Prime Minister Mark Carney with us. As you know, just a few days ago, he won a very big election in Canada. And I think I was probably the greatest thing that happened to him, but I can't take full credit.
Thank you for your hospitality and above all for your leadership. You're a transformational president, focus on the economy with a relentless focus on the American worker, securing your borders, ending the scourge of fentanyl and other opioids, and securing the world. And I've been elected with my colleagues here, with the help of my colleagues here. I'm going to spread the credit to transform Canada with a similar focus on the economy, securing our borders, again on fentanyl, much greater focus on defense and security, securing the Arctic and developing the Arctic, and.
So, Rosemary, clearly not the clip I was pointing to. That was a different part. That was the opening, which did start on a good foot. And I think everyone, there was a sigh of relief that it did start on that foot. What I was referring to was, of course, where he said Canada's not for sale. And later on, reiterated that Canadians weren't going to change their mind on that. So choosing that to intervene on, but letting some other things just lie, choosing his battles on that, because is it really worth, proving the point that it's not a $200 billion subsidy or that America doesn't need anything from Canada? Probably not in that moment the time to push back on that. And we did hear from Donald Trump on that there are points of contention, but that it is going to be friendly, unlike what the specter that was sort of hanging over this meeting and this Oval Office appearance was that previous blow-up with the Ukraine President Vladimir Zelensky. Obviously, everyone hoping that didn't happen this time around, and even Donald Trump alluded to that. So have a listen to that clip.
See, the conflict is, and this is very friendly. This is not going to be like we had another little blow up with somebody else. That was a much different. This is a very friendly conversation, but we want to make our own cars. We don't really want cars from Canada, and we put tariffs on cars from Canada. And at a certain point, it won't make economic sense for Canada to build those cars.
So friendly, but very clear what Donald
Order
Trump wants
filled.
out of that,
Order
and
filled.
very
Stop
clear
filled.
what choices Mark Carney made about when to say something and when not to say something. So it will be. We aren't in the private meeting right now, obviously, and we'll have to ask the Prime Minister when he gets out at 3 o'clock or 3-ish to see whether the tone changed or the substance changed or how much the conversation was about autos. But you could see there that there was a deliberate choice being made about when to say something and when to just not.
For sure. And a certain amount of discipline, really, from the Prime Minister in that moment, because I'm sure there's many times where he wanted to jump in, but to your point, probably wouldn't have been helpful. So this is what Mark Carney is starting his week doing. As you said, we'll hear from him a bit later, but he has a very aggressive, active agenda that he's trying to put in place in a very quick period of time too, Karina.
Absolutely. So if Trump was job one, everything else is job two, and there's a lot of everything else. And so whether we're talking about next week at some point getting a cabinet chosen and announced, you have Parliament returning on the 26th, you have the speech from the throne given by the King, who will be here on a visit with the Queen on the 27th. You have the G7 hosting that in mid-June. You have the promise of free trade within Canada, the elimination of interprovincial trade barriers by July 1st. And sometime in there may be a budget. So just so much on the agenda that has to be done domestically, partly in reaction to what's happening with the relationship with the United States, but also things that just have to be done because, it's a Canadian government that he is now the head of.
Okay, Karina Roman in Ottawa. Thank you for that, Karina. Other things also happening in Ottawa. The Conservative Party is meeting with its caucus right now and will, by the end of the day, we're told, have an interim leader who will lead the party inside the House of Commons as Pierre Poilievre works to try and win that by-election in Alberta. So we'll keep you up to date on that as well. Drew Dilkens is the Mayor of Windsor, Ontario, also chair of the Border Mayors Alliance, and he joins us now live. Mayor, nice to see you.
Hi, Rosie.
Okay, what did you make of that meeting? How do you think the Prime Minister fared?
Well, it was like watching an episode of Bugs Bunny and the Tasmanian Devil comes in, spins his way through the room. I was happy that the president showed respect at the beginning to Prime Minister Carney. That was the right thing to do. But politically, having to sit there, I feel bad for the prime minister because he must sit there you're almost sitting there impotent. You know, you can't sort of intervene. And I saw the prime minister reach out his hand a number of times trying to intervene and interject. But it's a very difficult environment for someone to walk into. Clearly, it's Donald Trump's house. He controls the narrative. And he continues to replay that same cassette tape with the same set of incorrect assumptions and facts that he's using to make his argument.
He did talk about, I'll talk about the auto sector a little bit because that so directly impacts your city. He talked a bit about it. He said, we don't want cars from Canada. Soon it will no longer make economic sense for us to do that. What did you make of that? The fact that he does not seem open to any sort of concession on any point at all.
Yeah, well, again, we're all entitled to our own opinions, but we're not entitled to our own facts. And I think Brian Kingston hit the nail on the head when he said that we've created this industry together since the 1960s with the Auto Pact. And it is a very difficult thing to think that you're going to unwind the entire auto industry and the parts sector in the matter of months with respect to tariffs. And so what we see playing out, though, even though Stellantis here in the news you reported Stellantis talking about a lessening of the third shift and pausing some production, that may not be directly related to the tariffs that consumers are paying yet. But what you're starting to see play out, Rosemary, is consumer sentiment. Consumers who are saying, you know what, I feel uneasy right now. I'm not going to make an expensive purchase like a car. I'm going to sit on the sidelines, which is impacting demand. And of course, the automakers are going to respond accordingly, cut back staff, cut back shifts until the demand and supply meet, and it makes sense to make cars.
There is no, I don't think, expectation that the Prime Minister comes out at 3 p.m.-ish and tells us we've got this resolved. Do you think, though, resetting the relationship, trying to get some clarity about next steps, does any of that help with what you're talking about, the auto industry and people just trying to make decisions going forward?
Well, I was happy to hear the president reiterate that he likes the USMCA because that is the framework that we're operating under, and it makes a lot of sense. And if there are ways to tweak USMCA with respect to increasing the Canadian content or the North American content, rather, on parts, fantastic. Let's figure that out together, but let's figure out what that pathway looks like moving forward. And we are going to have to deal with Donald Trump for the next 3 years and 9 months. So we need to figure out what the glide path looks like. How are we going to handle all of the issues that are in front of us, whether it's lumber, whether it's vehicles, whether it's energy and continental security. All of these things are in our shared interest to find a resolution and find a pathway forward. If today is the first step, which it is, I think it started off in a respectful tone. I'm sure the conversation that's happening over lunch will be very productive, but let's figure out what that pathway is, how we get all of the negotiators to the table and figure out how we can have a duty-free, a tariff-free relationship with our largest trading partner.
He again, though, the president, talked about the 51st state in part because he was asked, but also went on to talk again about the artificial line between the two countries, which is I would imagine hard to listen to. Frank McKenna said that, hard to listen to for the people in the room. That was one of the moments where the prime minister did choose to intervene, saying, listen, Canada's not for sale. That's not going to change. But even then, the president said, oh, we'll see. Time will tell. That's something that you have been living quite viscerally in your city because of your proximity to Detroit. Did it matter to you to hear the prime minister say that directly to the president's face?
Oh, yeah, I was delighted to hear him say that and to use the real estate analogy, saying, Mr. President, in real estate, you understand that there are just some things that aren't for sale, like the White House, like Buckingham Palace, and the prime minister had the president agreeing to that fact.
Yeah.
And so we know that all of the things that are happening south of the border, all of the flow of information, all of the rhetoric and the ambiguity and everything that's being put forward by the president is being received by Canadians through the lens of the 51st state rhetoric. And so that is, everyone's wondering, is he trying to destabilize our economy with the purpose of trying to weaken us to take us over? That's how we're receiving it, and rightfully so. Even though if you think about it, it really makes no sense at all from a domestic or a political perspective for the United States. There's a lot of things that don't make sense with that comment, but he seems to be backing off on it, even though he lobs in a bomb and a grenade once in a while in the conversations. He seems to be showing a little more respect and acknowledging that may not happen, and it takes two to tango, I think was the term the president used today.
Yeah, I thought it was quite wily of the Prime Minister to use that real estate language. It's obviously something they had thought about, back to the President, and to point to two institutions we know the President respects, both the White House or establishments and Buckingham Palace. I'll end on this, Mayor. Is there something that the Prime Minister should have done, or you hope he will do behind closed doors that would help, that you're hoping that he can still do?
We know Donald Trump is the shock and awe, full of bluster kind of president. We're used to that, but behind the scenes, the level 2, level 3, level 4 people who are talking, the diplomats who are talking, it's really important to reiterate the facts. All of these decisions should be based on facts. And when you actually distill down what those facts look like, the United States is sitting pretty with respect to Canada, even on autos, where they have a $900 million annual surplus with respect to the Canadian trade in autos. And so a lot of this makes no sense in terms of what the president is saying, but if the folks who are actually doing the deal
Order
can
submitted.
understand the facts and come to a conclusion that sets the glide path forward for the next 4 years and moving forward past that, mission accomplished.
Drew Dilkens, always nice to see you. Thanks for making the time. Appreciate it.
Thanks, Rosemary.
That's Drew Dilkens, Mayor of Windsor, Chair of the Border Mayors Alliance.
During his Oval Office comments, Donald Trump also repeated that the United States doesn't need anything from Canada, and that includes steel and aluminum.
And we don't want steel from Canada because we're making our own steel, and we're having massive steel plants being built right now as we speak. We really don't want Canadian steel, and we don't want Canadian aluminum and various other things because we want to be able to do it ourselves.
On that, I want to now bring in Jean Simard. He is the president and CEO at the Aluminum Association of Canada. Jean, thanks for joining us today. You heard right there, President Trump saying the U.S. does not need Canadian aluminum. What do you make of that?
Well, I think it's a way to downvalue what they really need and what they really want. It's an old real estate trick. So you downvalue what you want to buy in order to get to enter a negotiation that is more to your benefit, your advantage. Basically, the U.S. produces 670,000 tons of aluminum, and they consume 5 million tons a year, growing. So at the end of the day, they can say they still need aluminum. Right now, they're paying 25% more than the rest of the world is paying for it.
The levies from the U.S. on steel and aluminum in Canada have been in place, since March now. What has been the impact on the aluminum industry in Canada of those tariffs?
Well, I'd say the first impact is trying to figure out what level of tariff is set on aluminum on a daily and weekly basis, because it keeps changing all the time. So we've gone from 25% to 10% to a possible stacking, no stacking. So there's a lot of adjustments that are required. The metal is still finding its way to the market. The demand is still robust, as we got the numbers for the end of April. Moving forward, the big question is, will the consumption patterns in the US maintain themselves in terms of cars and building and construction? So we're following very closely the numbers, the manufacturing numbers. So if there's a slowdown, we will start feeling it. But at this point in time, there is no difference for us in terms of primary metal. Small mom and pop shops, the people who process aluminum, are feeling themselves more impacted, because many of them buy metal, they process it, they ship it to the US, it comes back. So they're in a crossfire of tariffs and retaliatory tariffs. So this is a more complex situation, but I think that the governments are doing all that can be done to alleviate, to mitigate those impacts.
So you heard both the words and the tone in that meeting. Are you hopeful that something meaningful will come out of this when it comes to the tariffs? And by that I mean both short term, like that we'll hear something positive right away, and long term, that this will get somehow resolved.
I think that for any resolution to occur in this situation, you first have to have a good relationship. And today, if there is one success coming out of this meeting, is what I think is the establishment of the beginning of a good relationship between the two leaders. Moving along, then it's the way you frame the discussions. Prime Minister Carney was very clear about the fact that it would be CUSMA-based discussions, which makes a lot of sense. And by the way, CUSMA is not due for renegotiation, it's due for revision. And that's in 6 months from now. So there is time for the parties to get to a common understanding of the reality. And the mayor from Windsor said very rightly so that it's all about fact-based evidence and data supported numbers. And this is what Canada is very good at. This is how we were successful during the last trade negotiations years ago. And I think this is how we have to do it. And it has to be backed by a united Canada, as Prime Minister Carney has said many times.
One of the things that Donald Trump has said many times is that Canada needs the American market more than anything else. One of the things that Mark Carney has certainly suggested is that maybe it's time for Canada to look for new markets. When it comes to aluminum, are there other markets globally for Canada's aluminum? Is that realistic?
Certainly. The world is in balance in terms of aluminium. Last year, 73 million tons of aluminium were produced and 73 million tons of aluminium were consumed. So what one doesn't take, the other one will take it. And we have our plants are strategically seaborne, so we can ship to Europe from most of our plants as well as to the US. And in the case of British Columbia, we can also ship to Asia as well as to the US or Mexico. So Canada has an optionality of markets for its aluminium, which is very sought after by those markets, because we are safe and secure suppliers of responsible low carbon footprint metal. So if we have to move out of the US, we will move into another market.
Jean, thank you for your thoughts and your insights.
My pleasure. Thank you for having me over. Have a good day. Bye.
You too. Jean Simard, bye-bye. Jean Simard is the president and CEO of the Aluminum Association of Canada. Well, as we just heard, the escalating trade war has created anxiety and uncertainty for the Canadian business community. CBC senior business correspondent Peter Armstrong is here in Washington with us, looking at whether this meeting will help ease those concerns. Peter, what do you make about what Trump had to say about tariffs and trade today?
An interesting sort of series of contradictions, which I guess can't be too much of a surprise to anybody who's been following this. But because on the one hand, he's saying we don't need any of your stuff, and that trade is, the tariffs are going to remain, and who knows what the future will unfold, how it will unfold. But at the same time, I do think we got some glimpses of what maybe not the path ahead might look like, but what the frame around that path might beginning to emerge here. And in that, I heard more positive talk about the existing Canada, US, Mexico trade agreement, USMCA as they call it here, CUSMA as we call it in Canada. I heard more positive talk about that in this meeting than I think maybe we've heard since the beginning of this trade dispute. Donald Trump saying this deal works for everybody, that there are parts of it that have been good for everybody, that sure, there are parts that they need to talk about, and that there's this statutory renewal that'll take place, supposed to take place next year. He seemed to indicate that maybe it'll take place between now and then. And I think from the business community, they've been really hungry for some sense of what those parameters might be, what the sort of walls around this conversation that could look like. And I think they got some of that. But then, of course, there's the contradiction. So listen to what Donald Trump had to say a little bit after his bit about, yeah, this has worked out well for everybody. He also said this.
We're going to work on some subtle changes, maybe. I don't even know if we're going to be dealing with USMCA. We're dealing more with concepts right now. Look, right now, we're doing trade. We have trade. They're paying a tariff on cars and steel and aluminum. And I think we have a baseline of 10% or something like that for the tariffs. But we're getting along very well. Right now, going no further, but we have an agreement. We did something with even parts. You want to discuss that, Howard, with respect to Canada, which helps Canada out?
So listen, that isn't sort of wildly encouraging, but it's not the talk of this has been a disaster and we need to have all these tariffs and we need to throw everything up. And just by way of example of that, we just got a statement from the Canadian Chamber of Commerce from Candice Lang, the president and CEO of the Chamber of Commerce, saying today's chance for relationship reset was much needed. We're impressed with the tone of the meeting and the momentum toward a reliable, close economic security relationship. So businesses and business associations, at least, are seeing this and seeing in it some positive steps. Where this goes from here, of course, is paramount. But on first glimpse, I think some beginnings of something good may be emerging from this.
So much about tone, for sure, Peter. Mark Carney, of course, managed to get a comment or two in. What did he have to say in response?
Well, on his response on a lot of the trade stuff, I thought was interesting, and it reinforces, I think, a lot of what we've been hearing from businesses and business associations. That the businesses I talk to consistently remind me, and obviously are consistently reminding the Prime Minister as well. Canada and the U.S., the governments of these countries don't do any of this trade at all. It is American businesses buying and selling products with Canadian businesses that are buying and selling products to their American customers. And that is the relationship that's worth $1 trillion in bilateral trade. That is the relationship that is kind of the foundation that has made a lot of American companies incredibly rich and a lot of American shareholders incredibly rich over the years. So it's interesting to see how Mark Carney was trying to sort of navigate that message without sort of getting too much in the graw of the president, but also sort of saying, look, we're your best customer, we're your biggest customer, and that part of the relationship is important to highlight as well.
With more to that conversation, of course, happening once cameras left that room and then they moved in for the working lunch. Peter, thank you so much.
You bet.
That's CBC senior business correspondent Peter Armstrong here in Washington.
It would really be a wonderful marriage because it's two places that get along very well. They like each other a lot.
As you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, Buckingham Palace that you visited as well.
That's true.
And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever.
A key moment there in that first face-to-face meeting between Prime Minister Carney and U.S. President Donald Trump, a message that Carney needed to say directly to the president and indeed for Canadians, saying to Trump in the Oval Office that Canada is not for sale and never will be the 51st state. Trump's response, never say never. That working meeting continues at this stage right now, although we are told it is close to wrapping up. I'm not sure if that was the schedule or not, but Richard Madden joins me now from outside the White House. He's been watching all of this as well. This closed-door meeting, I guess the continuation of the half an hour or so that they did in the Oval Office. Not sure if it is more substantive or whether it will get to anything, although it does appear soon to be over. Neither leader was showing, concessions of any kind in terms of trying to stand their ground. Give us a sense of what you made of it, Richard.
Yeah, well, first and foremost, Rosemary, the motorcade is still here. The Canadian motorcade is still here, indicating that lunch behind closed doors is continuing. But you are right, it's expected to wrap up shortly. The big takeaway, of course, was what you played earlier. I think a lot of the American networks are zeroing in on that comment, that exchange between Prime Minister Carney saying Canada is not for sale, making that real estate analogy, and then, of course, President Trump saying never say never. There were some contentious issues towards the end, particularly when it started getting into the weeds on autos and lumber and energy, where we could see that Prime Minister Carney was trying to interject himself, trying to get involved in that conversation. But this is the Trump show. He just kept speaking. Overall, bottom line here, I think Carney did a decent job. It wasn't a disaster, but I did notice that he didn't speak up as much as other leaders have in their Oval Office meetings with the president. I'm thinking Keir Starmer from the UK and France's Emmanuel Macron. also found it interesting how Trump was complimentary to him, a far departure from how he treated former Prime Minister Justin Trudeau. He said he watched Carney's election. He said he followed it. And then he said towards the end, or towards the very beginning, I was probably the greatest thing that ever happened to him. Trump seemingly taking credit for Carney making Trump the centerpiece of his campaign. We also heard the president taking shots at former Prime Minister Justin Trudeau and, of course, former Finance Minister and Deputy Prime Minister Chrystia Freeland, who he really didn't have a lot of positive things to say about her, suggesting that perhaps she was a reason why the relationship between Canada and the U.S.
Order
had been
filled.
strained. So some colorful insights from the president. But overall, I think Carney accomplished what he wanted to. I suspect he would like to have gotten involved a little bit more in the conversation. But that line about the 51st state, obviously, it looks like it was pre-planned, and he executed that line that has really made headlines here in the U.S.
Oh, okay. I thought you had a clip, but that's okay, Richard. You did a very good job of summing it all up there.
Well, you played it before we spoke, so I thought,
okay.
we'll
All
just
right.
let it continue.
We'll just let it go. Okay, Richard, thank you. I'll come back
You
to
bet.
you. Thanks, Fred.
For
That's
sure.
CBC's Richard Madden in Washington. Steel industry, just one of the major industries affected by this trade war. There has been a 25% tariff levied on steel. That happened back in March. Catherine Cobden is the president and CEO of the Canadian Steel Producers Association. She joins me now. Catherine, nice to see you again.
Hi, Rosemary. Thank you very much for having me.
Of course. So I don't know if you anticipated a resolution to anything today. That probably would have been in your wildest dreams, yes. But why don't we start with just what you saw in the Oval Office in terms of the tone and whether that meant anything to you and to the people you represent?
Yeah, that's a great place to start. I think that the cordial tone in the exchange between the Prime Minister and the President was quite encouraging. It was really good to see after some of the prior exchanges we've had as a country. It was also encouraging to hear the President on several occasions talk in fairly positive terms about the mutual benefit of USMCA for both countries. So we're encouraged by that as well. But of course, we also heard the president speak about steel specifically, and in that was some of the harder areas and messages to hear, frankly.
Yeah, he said at one point, we don't want steel. We don't want Canadian steel. We don't need it. You mentioned USMCA. One of the points that the Prime Minister made was to say that to the president, you have taken advantage of steel as well. And I would think he is referencing the fact that twice now Canadian steel has been threatened by this president or tariffed by this president.
Yeah, I mean, I also think he is foreshadowing that in the USMCA kind of discussion in the future, there will be things that both parties are going to want to address. So fair enough. That's why this renewal discussion is scheduled to take place next year. As it pertains to steel, I want to say it's laudable that the president wants self-sufficiency for steel in his country, but the facts of the situation are that his country still needs 26 million tons of steel to be imported into his country.
Right.
In other words, he's about twice Canada's entire steel production shy of being self-sufficient. So I understand the objective, but I just want to point out there's quite a gap between the objective and where the country is in steel production today.
Yeah, and I appreciate that because we like to operate in facts when it comes to things the president is saying. And is there any ability, or how long would it take for a domestic industry in the United States to make up that difference? Is that even a possibility?
Yeah, like 26 million tons is a lot. By the way, we supply about 6 million tons, which is half of our entire domestic production. So it's a very significant market, but still we're not anywhere near close to supplying the majority of their supplies. So the scale is tremendous. It's going to take years, in our opinion, to achieve that objective. So we're really, ultimately hoping that it'll be understood that Canada's really not the problem. Canadian steel is not the issue. We have done as a country the same things that they've done. We have tariffs on Chinese steel. We have, supply chain transparency and all of that. So, but I think that's going to take time. And one of the challenges, Rosemary, is that we don't have a lot of time. We're about 8 weeks into the tariffs on Canadian steel. We're seeing layoffs pile up. We're into the hundreds and, high hundreds of layoffs at this moment.
Okay, I'm back.
I think now, one thing
All right.
talking a lot about
So the premise was okay.
I think their certainty is 232 on steel is going to be
We just proceeded to overtrade, and then when that red candle came down, it kicked out my stop, and it was already wasted by the time I saw it. So we're gonna give it another go. But when I said I should pull my stop when I saw that candle I didn't like,
Even that, though,
yeah.
Cobden, and I hear you, probably is there enough
Yeah, only on that one account though, Snooze.
domestic market to make up that huge amount that we sell already to the United States?
Exactly.
All right, we're gonna do that again. So what we did there is we ignored we basically ignored the fact that the long was over. We pretty much ignored the fact that the long was over, and we fell in love with the long. When we made our money in the first run, we should have just been like, okay, that's enough, because it never really crossed and separated far enough. So I think we're on to something. Here, I'm gonna get reset back up here. Give me just a minute.
In our own market. So we've had to shift. Like we have, a significant production here that actually meets Canadian demand, but we had to shift half of it away.
So we should have been, once the long was over or once the long was clearly over, we fell in love with keeping the long going. So you just got to remember that.
Okay, Catherine Cobden, on that note, not the happiest note.
But it was a profitable move overall. It was the right move. We just didn't manage it properly.
President and CEO of the Canadian Steel Producers Association. Let me just show you what we are waiting for now. You saw him arrive. Now we will wait for him to leave. The Prime Minister is set to emerge there.
Yeah, well, that's stuff you just got to kind of figure out as you go, if you know what I'm saying.
Several cabinet secretaries and officials around the table on the U.S. side, and several cabinet ministers.
That's kind of why I trade the way I do. Is I'm probably too aggressive at this point.
This meeting went long, not surprisingly. Went to about 30 minutes. This meeting looks like it's been about an hour or so.
And that's why I'm on minis.
And then the Prime Minister, of course, from here, going to make his way to
So
the embassy.
I think
Canadian embassy,
playing the EMA cross
and he will speak to reporters at 3 o'clock Eastern. We're going to take a short
and
break
not the
here.
continuation.
More of our special coverage of this trip right after this.
But that came down and collected my stop and kicked it right out, and I didn't even see it because I was working. So I'm not going to do that again. But really, doing it like this, all we really got to do is catch the one really big run on the cross, and we're good to go. You know what I'm saying? And then if we get stopped out, we get stopped out, And I'm thinking that that's going to be what can carry us. Without being like, well, I think I'm going to go here. I think I'm going to go here. We can still call that stuff out, and if it's more than obvious, that's one thing, but all right, give me a minute here. All right, I'm reloaded. How are you on your yeah, that's what I'm saying. It's like with payout. No, you don't have to build any buffer. You just need to go 5 days in a row with $200 or more in profit, and you can take half of it. That's why I'm doing what I'm doing. I'm trying to get to where I can only make 1 or 2 trades a day. I'm good, and then we're good, but I got to get back to the XFA. That's what I'm saying. That's why I like Top Step. Like I said with Top Step, once you get 30 days of $200 or more profit, you can take a payout every single day. No, there's no buffer. No. But the thing is if you only got 1,000 in there, do you really want to take 500? You know, it's kind of tough. I don't think there's any buffer at all. They'll let you take it. So I'm just trying to, yeah, that's what I mean. There's no buffer for milk and bread. It's gonna be a cocaine run for me. Yeah, I think I'm gonna do a 401k withdrawal. You need 2.6k, yeah, for the Bullinox, right? Yeah. Well, let's just focus on getting you that payout on Bullinox, and you can use that to fund the Top Step.
Oval Office. That's the door where we are expecting him to leave in just moments after his meeting with the president.
I think that I think that looking for the EMA, front running the EMA cross, I can. Don't eat the dog. Don't eat the dog. No, Snooze, don't eat the dog. Yeah, honestly, those are mistakes everyone makes. Don't eat the dog. If Snooze hits the wrong button, the dog is gone. It's dog for dinner. Oh, shit. All right, I'm set back up. Next EMA cross. Once we make our money, we're going to quit, double down, and we're going to make sure that it's not going to change on us. Because I made 1,000, and then I saw the change start to happen, and I ignored it. I got caught up in the run. I got caught up in the run. So, all right, I think we got what we need. All right, I'm going to go back to the regular news. That was the meeting with the new Prime Minister of Canada. Canada. Oh, Canada. We love maple syrup and hockey.
We did hear from the Treasury Secretary about the status
of
those talks between.
Everybody's okay. The dog is still there.
Those negotiations are not underway, and that was certainly the question that was asked.
We have new faith in Top Step. Let's see if we can make the EMA cross trade work.
And the President of the United States saying
I loaded a freshie in there. For the moment. Yeah. For the moment. Shit. All right, I got a call I got to make. I'll be back in a few, guys.
As the afternoon unfolds here on Bloomberg Television and Bloomberg Radio. David Guray in for Kaylee Lyons and Joe Matthew here on Balance of Power on Bloomberg.
headlines in business are on Bloomberg.
The policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. It's going to be important that we get more clarity on the direction of travel from here. As I'm talking to CEOs, as I'm talking to our clients, they are holding back on investment, and they're certainly tightening their belt. You're going to see some companies laying off employees and running their businesses tighter because of this level of uncertainty.
Nobody covers business like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to day 2 of our special coverage here on Bloomberg from the 28th annual Milken Global Conference here in Beverly Hills, California. Live
It's a
from
little
the Beverly Hilton.
quieter.
A little quieter here today, but of course things will start to pick up. Just 11 a.m. Here in Los Angeles. Almost lunchtime, Carol.
Almost lunchtime. I kind of lost concept of the time. There's so much going on.
We're going to be here for the next 3 hours. Of course, a mashup of your 2 favorite shows, Bloomberg Business Week and The Close, and a lot of great guests once again over the next few hours.
Yeah, looking forward to kind of getting a feel. I feel like in terms of the investment environment, so many years it's been all about private credit. We've talked about that so much. What's interesting is the word that is most often, I think, being used is tariffs. Over and over. But I don't think you're necessarily hearing President Trump's name identified with it. Like, we talk about tariffs as a concept, but not necessarily tying it to the administration. Are you not feeling?
Well, I went to better cocktail parties than you. We were talking about, arts and
He's
entertainment.
the man that
and
goes
things like
everywhere.
that. But all right, let's get down to it here. We got a long lineup today. You want to go through some of the names we're going to talk to,
Let's
Carol?
go, because we're going to get conversations that really span the world of business. Let's go through some of the names. A broad markets and credit conversation and special situations expert Victor Khosla is back with us, Strategic Value Partners founder and Chief Investment Officer. Folks, we're also going to sit down with Eric Martel, CEO of Bombardier, to discuss the future of aviation. I can't wait to talk to him. He also understands global supply chains. We're going to also touch on where you should look for investment opportunities with Manny Roman. He's the CEO over at PIMCO. Talk about a firm that also sees so much. So some great perspectives over the next 3 hours.
Yeah, just 3 of the great guests that we're going to have over the next 3 hours. And we start off with the 4th. Ida Liu joins us now to kick us off. She's global wealth management expert who for years led the part of Citigroup that catered to the wealthiest of the wealthy clients, a group of clients globally who are increasingly looking for a little bit more help in connecting the dots between their investments, taxes, legacy planning, all in an increasingly tumultuous world. Ida, great to see you.
Thank you. It's so great to be on with you both.
No better person to talk to about managing personal money at a time when I would think things are a little bit harder. I mean, it's not just tariffs, economic conditions, but you've now got to navigate changes in tax policies, changes in geopolitical leadership. I mean, how do you do that, particularly for clients that we know are very demanding?
So it's interesting because investors, I would say, are cautiously optimistic. They've been a bit wary because of all of the volatility in the marketplace, but they're ready. So you've been seeing them buying into the dips and still investing in some pretty interesting opportunities to reposition portfolios for the long term. And there's still some very compelling opportunities out there.
Look at the opportunities out there. We've talked a lot in Milken, obviously, about the competition and in some cases the collaboration between public and private markets. When you talk about allocating to a personal portfolio, I know that high net worth individuals have embraced alternative assets, real assets a long time ago. But are you seeing an increase in those allocations?
Oh, absolutely. So alternatives still are a key part of investor portfolios, and you're seeing a more heightened interest in alternatives, particularly in the secondary market. So you're seeing secondary demand pick up pretty significantly because of the marks to net asset value and the discounted net asset values that you can get there. But in addition to that, the demand for direct and co-investment is still there and is still very strong.
I do wonder too, Ida, I kidded at the top, but the word that seems on everybody's mind is tariffs and the implications it has for our global economy going forward, for our investment environment going forward. How do you kind of roll that into some of the conversations that we should be having when it comes to your portfolio?
So it's interesting because on the top of every investor's mind is what's happening geopolitically, what's happening with the tariffs. We're effectively in a trade war with U.S.-China.
But what happens is that because of the changing supply chain demands around the world, there's unique opportunities as well. So investors are looking at how do I reposition geographically some of my assets to take advantage of Japan, India, Southeast Asia, other countries in the world that are ripe for more growth in the near future. Said and done, and we figure out the president today having a press conference with the Prime Minister of Canada, Mark Carney. They did talk about global supply chains. They talked about kind of the global North American corridor when it comes to supply chains. Do you think net-net, when everything is done, supply chains, the reordering will actually be a net positive for investors and investment plays? And how long does it take for us to get there? I definitely think that you're going to see some net positives because of the changing dynamics and the different regional investment opportunities. I think we've seen the domestic markets outperform the last couple of years, some of the international emerging markets, and you're seeing that flipped on its head now, right? With the S&P up, only down 3% this year to date on the back of quite a ride. Yeah, on the back of 25% mid returns in the last couple of years. So I think this repositioning, you're seeing some strength in Europe, already year to date, is going to be pretty attractive for investors in the long term.
Talk about broad investment themes, and partly to Carol's point about tariffs and all of the chaos kind of created by trade policy in Washington. Has that upended more of those long-term thematic type investments like AI, like renewable energy, et cetera?
So it's interesting because there are three areas that continue to be on the top of investors' minds. It's AI, it's clean energy, and it's healthcare and longevity. And it happens to be three of the topics that we're talking a lot about at the Milken Conference over the next several days. On the AI side, it's not just about investing in the software, it's also investing in the parallel industries like semiconductors that are the brains behind the AI growth, and then thinking about how clean energy is going to play into all of this, because with the growth of AI, it's going to need an exponential amount of energy, and there's some very promising clean energy investment opportunities, for example, with fusion, that could really transform the way that the world is thinking about energy and energy sources. And then the last thing I would say is on the healthcare and longevity side. I love that you brought that up because I feel like Milken, I think one of the first panels I did pre-COVID was on longevity. Right. And it just feels like they have been talking about this for years. Where are we in that kind of conversation, especially from the investment side of things? Yes. So a third of the world's population is over the age of 65, so we're still going to have a massive consumption story going on there. But in addition to that, we have so much advancement in healthcare, the drug discovery, the telemedicine, the personalized medicine. I mean, the next generation is going to live 10, 20 years longer than any of us, and that has pretty serious implications on your investments portfolio as well. You're thinking about retirement, right?
No, I wish. But I think my duration in retirement is going to be shorter, so I have a little more wiggle room. But that's a great point because, that changes the dynamics, right? If you're talking about average lifespan of 70 to 80 years old, and that goes up, even 10 years, that changes the dynamics of, I guess, how much risk you can take on, maybe even later in life.
Absolutely, Romaine, and it's not going to be uncommon for people to have life expectancies of over 100 years old. So that's definitely coming as well.
So when we get to this idea of the broader theme, so you say AI, energy, health and longevity, there's been a lot of talk here, particularly among some of the people from the Trump administration, about the U.S. leading in those areas. As you know, there's a lot of competition from China, maybe to a smaller extent Europe, and who knows where the next sort of big new industries will crop up in what parts of the world. Do you look for that now geographically as you try to sort of advise people kind of where the puck is going, so to speak?
Absolutely, and yes, you're correct. There's so much being spent R&D on AI and technology in the U.S., but very closely behind that is China. And they're growing very quickly, particularly as it comes to robotics and solar and some of the other energy sectors as well there. So we keep a close eye on the development, and we try to invest not only in early stage, but for the full spectrum as well, right? So early stage direct investment opportunities, alternatives, and then playing some in the public equities as well. I think what's interesting is I think the Vice President has been to India. We hear a lot about some kind of trade agreement. The President mentioned it even today between the U.S. and India. We're going to talk with John Chambers a little bit later about the importance of India and certainly supply chains. Where do you see the U.S.-India relationship going? Does that kind of replace in some ways the U.S.-China relationship that we've had, especially when it comes to trade? You're definitely going to see elements of that. You're seeing, obviously, all of the ongoing trade discussions as we speak and the tariff discussions as we speak. We've recently seen some willingness for more open discussion between the U.S. and China, so I'm hopefully cautiously optimistic on that too, fingers crossed. But yes, we're keeping our eyes on the countries that will benefit the most from the U.S.-China bifurcation, and that is going to be India, it's going to be Southeast Asia, it's going to be, in part, also Japan.
All right, Ida, always great to catch up with you. Great to see you again.
Wonderful to see you both, too. Thank you so much for having me.
Absolutely. Well, what a way to kick off the show with Ida Liu, global wealth management expert, here on a day where, of course, we focus on private markets, public markets, and the intersection of everything in between. Did you know there was a Fed meeting today?
I was just going to say, I'm so glad you went there because all of it, public-private markets, it's going to depend on what we get from the Fed. We don't expect them to do anything in terms of rates, but their commentary, always crucial.
We should point out yields in the Treasury space are down. Stocks down as well for a second straight day. Let's toss it back to Bonnie Quinn in New York, who's keeping a closer eye on what's going on in the markets.
Exactly. You said it, Ed Yardeni, saying waiting for nothing essentially when it comes to the FOMC this week. Nevertheless, we will be looking for how those statements differ from the last FOMC meeting. Equities lower. We're close to our lows of the session with the S&P 500 down 0.75%. The Nasdaq 100 down more than 0.9%, so a second day of declines. As regards any kind of catalyst today, we're looking for anything on trade. No breakthroughs so far. President Trump saying earlier he would prescribe tariff levels and trade concessions for partners. This obviously assuming that there is no negotiations of any worth actually ongoing right now. We also have the dollar index on the decline, down about 0.5% versus its major trade-weighted partners. Crude oil is up, though. We're still in the $59 a barrel range, but that's up 3.8%. And that's one of the areas in the S&P 500 that you are seeing gains. In fact, it's about the only one at the moment, utilities and energy, the two sectors in the S&P that are higher. Healthcare performing the worst, down 2.7%. Industrials down 1%. Really nothing great to speak of. We're awaiting earnings after the close. We might get some kind of an idea of how AI spending and capex plans are going throughout the year, with AMD reporting after the bell. ARM obviously giving its earnings post-market tomorrow, so we'll have a little bit more of an outlook on the impact of the Trump tariffs on chip sales, and that might help us look towards Nvidia's earnings at the end of the month. But as regards markets, we also are seeing yields lower today. We did get a strong 10-year auction, which heartened some parts of the market, but the yield curve lower across the curve, with the 2-year yield down about 4 basis points. The 10-year yield right now down about 2.5 basis points. Bitcoin holding its own. It's up about $300, still trading in the $94,500 a coin category. Gold is higher as well today. That'll tell you a little bit about what you need to know about this market. Up to 3,412 per ounce. And with that said, the VIX is also trading around 25. So just a little bit more elevated than it has been. In terms of those currencies, I do want to point out some strength in the Canada dollar and also the Mexican peso. As Trump said, the USMCA continues to be very effective. Now back to the Milken Institute Global Conference in Beverly Hills and Romaine Bostick.
As we continue our special coverage, I mean, we should point out, Carol, there are dozens, maybe hundreds of panels that take place here at Milken over
all
roughly a 4-day straight. Yeah, all at the same time, all at 10 a.m. You got to get here on that. But I had a chance to host one yesterday, which was actually at a more favorable hour of about 3 p.m. And it was on the future of venture capital, kind of a focus on AI, on IPOs and tech. And one of the folks who was on that panel, his name is Raj Ganguly. He's the co-founder and co-CEO at Eduardo Saverin's B Capital. And pleased to say he joins us right here on the Milken stage. Great to see you again, Raj.
Great to see you.
We had a great conversation today, and I want to kind of build on that and build on something that our previous guest, Ida Liu, pointed out about how a lot of investors now, they want to ride with companies from the early stage all the way up to when they're public. In the VC space, I've seen a lot more, I guess, creative options when it comes to the investment model, the stage at which you get involved, and how long you stay with those companies. How is that evolving?
You know, I think venture capital is an industry that was built on change, and we're going through a profound period of change in our industry. Private companies have the ability to stay private much longer now. They don't have to IPO after 5 years. Companies like Meta IPO'd after 8 years. We're getting to a stage where you can be private for 10 plus years. And the onus is on us as venture capitalists to build bigger, better companies that when they do IPO, they're resilient companies that can really hold up in the public markets. And you're seeing so many venture capital firms becoming SEC registered investment advisors so they could really hang on to the investments that they have for a longer period of time.
I've seen this trend, and there's been a lot of hay made of that. And there are some companies that have done that for a while. Andreessen, of course, became a advisor years ago. But you're seeing more of the VC funds do that. What do they become then? Do I stop calling you a VC fund? Because
you could still call us a VC firm, but I think the lines between venture capital, private equity growth, and even venture credit are really blurring. Ultimately, we built B Capital to be a firm that serves the best founders. And what we know, because we ourselves were founders, is when you're early on, you need certain types of help. And as the company scales and grows, you need different type of help. We believe that we can be that right partner from the early stages all the way through the late stages. And the types of capital you need are different, from very seed stage, early capital, to larger amounts of capital that are more sustainable. And that time horizon that a lot of venture capital firms have, saying that, oh, we need our money back in this number of years, that doesn't work for every founder anymore. So we need to adapt to what founders need.
But I'm curious about this, because when I think about fundraisers and supporting, especially startups, Raj, what does that mean? Is it really, really early stage, it's going to be venture, and then as the company gets larger, it's going to be more like private credit? Like, because all of those are kind of, you're in for a longer duration than most investments.
Yeah, it's a great question. I think we're all trying to figure that out right now, which is, where does venture capital stop? Where does private equity growth begin?
Where you make the most money?
Well, listen,
is it that simple?
It is important for our investors that we drive returns, but the way we drive returns in our business is by partnering and backing great founders and helping them scale and grow. We're not in the business of buying companies that are not performing well and turning them around. Our business is investing in fundamentally high growth businesses and hopefully helping them grow even faster. And sometimes that growth comes from venture capital firms, but sometimes that backing comes from other types of firms. So I think in the next 10 years, you're going to see fundamentally the lines between these different types of firms really blur.
Can Romain and I eventually get a piece of that? Like, how is that moving in terms of the democratization of that?
It's a great topic, the democratization of private capital investing. I think the next decade, you're going to see that public market investing doesn't provide the same kind of return that it has for the last couple of decades. Private market investing has been really this area that elite endowments and other people can only do. We need that to change. We built our firm on the back of a lot of great public pensions. We've taken capital from people that a lot of venture capital firms haven't taken capital from before. We think democratizing this industry is backing founders that have come from different types of universities, that have come from different kind of backgrounds, maybe not even gone to university.
Right.
And it also means taking capital from folks that might not be the folks who helped build this industry in the first place.
Well, that's what I'm curious about. Where does the new capital come from? I saw, if I remember, and correct me if I'm wrong, you just recently opened an office in Doha.
We did.
There's been obviously a big push to get more money coming out of the Middle East, which is looking for a home. Is that the next fuel for the venture capital community?
It's a great question. I mean, we continue to be, our biggest backers are U.S. public pensions. We think that people who are pensioners deserve access to the best private capital investments. They remain some of our biggest backers. We actually have opened in the Middle East because as we've been redoing our strategy in Asia, we think that the Middle East is a really exciting place with a high number of really talented young engineers, a very youthful population. And our belief at B Capital is you can build global businesses from anywhere. We remain about 80% invested in the U.S. We think that Silicon Valley is, with generative AI, what's happening in healthcare is still the best place to invest. But we do invest outside.
All right, so here's the long EMA cross. I just got off the phone.
When we're investing in companies outside the U.S., most of those companies.
So we were a little late front running it.
The U.S. market remains the #1 dominant market in tech and innovation.
Still, I'm kind of surprised to hear that, because I think there's been.
So if we were going to front run that, it would have been down in this zone here. And of course, it's a 30-point move, and I didn't get in on it. Order block. All right, I got to make another quick call, and then I'm done for a little bit with that.
Equities really run back up last week. It's reversing today, and that is that the S&P 500 down 0.7%. Most sectors in the S&P lower, with the exception of utilities and oil companies. For the most part, WTI crude trading at 59.26. It's up 3.75%. But the picture is pretty grim across the board. The VIX now is trading at around 25. Yields lower too. We have the 10-year yield at 431.99. That's down more than 2 basis points. The 2-year yield down almost 4 basis points at 379.51. This market is waiting for nothing, according to Ed Yardeni. Well, he's referring specifically to the FOMC statement and press conference tomorrow. Michael Feroli of JP Morgan Chase saying the main message from that is that the committee will be well positioned to wait for greater clarity before making any changes to policy. What kind of clarity? Well, doesn't look like we're going to get it from President Trump, at least not immediately. He's saying today he would prescribe tariff levels and trade concessions for partners looking to avoid higher duties. So he seems to be moving away from the idea that he's going to be engaging in back and forth negotiations. That's all we really heard from him so far today, although he did say that the USMCA is very effective and if he doesn't know if it's necessary to renegotiate that trade deal. That's helping the Canadian dollar and the Mexican peso today, but the US dollar is still lower by about 0.5%. Now back to the Milken Institute Global Conference in Beverly Hills, California, and Carol Masser. Carol.
All right, Bonnie, thank you so much. I do want to turn back to the markets and more specifically what's going on in the world of ETFs. Always a lot going on. It's a space that has significantly changed in the last few years, especially since the introduction of Bitcoin funds. Let's get more ahead of a panel that he's going to be on. He's going to be talking about that dynamic in particular. John Cardunas, he's the president and CEO of Calmos, and he joins us here at Milken. So nice to have you here. How are you?
Great. Nice to be here. Thank you.
It does feel like crypto is having its moment. Thank you, White House and President Trump. Would you agree with that?
It definitely is in the news every day, and there's new things that are happening. And this administration is very pro-crypto, and the world is changing, and they want to try to get ahead of it, and I'm not sure that they're wrong. I think that we should get ahead of it, because if we don't, other countries will, and they will take advantage of it.
So then what do you see in terms of how it plays out in the ETF space specifically, the growth that you expect, and how do we make sure investors really understand potentially the risk in this world?
It's the last 15 years, Bitcoin has been the best performing asset class in the world.
All right, I'm back. Damn it. Oh, I missed the long. This is so frustrating, man.
So people have to be careful when they invest, and it's
Look at this.
long-term. Now, with
We were ready to, if we would have front long that, look at where we'd be right now.
the indices, like the Chicago Board of Exchange indices,
Oh, you did. You got to stretch your stops a little longer.
different types of ETFs
It's just so frustrating, man. I'm telling you.
in terms of how much
I don't know why that moved.
but you won't lose any money.
Well, let's look at the ES. Let's look at the ES just crossed. The ES is behind the NQ. But we're up against the VWAP. So I'm going to put the ES on for a minute. Well, it's still, but that's the point of doing the cross, is you're going in the right direction, and if it comes back and hits you at your break even, you're okay. You know, you're not hurt. You know, you're not like, you know, moving your stop because you think it's going to be a continuation and you got it wrong that time. You know what I'm saying? That's the idea I'm trying to go for, if that makes sense. And it should be lower stress trading too, you know what I'm saying? I'm trying to go for the lower stress trading, and I'm trying to be able to identify the front run and still maybe be able to take the trade while I'm on a call, because it's a definite. Yeah, I know. Man, there's a fine line there, dude. I'm telling you, man. You can let it run and it'll run against you. But look at this run, dude. Look at this run it's on. I totally missed it. I totally missed the run. I called it. It's right here. The run was right here, and you'd have been okay. Yeah, you know, it's like I'm just about over it. I just want to get this zeroed in, get it qualified, start getting my payouts, get to the fund, get to the live account. I'm completely over it. Yeah, that's right. I'm like fucking Superman on steroids at this point.
What are people utilizing to protect themselves from this unknown that we seem to be in?
Literally balls of fucking steroids.
Uncertainty of what's happening here with tariffs and everything else in the markets, right? So one way a lot of people have been able to manage risk is buying funds.
Man, it's gonna be a total goober shit show. Did I tell you that, like, when they let all those people go, they've been developing this call center, this third-party off-site call center, and they're directly replacing the people they let go. So they're gonna be in my fucking queue and everything else. We had a meeting yesterday talking about, well, if they ask for help, they're gonna be in our Slack. And I'm kind of like, oh, did I tell you that? Okay, sorry. I didn't mean to. I didn't mean to like start telling random stories over and over. Just kind of hard for me to believe. Well, not really, I guess. Well, it'll get kind of weird if I just don't. There's helping people and then they're sending them down a road, if you know what I'm saying. Because this is a little more complicated. There's a lot more to it than fucking selling the ShamWow from a call-in advertising at 11 o'clock at night. Look at this. Look at this, SM. Can you believe we missed that? We got caught up in this mess here and then missed the... Look how solid that call is. Jeez. You want to talk about FOMO? So it's like the younger guys that have younger families and stuff. I kind of want to tell them, like, they're like gung-ho into it for life, like ride or die into it. But I kind of want to tell them, look, you better start working on your plan B, because if these people figure it out and they're in the range of profitability they're looking for, it's probably a lot cheaper to have that place than to pay us. I'm putting out a FOMO alert. You know what I mean? But if they fail, I'm set, because if they bring everybody back, then I'll probably have my choice of anything I want to do. Unless I'm a professional bum trader bumming around all day on the stream looking for EMA crosses. It's just life, dude. You always got to have plan B. You always got to be thinking today might be my last day at work. I learned that a long time ago. So I've always set myself up. If I'm gone tomorrow, I'll be just fine. I'll be fine. But there's a lot of people who don't live like that, that are making really good money, and they're probably living at the limit of their means, and they're fucked if they can't find nothing for 3 months or something, you know?
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
I was almost hoping I'd be the one let go, then I could just cash in a portion of my 401k, take my savings, other stuff, and then like try and set myself up and do this right. I'd be okay with that. I'd rather wait another 6 months until I get to the live account and can get the program finished. Then it's like burning the house down around you. You got to figure it out then. Like the house is on fire. No, I'm getting paid a lot. Yeah, I'm getting paid a lot, but it fucking sucks. So if I'm the one that has to go and get a severance package, I'm okay with that. This is my plan B. It just pushes me to plan B a little quicker than what I hoped. You know what I'm saying? Like, we need to grow the channel. If I get an email, my computer's not on tomorrow morning, we need to grow the channel, SM. Yeah, no, I'm not quitting. No fucking way. No fucking way. It's too good, man. It's just too fucking good. I mean, I'm pissing around here for half the day sometimes.
So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes, and I continue to like that trade. So
But I am mentally exhausted at the end of the day, trying to do this and do. All right, we're looking at the ES.
economic data coming out of the U.S. and you see the data in China, I think you will see a tactical deal
And look at that. Look at that sweet move right there.
between China and the U.S. And I think when you look at
The NQ, you want the NQ or you want to work the ES? What about you, Snooze? What are you thinking? All right, I gotta help these people.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg.
Okay, I'll go back to NQ. I was thinking NQ, but I wanted to ask you guys. NQ looks good right now to me, but we're kind of in no man's land. The trade was back here when I just missed it. I could be up a grand right now if I would have never got into that chop zone, trying to be like a greedy bastard. Yeah, I know, man, but it does it all the time. Every fucking cross it does it. Every time it crosses, you get 40, 50 points or more. Even I made a grand on this one and it failed, and we still were trying to go long because we were like, fuck, it's too good. Just go long again. That's what I'm saying, Snooze. Why can't we do that with the EMA cross? Why can't we do that? I mean, honestly, if we got in somewhere right around here on the front run, like at 869, 870, and it's 60 points right now. If we, if you held one the whole way and got rid of the others, took profit as you went on the others, why can't we do that? It literally does this all fucking day long. Oh, dude, are you ready for your interview? How can I raise up the? Bring in your laptop and show her your charts, or him, or whoever, the interviewer. Show the interviewer your charts and talk about how you're going to program it. You're not ready, but you think. But I like to. Well, the thing is, man, you're kind of like, you get down to the last few days. It's kind of like you got to bring yourself, and I mean, you kind of got what you got. There's no sense in worrying about it. Hopefully, you and the interviewer will hit it off, or at least you learn something by going through the process.
Then you run into the Fed raising rates, and now you've run into a whole new administration with a whole new set of policies. So
Hey, how you doing today? Oh, it's a call? It's just the harness. Okay. So is it like the recruiter call to get to the real interview?
And the total amount of debt keeps climbing. Every time you do an A&E, the debt on it gets bigger and bigger.
You can put me down as a reference. You can put the forecast down as a reference. Zoom call. Box is green. Go long. Yeah, but the long was back here. Snooze. The long was back here at the EMA cross. You guys didn't tell me the EMA cross was happening, and I was. Yeah, it is. But you can't go long from up here. You got to wait for a pullback now. Yeah, so really you're like, if we're going to do the pullback game, the pullback is right here. So you need a pullback somewhere in this zone or off this resistance, like in here, to go long again. But by the time it does that, we might be looking at front running the short.
Restructuring and working
Yeah.
these historical portfolios.
Can you give us an
an example, though, of kind of what's the cushion? Like, oh, so at 5% now, I mean, if that goes up 2 or 3%,
Yeah.
does that mean some of these companies are basically, they're just not
Maybe experiment with an eval, letting it run a little longer. Don't do it on your paid account. Make sure you prove stuff out before you try it on the paid account. All right, I gotta look this account up. Hold on.
If you raised $1 billion of debt to do a leverage buyout, when short-term interest rates were zero, now that $1 billion of debt with the A&Es has become 1.2 and 1.3.
You should wear like a tank top with a bandana on the Zoom call.
4% risk-free. You're really paying more like 8 or 9 or 10%. Ooh, you've got a problem. It's really
No, don't do that.
So you're trying to capitalize. Can you
All right, what am I
quantify,
doing?
how much money have you really put behind this in terms of chasing new opportunities as you're starting to see some of these
Yeah,
companies,
always no pants.
struggling, for lack of a better phrase?
You know, the first thing, all of us have portfolios, Roman, right? The first thing when you see a sea change like this, it is a sea change, you ask yourself, hey, how good is my portfolio? Do I have it really battened down, right, at a moment in time like that? And then we have a good portfolio. Okay, all right. The second
Noted.
No,
We'll put that at the bottom.
the second thing you do.
Was that to your investors?
The second thing you do is you say, okay, how good is the opportunity?
It's a Zoom.
So for somebody like us,
Yeah.
look, we've got about 22 billion.
You're gonna be fine.
Right. We invested $4.5 billion.
You know what they want to talk about. They're not, you know.
And we monetized. We realized $5.5 billion.
Is that going to be higher in
I think it's probably mostly that they like you and they know that you can do the work. You know what I mean?
The first 3-4 months, we've been much slower.
You know, they don't want to bring somebody in who's going to be a pain in the ass. Trading in EMA crosses. That's right. All right. So the pullback is either here or you know, if the pullback to go longer is probably this zone if you want to do that, and or we wait for the reversal to the short, which the slow EMA is right here, right there. So we need, but if it comes down real quick, it's probably just a bloop and then back up.
Well, their exposure, right? To some extent, I feel like there's a couple different ways you can play it. Like, I'm curious how that plays out, or does it get managed okay?
Carol, when I say a 5% default rate last year, that means 1 out of every 20 companies in high yield leverage loans defaulted last year. 1 out of 20. In an average portfolio, private equity portfolio, our view, there are another 3 or 4 companies in that 20 company portfolio which are really struggling with these high rates and the maturities, right? So it's a pretty gnarly, messy kind of situation where we are.
Those companies, and I am curious, how involved are you? I'm talking about companies that you are currently invested in. How involved are you in counseling them through turmoil, through uncertainty about tariffs and the economy and et cetera?
Romain, we do a lot more than counseling. You know, look, so 40
exorcism is what you're talking about.
What is it?
When you're in, look, 40% of our portfolio goes into deals where we will end up with owning the.
All right, got the queue cleaned up.
Operating control. And when we have operating control of a business, we're really looking, and it's been struggling with debt. It's got a business which is underinvested. For us, we are strengthening the management team. We are investing money behind the business. We are, yes, there's some cost cutting, but we are really focused on putting that good business back together. So our engagement, we have a large team of operating partners. We are really engaged with the management team and driving that change.
Hey, listen, 15 seconds, Europe, yes or no? Lots of opportunities right now.
lots and lots.
Really? Okay.
She's gonna ask you about that 12 months from now. So,
I was prepping last night, late hours, and I'm like, oh my God, you called it. Well done, well done.
I want to be invited back.
You will be.
Thank you.
Done deal. No doubt about it. Victor, thank you so much. Victor Khosla, Strategic Value Partners founder and chief investment officer. Back to New York, and Bonnie Quinn with an update on the trade.
Carol, thank you. Yeah, we're off our lows. Still a second day of declines for equities and for yields. We have the VIX at around 25. So more companies are turning into the green. Nevertheless, sectors-wise, we're really just seeing positivity for the...
I gotta do my FanDuel bet for tonight.
And that includes things like Vistra Energy, which is up 4.7%. It's one of the best performers in the S&P 500. Constellation as well is up 12%. But then you had some of those earnings yesterday that are really weighing on tech in particular. Palantir down more than 12%. It is the worst performer now in the S&P 500. Speaking of which, we are waiting for earnings after the close today in about an hour.
Yeah, the Pacers. Pacers are my team, man. TJ McConnell is like 1,000 to the positive for 10 points. I'm putting some money on TJ. That's like easy money. It's easy money, G.
An SMCI preliminary earnings report, which was not great for that company back a while.
Shit, G. That's easy money.
And then, of course, on trade, not seeing many headlines, no breakthroughs as such. We do seem to have a slight shift, though, from the administration. Meeting with Mark Carney, the new Prime Minister of Canada earlier, President Trump said he would prescribe tariff levels and tariff concessions for partners. This appears to be moving away from the idea that he's going to be in back-and-forth negotiations. He also said...
See, look at the little pullback. She's still pushing higher.
Announcement before his trip to the Middle East next week. It takes place Monday, so the announcement
This is
will
my
come at
zone.
some point before then, but he didn't say what it would be about, whether it would be
probably-
trade or investment or anything like that, so no idea what's
Might
happening
be
there.
okay.
In other markets news, we did have a solid 10-year auction, which cheered investors. And that sent yields just a little bit lower. Like I said, we have the 2-year yield now down about 4
You'd
basis
add?
points, a little more
You'd
than
add if you were in? You would add here?
with the 10-year yield at 4.3140. The other big mover is crude oil. It's
I can
off its
understand.
highs as well. A barrel of New York crude trading at $59.02 a barrel. Brent crude at $62.06 a barrel. And gold
Oh, I got a
continues to
30% profit booster.
Milken Institute Global Conference now in Beverly Hills, California, and Romaine Bostick.
All right, thanks, Bonnie. You know, Carol, I was telling you about all the great panels. I actually finally had a chance to get to one.
Oh, they ended it.
You have one too.
I had one a while ago.
All right, well, there was a really amazing.
I got 25% profit booster.
Affordability, and at least for me, it really hit a nerve. I think it hit a nerve with a lot of folks in the house. We talk about median home prices now approaching almost 6 times the U.S. median
All right.
income.
Call along here.
You're spending more than a
936. You know you're going to get 50 points because we're not in on it.
Council of Experts, chaired by the former mayor of Baltimore, Stephanie Rawlings-Blake, to advise the company on initiatives to boost housing supply and drive down prices. Pleased to say the mayor, Rawlings-Blake, joins us right here on the Milk. Good to see you, Stephanie.
Thank you for having me.
Housing affordability is something people have been trying to solve probably for decades, maybe even longer than that. A lot of the topics that came up, or the responses that came up, really talked about the emphasis of more government involvement in pushing this forward. Are we seeing that?
We're definitely seeing it, but one of the things that I took out of the panel that we had is that it's going to take all of us, right? Airbnb understands, for example, that they're not the cause of the housing supply shortage, but they can be a part of the solution. As a mayor, I knew that I didn't cause it, but I had to be a part of the solution. And some of the developers and private equity folks that were on the panel, they have to understand that they have to be a part of the solution as well. So it's an all hands on deck. You know, we talked on the panel that we're short in this country over 5 million homes. And we're not going to close that gap by doing what we did yesterday or a decade ago. We have to think critically and with more innovation around how to build more, how to build faster, and how to build better.
How does the city, though, grapple with economic growth, similar to what Baltimore went through, where you had this huge resurgence, companies coming back, people moving back to the city? Of course, that also drives up, typically, real estate prices as people look for homes. So there's a balance, right? You want to, reap the fruits of getting all those people back into your city, but at the same time, you don't want to shut everyone out who maybe isn't at a certain income level. Where's the balance?
So I always look for the win-win. And when you talk about bringing people in, that's always a good thing. But in Baltimore, like many cities, we have a circuit breaker, meaning the value of your home year over year could go up 100%, but your property tax will only go up a fraction. And that allows people to stay in their homes and reap the benefit of wealth creation through their home. But there are also things like repurposing vacant homes. I think we need to think differently about vacant homes. Yes, they're a blight, but they're also an opportunity. When home ownership is so far out of reach for many of America's young people, we can look to rebuild and these vacant homes as a way, because the infrastructure is already there, right? Cities like Baltimore were built for, over 1 million people. So that infrastructure is there, the people aren't there. So how do we look at those vacant homes as opportunities for families and young people to become homeowners?
Stephanie, I love that you went there because I think people are like, just build homes, build the 5 million homes. It's not just about building them anywhere. It's about building them where people need them. And they tend to be cities which tend to be expensive. So as soon as the build happens, it's often expensive. How do we fix that? How do we get developers, politicians, everyone to say, let's build where the housing is needed and let's make sure we make it affordable? How do we do that?
So cities like Baltimore are incentivizing affordable housing, incentivizing repurposing vacant homes.
Right.
That was one of the projects that I started as mayor, my Vacants to Value program that our current mayor has taken on and made it his own. So we need to do things like that, where we're creating incentives like down payment assistance. The president of Johns Hopkins is speaking here at Milken. They give employees like match for match. Like they're giving their employees thousands of dollars in down payment assistance if they move around the university. So things like that. And we have to look for innovative ways to promote financing of affordable housing as well.
Do you feel like all the right stakeholders are at the table talking? Because sometimes, no. Who's missing?
I think you have to look at the job creators. On the panel today, we talked about a teacher in a public school having to commute an hour and a half, right? Mm-hmm. That is atrocious. No teacher should have to commute an hour and a half to get to the classroom. So the Board of Education should be at the table, the hospitals, the universities, all of these people, the companies, the people who are employing America's citizens should be at the table to be a part of the solution. Everyone has a different role to play, like Airbnb. Like Airbnb supports grassroots organizations that are doing things like fighting zoning laws that prevent housing, that work with cities to reduce bureaucracy, make it easier for buildings to happen across the country. That's what Airbnb is doing, their part. But every company that has employees could be doing something.
Great point.
All right, Stephanie, that was a great conversation. It was great to catch up with you. I had to fly all the way to LA to catch up with you. We'll get back to you.
Good luck.
When we're back on the East Coast. Stephanie Rawlings-Blake, Airbnb Housing Council Chair and the former mayor of Baltimore. We should also point out, she mentioned Johns Hopkins. Of course, Mike Bloomberg is a big contributor to Johns Hopkins. He is the owner of the company that owns the network that you're watching right now. All right, a lot more coverage coming up here on the big program, but we want to toss it down now to some of those great panels. Sonali Basak actually sitting down right now with a big panel on capital markets. Let's dip in and take a listen.
What I would tell you, though, is that the region continues to develop and create trading networks amongst themselves. So even outside of the headlines, everything that we're reading, you look at Singapore expanding its relations with its neighbors. You look at ASEAN as a whole, I think in the next year or two might become the 4th largest trading bloc, if you will. You look at what India calls West Asia or the Middle East, as other people call it, look at it increasing the sort of trading relationships they have with the region. So Asia continues to integrate, it continues to trade. It's just the uncertainty and the overhang that we are waiting for some sort of resolution for. What I would also tell you is, you say, yes, we are a foreign investor, I agree with that, but half of our assets are here in the United States. We have had a fantastic experience with the companies here, getting to know them, learning from them. very hard to see that changing. It is a tremendous ecosystem right here. So as we see it as a very long-term investor, we are positioned to take advantage of the volatility. We have a mandate, very broad-based, consensus-driven mandate that allows us to do that. And so in times of dislocation, we are and should continue to take advantage of the companies that we like, people who we know, and continue to invest that sort of capital for the long term. Of course, it's very challenging in any of these short-term periods of dislocation. But as has been said before at this conference, we have been here before. We have been through multiple periods that have looked far more challenging and have emerged much stronger. And let's just say you were not reading the headlines and you had come here and you listened to them.
All right, Sonali Basak up there with a great panel on capital markets. Lots going on here at Milken, including conversations about India. India's $3.5 trillion economy still dwarfed by the $17.8 trillion behemoth that is China. Economists say it would take a lifetime to catch up. Shoddy roads, patchy education, red tape, a lack of skilled workers are just a few of the many deficiencies Western companies run into when they are setting up shop there. But there's one important measure where India could overtake its northern neighbor far more quickly as the engine of global economic growth. So let's get into it. So participating in a panel here at Milken on India's growth outlook is John Chambers. He's former Cisco CEO, today the founder and CEO of JC2 Ventures. He is also the chairman of the U.S.-India Strategic Partnership Forum. It's a nonprofit, non-governmental, and nonpartisan organization. Hallelujah, they're out there, committed to creating a partnership between the two countries. John, welcome, welcome, welcome.
Carol, it's a pleasure to be with you. Romaine, great to see you again, my friend.
Well, let's start with the environment, uncertainty. I love folks like you. You've seen lots of cycles. How do we manage through this?
Well, I'm pretty good at pattern recognition. I have a lot of weaknesses. I've seen every movie at least twice, and I've made every mistake. But all the way back to the 2001 dot-com bubble, I was the first one to call it, granted late, but I said it's a 100-year flood. The Great Recession, 2007, I called early because I saw the financial institutions change their buying behavior, and I said there's something wrong here. And even with COVID, I was unfortunately lucky enough to see it coming out of Southeast Asia before we even knew what it was about and its potential impact on the economy. Today's environment is another period of uncertainty. Largely a result of tariffs. The economy was doing reasonably well. I understand the plans in front of us, but when that tariff announcement was made 2 weeks ago, first week in April, I called up all 24 of my startups and said, we're potentially headed for an economic slowdown. Here's how I want you to plan for it. Run the playbook I taught you. Focus on how you come out of it stronger. How do you control your expenses? Pause for a period of time, but then how do you grow as well? So during these turnarounds...
When you say slow down, you're talking about growth, but just slower growth, or are you talking recession?
I'm talking probably 50-50 chances of recession, and I did that the first week in April.
Okay.
I'd seen this movie, and I watched how the stock market reacted. With AI and other things, it's 5 times the speed, 3 times the output. So again, each one of my companies, I say do a plan A, which I said bordering on a recession, which unfortunately looks like it may be fairly accurate. A pessimistic plan, because you want to make sure you can handle it. And then an optimistic plan for how you grow and come out of it. And that playbook I've run again and again in terms of the opportunities. The key point to remember for your viewers is technology has always led coming out of every economic downturn. So if you're betting on one industry, double on tech. You're betting on 2, AI with technology and cybersecurity. So I'm optimistic about the longer term. We'll navigate through this.
Yeah.
Countries to bet on, to your point about India, the Middle East, Gulf states, and the U.S. are my 3 big bets.
Let me just ask you, though, do you think we're going to look back in a year, 2 years, 3 years, and say, wow, this was a moment in time where the U.S. position in the global world, in global markets, changed, and maybe not for the better, or not necessarily?
Well, I think if you look at the big picture first, great question. I think the leaders in the global markets will lead with artificial intelligence, i.e. technology. As I said, they always lead us out of the economic downturns. And
oh, we got a little pullback there, almost to my zone. That was a pretty strong pullback, and then up.
Modi says it's America and India together, which I kind of agree with the possibilities. So I think our countries will be stronger together. I think we'll look back a year or two from now and say it was an opportunity. Great companies always break away during the downturns, and great countries also respond to those. So I'm the optimist long term, but I think in the short term, we're headed for some dumps.
What would that relationship look like between the U.S. and India? Is that akin to the relationship that we maybe used to have with the U.S. and China, or is that going to be something completely different?
Completely different. Just for your viewership, I was one of the first people to bet on China in a big way. I came out of Wayne Laboratories. At Cisco, the first big bet I made, Carol, was bet my future on China as a partner for me. 1995. A lot of people doubted on that.
Amazing.
It was very lucrative for me. We partnered very effectively with the Chinese. They delivered on everything they committed to me, etc. But fast forward to 10 years ago. 10 years ago, as I was leaving the executive chairmanship of Cisco, I lost trust in the Chinese leadership. And I moved to double down on India again. I was the first big bull in India, made my second world headquarters at Cisco in India some 20-some years ago. And I was one of the first to back away from China. I encouraged my startups not to invest in China. So I kept them largely out of that, even though I have 11 unicorns.
Do you think that has left Apple in a really rough position because of their exposure and all in?
Well, a couple things I've learned in life. Never bet against Apple or Microsoft. And Tim is wicked smart, and just like Steve was, he will know what to do. Watch how Tim's maneuvering. He'll find a way to get along with the Chinese side, but he moved his iPhone production into India. Modi realized this is a chance for his digital India to really take off. Remember, he built his whole strategy as a country around a digital India, of which digital manufacturing was one. It plays right in their sweet spot.
It's Tim Cook. I mean, you are regarded as one of the best CEOs of your time.
Thank you.
Do you think Tim Cook kind of has that crown now? Because I think about the way he navigated the first trade war during the Trump administration, this pivot that he's trying to make now to lessen his reliance on China while still maintaining a presence on China. I can't think of a CEO that's sort of threaded the needle as well as he has over the last 10 years.
I think there are probably 4 CEOs that come to mind. 3 of them are in the technology level. I think what Tim has done at Apple has been amazing. And make no mistake about it, very few leaders follow a legend that did great and had one of the most valuable companies ever.
All right, we got our pullback. We didn't quite get to the zone. So if somebody out there was looking to do the continuation trade, we had a nice little pullback past the 20, continued higher. That would have been real nice. You know, if you were sitting on the 20, you probably would have been okay.
Then the fourth one I'd name was Jamie Dimon. He perhaps understands more than any of the leaders how do you use technology and direction. Now, one outside the country, Sean.
So we're just waiting for an EMA cross. We're going to try and front run the next one. We're coming on 3 o'clock, so we don't have a whole lot more time. We might not get to it today. We may not get to one today.
Bloomberg from Milken. Great.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Is this a negotiation or the new rules of the game? It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
In case you missed it, on The Pulse.
I think that the tariffs actually represent more of a disinflationary risk than an inflationary risk. You think of, for example, products coming from Asia looking for a market, them offering lower prices to find access to the market, but actually you could get trade diversion from the EU because the UK has lower tariffs. It all depends on how much substitution there really is.
Don't miss The Pulse, live every weekday.
Welcome back as we continue our special coverage of the 28th Annual Milken Institute Global Conference here in Beverly Hills, California. I'm Romaine Bostick. That's Carol Massar, the host of two of your favorite programs on Bloomberg, Bloomberg Business Week and The Close. A day with markets on the back foot, a day where Jay Powell started a two-day Fed meeting, and you want to know what?
What?
Nobody's really talking about it. No one cares.
I feel like this is a year. It's so fascinating. Some of the big things and the big stories out there, all of a sudden they're kind of moved to the side because of what's going on in Washington and kind of the tariff conversation.
Yeah, probably the most important person in Washington is in the White House today. And of course, that person has had a big effect on financial markets, including in the world of fixed income. And while we have seen spreads in the U.S. high-yield bond market actually down from that big spike that we saw in early April, they do remain elevated, and so too does the volatility. And in the less liquid world of private credit, direct lending spreads do sit just a touch wider, although we don't know quite how wide for obvious reasons. But that has left some money managers much more selective about adding risk. Here to discuss those correlations and the dislocations is Armen Panossian. He's the co-CEO over at Oaktree, $200 billion in assets, mainly in credit. Great to see you, Armen.
Great to see you both.
Are you buying right now?
Carefully. We are mindful of the exposure to tariffs. We are mindful about the potential retaliatory tariffs. We think there's some good value out there, especially in public credit, but we are also recognizing the fact that we may be on the precipice of some volatile times ahead.
What are credit spreads telling us right now? We had that brief spike in early April, and I know we're still elevated, but we're nowhere near the types of blowouts we saw during past financial crises.
Correct. We're at about a 360 spread in U.S. high yield. If you look at the high and the low over the last 6 months, it was 260 and 460, so we're right in between. So you have to ask yourself, has the news been supportive of being sort of right in the middle there? I think the second and third quarter numbers as they come out, however, could suggest that 360 is a little bit on the tight side, to be honest with you.
Armen, I guess what we have to do is kind of accept the reality, though, that, all right, here we are at this moment in time, but 24 hours from now, it could be very different based on what's coming out of the White House. So when you say precipice of a volatile time, I mean, that's the reality of it. What would happen to make things settle down? Is it a tariff agreement with U.S.-China? Like, what is it in particular?
I think it's exactly right. If President Trump decides very, very soon that there is a reasonable resolution with China in particular on tariffs, then I think there's a relative calm that will persist in the economy and the markets, and companies will be able to know what to do next. For now, what's happening is there's a delay in spending, consumer spending, capital expenditures. As that continues, it could cascade into unemployment. And that's the sort of the really negative outcome here if this negotiation takes much longer.
All right, so if they get a deal, and it is a little bit more onerous in terms of tariffs between the two nations, is that kind of okay as long as we know the terms, or the terms do matter as well?
The terms do matter because whatever the tariffs are, let's say it's 60% on China and 20 or 30% for the rest of the world, that's still inflationary.
Right.
And so the question is, what's after that? And Secretary Bessent mentioned sort of a three-pronged approach. There's tariffs, there's taxes, and deregulation. So the question is, does the deregulation and do the lower taxes offset the impact, the inflationary impact of tariffs for consumers or not? If it doesn't, then there could be demand destruction and some economic issue.
So Bloomberg reported last month that Oaktree was setting up another special situations fund, trying to raise money for that. Are you able to share any thoughts on the progress of that?
Well, we can't talk about any particular fundraise, but we do see a lot of opportunity for companies in need of both equity and debt to help them bridge through uncertain times. We are seeing more activity in terms of companies calling us for rescue loans. I know others have mentioned that as well. I expect that given what's happened with the policy backdrop, and private equity firms had hoped to be able to sell out of their businesses earlier this year. It was supposed to be a really strong year for M&A. But given what's going on now, I think that those same private equity owners will have to come to the likes of Oaktree for some solutions that help to extend their ownership of those businesses.
Has there been discussion, not just at Oaktree, but just amongst your peers as well, in the private capital space about trying to find ways to increase liquidity, or at least have the flexibility to increase liquidity should times really get hard?
In terms of in liquidity in the asset class, I think that's very hard to do. Yeah. Now, the reason is in below investment grade credit or unrated credit, the borrowers want their financials to be not in the public domain. You need those financials to be in the public domain to be able to increase liquidity and transparency in the trading of those assets. In investment grade private credit, because usually the borrowers are already publicly traded, it's easy to triangulate to the value of a privately issued credit to a publicly traded company.
What are the geographical variations and differences that you're seeing, or dispersions? Europe has been a topic we've been talking about a lot here at Milken.
Okay.
Well, we're not seeing a tremendous
About
amount of
305.
We are seeing, however, is our clients globally are wondering whether they need to back off on how much exposure they have to the U.S.
They really are asking.
They are asking. They know that the U.S. is still the best place to invest. It's the deepest market, strongest economy. But the question is, has the U.S. damaged itself in some for an intermediate period with some of the policy statements we've made? And if that's the case, should we, a non-U.S. LP in particular, should we be looking at other parts of the world, like Asia or Europe? In Europe in particular, there are some tailwinds, and the tailwinds being stimulus around defense especially, and infrastructure relating to defense. A lot of capital is going to be spent. Debt to GDP in a country like Germany is low enough that there could be some additional debt taken on by Germany to fuel this type of build-out. It's probably a good time to think about asset allocations a bit.
With regards to some of that allocation that we're seeing to Europe, is that concentrated, though, around defense, or at least around industries that would be a direct beneficiary of that increase in fiscal spending?
Had somebody just sign up online right before my call.
The point of focus is in general industrials, and that is a first order and second order.
We accidentally got disconnected after I figured it out.
On a first order and second order basis.
Do you think we'll see?
All right, so we got a pullback happening. It's a pretty big pullback on the ES.
Private credit, private equity, they didn't necessarily chase the U.S. At least not
the ES here.
That we have here. Do you see
we're all the way down to the 20. This is pretty violent. This might be the reversal we've been looking for.
I think the size of the borrowers in Europe, however, just tend to be smaller.
Let's see if we're ready. Let's see if we want to front run this or not. Not yet, for sure. I mean, we're not close yet, but.
For European LPs, for European investors, there is a different regulatory dynamic that requires them to really favor European investment, and they're not finding enough to do right now. They have a lot of capital and not enough places to put it in Europe. So the market does need to expand. The question is, will there be enough businesses of size and scale and giving depth to that market for deployment in the region?
Armin, when you said that some of the investors were saying, should we reduce our exposure to the United States, by how much? Are they just saying a little bit, or are they looking to say, do I need to be a little bit more aggressive outside the U.S.?
For now, it's by a little bit.
Okay.
Right now, most non-U.S. investors have something like 50 to maybe as much as 70% of their portfolios deployed in the U.S., private equity, credit, of a variety of types. They're not talking about cutting that in half, but 5, 10, 15% could be on the table for some of them.
That's significant. Hey, last question. Milken, I feel like from year to year, the mood, the narrative can change. It feels like everybody's here trying to figure out what's next. Yeah, there's always a part of that, but I'm just curious what's striking you about this year's conversations.
It's a good question. I think because the S&P is back to sort of Liberation Day levels, I'm not surprised to hear that some people are probably a little bit more optimistic than that there will be a deal cut. surprised to hear that there's a belief that that sort of rationality or rationalism will prevail and that we'll get to a deal on the tariff side that is acceptable to U.S. companies in a reasonable enough period of time to avoid a bad outcome. Well, I don't think that's
All right, so we're at the 20 EMA.
that's the likely outcome.
We're starting to get a. We're starting to see the EMAs close. Here's my zone. I'll move my zone over.
Or non-U.S. investors. U.S.
I like that zone.
U.S.-centric and they believe everything will be fine.
We got the stochastics rolling down.
Are a little bit more concerned because
So if we're looking to front run, we really want the EMAs to be a lot closer than this. I'd like to see the forecast cloud change. You know, if the 50 proves to be support, you know, maybe we tap the zone and go higher. But if we keep getting red candles, you know, we may end up falling right through, and maybe we can front run it. Nope, looks like the 20 is going to hold it up for now.
If that mood has actually changed or not. Great to have you here, Armen Panossian, the co-CEO over at Oaktree. All right, keeping an eye on public markets right now, off the lows of the day, but still in the red. Let's toss it back to Bonnie Quinn in New York, who's taking a closer look at the market action. Bonnie.
Thanks, Romain. Yes, down for a second day. We are off our lows for the major indices. Nevertheless, the S&P 500 right now down more than 0.5%, and the Nasdaq 100 down 2/3%. The Dow down 0.8%. Bear in mind, though, that after the last 2 weeks run-up, we're only, and I'm putting that in quotes, down about 8% from the peak for the S&P 500, and down about 10.5% on the Nasdaq 100. Of course, we're waiting on some seriously important earnings for the Nasdaq 100. Later on, we're going to hear from ARM, and we're going to hear after the closing bell from several other companies too. We'll get an idea of what chip demand has been like, and that'll give us a signal for what Nvidia's earnings might be like at the end of the month. We're also waiting on trade headlines, AMD after the close, as I said, ARM tomorrow, and other companies like Rivian as well, which will be an interesting one after the close. It's up 28% year over year, basically unchanged year to date. But earlier we had Speaker Johnson saying it does look like the EV tax credit will be killed. Towards the end of this week, the Republicans are going to take that to the House. We did have a solid 10-year auction, but if you look at the curve, it is lower. We have the 10-year yield down about 4.5 basis points. The 2-year yield down about 4 basis points at this stage. Solid auction at the same time, good demand for those 10 years. And then a couple of notable movers. Constellation Energy shares surging. It's up about 12% after announcing it's close to signing long-term deals to provide nuclear energy to meet that growing demand from data centers and factories. So perhaps someplace else where the power can come from as opposed to natural gas or coal. Palantir, though, down 12% after its earnings didn't sufficiently prompt fresh aggregate buying. Let's get back to the Milken Global Institute conference now in Beverly Hills, California, and Romain Bostic. Romain.
All right, Romain Bostic here along with Carol Master at the Milken.
All right, we're still breaking down. Breaking down.
All right, let's get right to it here because we got a great
breaking down.
We're going to talk about global wealth because global wealth assets held by individuals, when you add all that up with the calculator,
it's a lot.
That actually rivals the pool of capital that you actually see, believe it or not, amongst institutions. And that pool of capital, as that grows, private markets are becoming a much more critical replacement to some of the public-facing portions of that, as well as equity allocations as well. Alternative investment firms like Apollo have really leaned into that, led by the efforts of none other than Stephanie Drescher, the firm's Chief Client and Product Development Officer. Pleased to say that Stephanie joins us right now. Stephanie, great to see you.
Great to see you. Thanks for having me back this year.
Absolutely. What are you hearing from clients these days?
You know what? You just have to look at the volatility that we've all experienced year to date to recognize that they are looking for alternatives, as you just mentioned, to
all right, Snooze.
supplement, to replace a portion.
I'll see you when you get back.
Public equity exposure, given the increasing volatility and correlation.
Just walk the dog. You're not gonna barbecue the dog.
It's resonating in terms of what the private credit markets, private equity markets,
And you don't get high from your own supply.
in their overall portfolios. So
See you in a bit.
our phones have been ringing.
This may be a dumb question, but is there enough to go around? Like, where are the opportunities right now? Because it seemed like even before this year, there was so much competition for what at times seemed like a relatively limited pool.
You know what? We think
thankfully have built out that proprietary origination. And while we have developed extensive relationships with financial firms, we also have created our own engines to create those opportunities. So origination is critical, and investors, individuals and institutions alike, are seeking that. So we feel really good about the opportunities we can offer in addition to the public exposure that our clients have. But ensuring that that type of excess return is generated from all those sources of underlying kind of proprietary flow is critical.
But like playing off of that, I do think about as certainly the private markets have to continue to grow, and there's just so much money chasing again certain deals. You know, should we assume at some point there's some distortion, or how do we prevent, or how do you guys make sure that there isn't that distortion in the market when it comes to valuations and investing?
Look, we believe that the promise of quote alternatives, really the private market exposure, is to deliver that excess return per unit of risk over the public market equivalent. And having that discipline, having that rigor of analysis to make sure that we deliver on that incremental
These are two perfect
return,
pullbacks
albeit
here.
for slightly more illiquidity, is critical. So our view is to maintain that discipline. Not all managers are created equal. It's why selection is critical, and ensuring that there is that trust with the managers in your portfolio.
Is AI helping you guys in this analysis? I am always curious how that's kind of being factored in.
Right. Look, as a firm, we're clearly looking to AI to make us more efficient and to ensure that we're taking advantage of the developments in AI application. I think there will be more for us and for the financial community as we go through that to complement the judgment that we have as investors.
Are you doing it already?
Yes, we've started to incorporate different use cases into areas where we feel we can build out that efficiency to support our process. It's certainly not a replacement for the investment judgment that we bring to bear. I just wanted to mention earlier, you highlighted the kind of the scope of opportunity for individuals, and it does equal the size of the institutional market. And over the last year, there's been so much progress made in terms of the innovation and ability to deliver products for the individual, for families, as they frankly deal with the realities of the 60/40 portfolio.
Well, that's what I'm curious about too, because back the last big investor day you had, I think it was in October or so, you guys talked a lot about growing that wealth channel. I think the target is $150 billion by 2029.
Right.
Where does that come from? Because I know you've made some partnerships. Apollo has made partnerships where you're bringing in investors that are less high net worth, or at least you're offering products that are more accessible at a base price point. Is that the strategy?
That's part of it. When we think about the market opportunity, it's everything from partnerships with private banks and wires to those in the independent channel, the ultra high net worth family office, as well as partnerships, as you're referring to, for the mass affluent. So there is a wide range. It all goes back to making sure that we can help the families and individuals to achieve their retirement goals, their kind of wealth and retirement objectives. And today, it's harder than ever, given the traditional public 60/40 performance. Even year to date, that's down about 1%. So given the volatility and the indexation that we see, increasing correlation, the ability to supplement that public exposure, equity and debt, with private holdings has been a very prominent part of our conversations.
I am curious in terms of the administration. I'm not going to ask you to say anything about tariffs right now, but in terms of regulatory oversight to one of the things that we are talking about, democratization. Again, I'm thinking about that. The 60/40, not so great. I'd love to have more access, but I'm just curious what might come down from the White House and the administration that helps in that pursuit.
You know what? We'll see. I do believe that there's recognition that the institutions have benefited from these excess returns in their portfolios for decades. And it's real in terms of the ability to help historically, retirees through pension plans save and build. And I do believe that over time there should be the same access for individuals as we think about their pools of capital.
We'll see what happens, right? So much going on. Stephanie, thank you so much. Thanks for coming by once again here at Milken. Stephanie Drescher, she is Apollo partner and Chief Client and Product Development Officer right here on set with us. Hey, happening right now on one of the stages here at Milken is our own Sonali Basak leading a panel on capital markets 2025. Let's listen in.
Okay, so now we got our forecast cloud closing up. We're kind of looking, we're stochastics, kind of way over, we're getting overbought.
The dollar rates, because this is after a long time you're seeing that kind of dollar weakness kind of linger for a while.
This would be a pretty strong front run from here.
It's going to be higher for longer because, and we talked a bit about it.
Maybe give it a candle or two.
That U.S. debt, you got
Maybe start looking at the short, because we could. There's still the 20 EMA is still support.
A third of that is held.
So if it's still supporting the price,
U.S. assets. So you have
action.
that roster. You have Japan, China, and the UK, and a whole bunch of nations holding a big chunk of their debt. And the question is also, as that debt, clearly, Jim, your point around, nobody's selling, there's no kind of, there's no dumping and the like, there's no evidence of that. But you also see gold is kind of lingering around, 3,500. So somebody kind of flipping and reallocating portfolios. And the question is if a lot of the traditional buyers, because they're
all right, I think I'm gonna try the front run.
US debt that the way
if I can get in right here.
What happens to the long bond?
Order
what
filled.
happens to the yield curve?
All right, I'm in.
To sell it going forward, you have to pay up. So the yields. So the question is, do yields stay higher for longer? So there are a whole bunch of kind of moving parts, which once again, with a bit of prudence, the key is to maintain. Liquidity is. You have to maintain liquidity.
All right, I'm moving.
We've seen this story before.
I'm to break even already.
Folks start selling the good stuff because that is what is saleable, and to make
Order
up for losses
filled.
of the bad stuff. So I think we're advising clients, stay liquid, be very, very prudent, capital structure clean. Incredible opportunities will come up because there's
Order filled.
All right, everybody. Of course, that's Sonali Basak up on the big stage here at Milken. Now we are headed to the close here on Wall Street. Just about 15 minutes to go. With us right now, though, is a great voice to talk about the market environment, really the big picture. Let's bring in Mary Pang. She's Cambridge Associates Global Head.
Going short on the front run.
And a partner as well at Cambridge. They help institutional investors, including endowments, foundations, and family offices, invest their capital across a multitude of asset classes. And they had about 616
Came back and got me.
in assets under management. That's as of the end of last year. Mary, great to have you here with Romain and myself. Big picture, a lot going on, a lot of questions here at Milken. How do you see it, and how much clarity do you feel like we have about
Order
what's to
filled.
come over the next 6 to 12 months?
That's a great question, Carol, and thank you for having me on the show today. Well, there is certainly a lot of uncertainty that's going on in the marketplace right now. A lot of the families that we talk to, ultra-high net worth
See if we can get this right.
ultra-high net worth principals,
Order.
there's a lot of questions around the uncertainty that seems to be facing them in their portfolios,
filled.
particularly in the US. The one question that typically comes up in some of these conversations with our clients globally is whether the US is actually still a safe and reliable place to invest. Listen, we're not in the business of trying to.
Wait, have you ever been asked that before?
not so as much as we have been lately, that's for sure. Particularly given our clients are all overseas, many of them are overseas, and a lot of international clients have been asking us that question. We're not in the business of trying to catch a falling knife here. We're in the long-term business. We're basically trying to provide our clients with a sense of calm and give them the advice to stay the course and just to be very diligent about their commitment options.
But there is I know the short-term noise isn't what you get involved in, and you have the luxury of being above that. But there are things taking place now that some people think are going to be long-term structural changes to the global world order, for lack of a better phrase.
There we go.
When does that enter into how you think about things and how you think about the advice you give?
Yeah, no, it's a great question, and I think there's definitely short-term pressures across every single asset class that we have to stay on top of. We're talking to our managers every single day. We want to stay on top of exactly what some of these pressures are and how that's going to impact our clients at the end of the day. I mean, yes, the world order could change, business models can change, and that can affect all of our clients, not just family offices,
Target filled.
All right, got that filled.
Capital that we represent. So we're in a little bit of a wait and see. I mean, I think there's a lot going on right now, right? So we just want to wait for that sense of calm to come.
I am curious, though, just to stay on the geographic issue, and I understand why people are scared of the U.S. right now.
Yes.
I'm scared of the U.S. and I live here.
Right.
But what about China? Because that was a big narrative for the last few years, that people were pulling back from China, primarily because of the adversarial relationship between the U.S. Are you seeing more interest, though, of folks wanting
Order
to go
submitted.
I would say that there's not an increased interest in China right now. People are just staying the course, I would say. Some of our family office clients, for example, are exploring geographic diversification. So out of the U.S. into places like
Order
Asia,
filled.
more India-focused, actually, and the Middle East. And they're trying to find opportunities to take advantage of that.
You know what's kind of interesting is I feel like we are constantly questioning
Stop filled.
kind of this 60-40 and why we need to let everybody kind of have more access to the private markets. Are we at this moment are slowly building towards it or rapidly?
Order filled.
The public markets, I don't know. I guess they don't go away, but what happens? No, I know this is our bread and butter, but I mean, I'm just wondering where everybody's saying that increasingly we're seeing more activity, in the private markets. Did I give you a heart attack?
You did.
But you know what I'm saying? Like, it's just interesting.
Yeah, no, absolutely. It's a great point, Carol. I mean, I think the way that we talk to some of our big ultra high net worth
I
family
don't like
clients, for
this.
example, is to think about long-term returns, right? There's always going to be short-term noise, and we will have to manage through them. But the portfolios that we build are deeply rooted in long-term vision, and it's to insulate and help protect some of the volatility in the markets.
But to her point too, haven't we seen? So in terms of total portfolio, the holistic
Stop
portfolio,
filled.
it's kind of more of a blend of public and private in a way that we didn't have, when I started my career, for example.
Yeah, no, absolutely. But when we talk to some of our clients, they have very, very large allocations to privates now, 40, 50%. Sometimes in case of family offices, it's a heck of a lot more. So, there's a lot of dynamics that are changing in the private investment market. You were talking to some of your guests around the democratization of private investments. Yeah. And that has an impact on the dynamics of how we should allocate capital on behalf of our clients. So we have to do the extra due diligence, talk to our managers. That's one of the reasons why we're here at Milken. A lot of the managers are here. And we want to make sure we're asking the right questions. Who is your capital base? Who are your investors? Are they long-term investors? Are they aligned with the families?
Order filled.
See, I gave you a heart attack, but she said it was a good question.
I know. Thankfully, she ends on a high note. So thank you for being a ray of optimism. Mary, great insights as well. Mary Pang is Cambridge Associates Global Head of Client Solutions. As we are here on the Milken stage, we're just getting started. We got another hour and a half to go
I said we
in
were
our
15
coverage.
minutes away. We're not.
No, we're not, Carol Master. You might be leaving. I'm staying, and a big part of the reason is our next guest coming up at the bottom of the hour, Manny Roman, the CEO of PIMCO. We're going to get his thoughts on a wide range of things, the economy, bonds, and everything in between. Don't go anywhere. This is Bloomberg.
In case you missed it on the opening trade.
The president is speaking to this part of our population that we know did not benefit from globalization. The IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking. And this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe the past losers will be the winners, and maybe the past winners will be the losers.
Don't miss the opening trade, live every weekday.
The top names in business are on Bloomberg.
The policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. It's going to be important that we get more clarity on the direction of travel from here. As I'm talking to CEOs, as I'm talking to our clients, they are holding back on investment, and they're certainly tightening their belt. You're going to see some companies laying off employees and running their businesses tighter because of this level of uncertainty.
Nobody covers business like Bloomberg.
What's the best thing and what's the worst thing about trying to put money to work in this market?
Technically, we're an endowment, but we use the best of the endowment model and the hedge
So we can react very quickly, and I think we're very good, I would argue probably one of the best in the world at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes. And I continue to like that trade, so we're holding that position. And again, when you see kind of the micro and macroeconomic data coming out of the US and you see the data in China, I think you will see a tactical deal out of economic necessity between China and the US. And I think when you look at investors generally, they've left China for dead. So I think there's going to be money forced into that market.
Earnings season is here.
Earnings season begins. Is corporate America in a good place?
Wall Street is bracing.
Bloomberg is first to break the numbers.
We got Delta, Constellation Brands.
The wave of big tech earnings.
We've seen a re-rating of earnings estimates.
I got to pay special attention to all this.
With the smartest insights.
Given the degree of uncertainty, you haven't really cut earnings estimates that much.
Anyone who says they have certainty on where the growth outlook is going, where earnings are going, is probably exaggerating.
Continuing coverage on Bloomberg.
Welcome back to our live coverage of the Milken Global Investment Conference here in Beverly Hills, California. I'm Romaine Bostick.
I'm Carol Massar. Welcome, everybody. We've got a lot coming up in the next hour and a half.
A lot coming up in the next hour and a half, and let's get right to it. We've got a lot of great guests here on the Milken stage, and right now we want to bring in the head of the world's biggest active bond manager, PIMCO. They began making, earlier this year, making a case for actually owning treasuries in that 5 to 10 year zone as it saw, get this, unpredictable U.S. policy furnishing the appeal of high-quality bonds, at least compared to equities as well as to corporate debt. And so far, that bet has paid off. You see that in the returns in the bond market relative to equities. For a closer view of that market and the signals it may be sending, pleased to say that Manny Roman joins us right now, CEO of PIMCO. Great to have you, Manny.
Thank you for having me.
Market disruptions, market perceptions have changed a lot, really in the last 4 months, because I felt like in January, coming into this year, people were relatively optimistic.
That's correct. I think people had made the assumption that there'd be a very quick resolution to the tariff question. And the reality is there's a lot we don't know, but that tariffs are going to be high and that we're going to have to deal with it for a long time. And that we'll need to readjust our thinking, both in terms of economic growth, but also inflation. And I think that's the real question we have to deal with.
Can you make that change now, meaning like when you have to factor in what economic growth will be, what the impact of tariffs will be, even though we don't know, how do you make that pivot now?
I think you do scenario analysis. The big three trading partners are China, Mexico, Canada. So you basically run simulation and say, if this happened, then this will be GDP. If this happened, this will be inflation. And acknowledge that we don't know what the end game is going to be. And the only thing we can reasonably say is the overwhelming likelihood is you will have high tariff for the foreseeable future. And we'll have to deal with this.
Manny, once we know what the terms are, does some of the uncertainty go away and things settle down? But it's structurally a different financial dynamic potentially, depending on how high those tariffs are?
I think that's right, but I think a number of companies will have to re-engineer the supply chain and optimize the production costs and the transfer pricing based on what the tariff will be. And I think that changing supply chain may not be as easy as what you make it to be. For us, we look at a set of macro parameters and optimize our portfolio and decide what we think is attractive in terms of asset and buy them at the best possible price.
So what does that mean for investors? Do they just kind of stay put, waiting for everything to settle? Or are starting to make those bets, assuming it is going to be very different. Tell us a little bit about what you are seeing in terms of flows and so on.
I think you've seen enormous volatility in the equity market.
Right.
And somehow I would say we're surprised that the equity market has bounced back to the Liberation Day level, but you've seen clearly a move to cash. Our world, which is the bond world, has been pretty much unaffected. And my partner Dan Iverson has this say where you look at the yield on a portfolio of bonds, say 6%, 6.5%, it's a very good predictor of what your return will be over the next 5 years. So if you want to own bonds, you're going to make 6.5%, give or take, over the next 5 years. How are you going to get there? A lot of uncertainty.
Well, that's what I'm curious is about the volatility. And I mean, you're referring to your CIO. I mean, I saw an interview where you actually talked about how he was really embracing that volatility to a certain extent.
So there's two components to it. What we like about volatility is the fact that it will provide investment opportunity and a source of alpha in terms of trading different part of the curve, but also different product, and to move away from the US and find opportunity in other part of the world. So you can always buy US asset, but you can also buy non-US asset as a way to get duration and hedge them back into dollar. So for example, we like Australian duration. Australia has a very robust economy. We like Australian bonds, but we hedge them back into dollars. Yeah. That's a way to add alpha to the portfolio.
How complicated is it to do that when there's also a ton of volatility in the FX space and no one seems to know where the dollars might be going?
You may wonder what the 2,000 people we have in Newport Beach do. That's what they do. You know, we could deal with that. Just about. But we could deal with that.
Listen, U.S. Secretary of Treasury Scott Bessent obviously really kicking off Milken on Monday, and he talked about the importance of watching the 10-year. Do you agree in terms of U.S. Treasuries?
The cost of borrowing is very important, and I think I will answer this in twofold. One, the U.S. dollar as a reserve currency is really important, and the 10-year bond is in a way the barometer for the financial health of the world economy. So it is really important. Now, I would say you look at the whole yield curve. You look at the short end, the 10-year, the 30-year. You think also about credit spread. They're very tight. And you think about all of these parameters and try to assess what's to come and how you're going to deal with it.
Manny, one thing I'm curious about, and bringing up Secretary Bessent, what is the voice that you listen to most in trying to determine ultimately what happens in the U.S., especially when it comes to its financial system and the importance of, you know, it's been the place, the world's safe haven, right?
And it will remain as the place of safe haven.
You're so sure. Why?
Well, think about it. The US dollar is the reserve currency, but it's also the most liquid treasury market in the world by an enormous factor. And yes, you know, you can make a reasonable argument that the dollar is slightly expensive and that you may want to diversify from the dollar to other currency. But it does not mean that the dollar loses its status. And I think it's very important to keep that in mind. There's no other reserve currency. There's no other place to move trillions and trillions of dollars away from the dollar. And it is what it is.
Do you have faith in the Treasury Secretary to do the right thing, or at least get the president's ear on doing the right thing? Because he has said some things in regards to the Fed, the Treasury Secretary even. So I'm just curious, do you have faith?
I think the wonderful thing about financial markets is that they're efficient. And
so they'll tell them.
And that the market reacts to policy. Yeah. And when the market doesn't like either policies or a tweet, the market reacts in such a way that people need to adjust the course of action. The market wants the Fed to be independent, and I think has voted very strongly about that.
Oh, what happened?
Some of the choices and some of the...
Did it not go good?
Noise around all of this. And, you know, it's a good thing. Markets are there to reflect to reflect supply and demand and also reaction to event in the world.
And we saw that play out in a big way in April. One side of that.
Well, you don't know that.
Comments about there, kind of this being the most liquid market. This is kind of the reserve currency, and that's not going to end. Will it lessen to a degree? Because when we look at our treasury market,
Yeah, I wouldn't worry. I wouldn't sweat it. Just keep looking. You never know.
all the rumors that maybe certain nations might be willing to weaponize their whole.
I mean, it's not like, you know, you're not interviewing for like public speaking. You're interviewing to code.
You know, there's no free lunch. The reason why people own US dollar is because they like to own US dollar asset. There is a very strong case for American exceptionalism. The fact that the financial systems are very.
Was this the only interview, or is there a second interview?
For example, a Japanese investor where there's about $1 trillion of US debt held by a Japanese institution, it's a good place to be.
When is that?
Back in yen. And I think that's
This was probably just a recruiter just to make some notes.
to remember in terms of
Well, that's all right, man. Just get to the second interview and just
money where.
blow that out, you know?
Is the treasury market healthy right now?
Totally.
You weren't concerned at all about what.
Is there any place you can go online to like put in what that job does and get like good answers or something?
Between buyers and sellers.
No, on the contrary, I think we've seen very liquid market both in treasury and in credit. And to be honest, you know, markets have been remarkable.
You should like try and hack their computer while you're in the Zoom. Show them that you know what you're doing.
Fed intervene, but it's been very smooth sailing since. And you know, the markets offer plenty of opportunity to change your mind. One of the good contribution have been ETFs.
All right, I wouldn't sweat it, man.
Have allowed people like us to do portfolio
Oh yeah, so you can get prepared. Okay, so this was just the recruiter making sure that you're a real person that actually could possibly do the job. And she's just sending you on how to get ready for that interview. So when you get that email, you need to go right through it and master everything in it and don't make shit up. Like just do what's in the email and don't make extra stuff. Oh, really? Well, how do you know that? Well, she's going to send you the follow-up email then.
Is there concern that our fiscal deficit and the potential remedies
Did she tell you that?
Congress could exacerbate the situation in the fixed income market?
That's the wonder of being the reserve currency. Everything else being equal, you could run a slightly higher deficit than you would otherwise.
I think you're being a little critical.
And I think that, of course, people will look at the amount of deficit and
Okay, so you only got to beat half of them out.
overwhelmingly likely that
You know, it's kind of like when you're getting chased by a bear, you just got to beat 5 or 6 of them.
would you rather own very high
Yeah.
quality asset in the US?
Yeah, so when you get that interview, like the interview itinerary or whatever they call it, that's right. Yeah. When you get the interview itinerary, you need to make sure you're proficient and you do exactly what's on there and make it nice and clean and maybe even research some of it. And don't put extra stuff in there, you know what I mean? That's how I interviewed for Intuit.
The market in the world. So, like, should we just accept it?
No, I think I would reply with a quote that I heard.
And always send out more resumes. Always have a plan B.
All we can say is it's not a problem until it becomes a problem.
I've been waiting for the short, but I don't think it's coming. I like how we're doing this with the EMA cross. If I can just fine tune in the how to handle the contracts and the break even, I think that this is going to finally be the way to do this.
Makes sense to market participant. People all of a sudden don't want to be the marginal buyer, and I think that's the analysis we constantly make in terms of what's the right level to clear the market.
I think.
Manny, when we had the disconnect between
Well, you know what you do is you get out a piece of paper and you write down write down what you think and then just kind of make some stuff, you know? Maybe have an outline of shit you want to say. Just make some shit up, you know? It don't matter. Tell her you're a race car driver on the weekends. Whatever, you know?
We're going to get into stagflation. Right. And in a case of stagflation, I can can remember 73 and 74.
You know, at least now you know what to expect. You know what I'm saying? You have some stuff ready because this isn't going to be your first interview, you know?
Because everything goes down. There's no place to hide except cash. And even cash, because of inflation, you lose money. And I think you saw the price of gold reacting to this. And so if you use my frame of mind, then I think it sort of makes sense. It's not a pretty picture.
One thing they probably don't want to hear is all I want to do is live in my mom's basement and trade futures.
But the odds of a recession must be slightly above 50.
Do you agree stagflation not likely?
Yes.
You agree it's not likely. Okay.
Well, let me know when you get the follow-up email.
Stagflation is the nightmare of all central bankers.
No, I know. I know what you mean. I know what you mean. It's a figure of speech. I know what that is.
You've seen market cycle. And, you know,
But no, really. I'm really going to bust a nut.
crisis with the SNL, you know, we had the Milken conference, you know, people had bought a lot of high yield debt and some of it had to sell.
Oh,
so you
shit.
remember that. You try not to make the
I
same
don't know.
mistake.
6 minutes to MOC. I don't think there's any point in doing anything else. I think we're on the right track here. I kind of like what we did today.
You have a frame of reference where you've seen ups and downs in the financial markets.
I don't think this is going to roll over.
Your business, and I mean, you've got a big private credit business alongside the public credit business. And we've been talking a lot over the last couple of days about how all these markets seem to be overlapping. There's sort of this Venn diagram between public markets, private markets, credit, equity, et cetera. Are they in conflict with each other or are they complementing each other?
I think they complement each other, but they may not offer the same value at every point in time. So I'll give you a very simple example. There's a reasonable case to be made that we have a probability of a recession slightly above 50%. If that's the case, you don't want to own high yield credit, and you probably don't want to own direct lending. Why? Because the company are leveraged, they are weak single B, they may or may not be in the industry you want to be in, and so if you have a recession, you'll see losses. By the way, losses are normal. It doesn't mean there's anything wrong, but when we think of optimizing our portfolio, we find better opportunity to invest than the weaker credit at this stage of the business cycle.
And in making those decisions, I mean, you referenced just a second ago about all the folks who have to figure out where the dollar's going to go. I assume that there's got to be a big technological component to that. And when you took over,
Is the next one in person or is the next one on Zoom? Like with Intuit, I haven't met anybody at Intuit in person. I've never seen like a real person standing in front of me since I've been with Intuit.
analysis and decision-making process?
A very large one, and that's a very good question. If you think about it, you know, what do we want? We want great people to work for PIMCO and to stay for as long as possible.
Oh, good. It's right in Chicago then, right?
The best technology and the most innovative quant, and marry the two together and hope that it works. And the AI evolution
that's good.
for us is the ability to manipulate a lot of data coming from very disparate sources, analyze them, and get to a tool to help make decisions.
That's right.
Which is incredibly
Yeah, you can start doing full port Fridays.
in mortgages. Everyone has a mortgage somewhere. We have a totally unique database. And what I mean by database is not
You can fund your full port Fridays.
it's location, it's conversation with the mortgage broker. And so you get an edge because you have an ability to crunch through an enormous amount of data and get to another granular level of decision that
See, 3 minutes to MOC.
would need longer to be able to do.
His would go pretty quickly.
No, yeah,
I'm just going to tell you.
He's very fast.
He's very, very fast. Manny, so thoughtful, so helpful. Thank you so much for us and for our audience. Really appreciate it. Manny Robin, the PIMCO CEO. All right, just got about 13 minutes left to go in the trading session. Back to Bonnie Quinn in New York.
Carol, thank you. Yeah, just a few minutes left. We are waiting for earnings after the bell, but let me tell you that we are seeing a little bit of buying in the run-up to the last quarter hour or so of trading.
2 minutes to MOC. We pop up or we pop down. What do we do? I think we pop down and then go up. That's what I think. I'm not going to do anything though. Hey, here's my lonely zone. The zone's been here all afternoon.
Canada's new Prime Minister Mark Carney, of course, has been talking to President
Snooze.
He held a news conference.
You didn't lose the dog on the barbecue, did you?
We'll have further conversations with the US in the coming weeks.
You want to gamble? No, don't do that. Don't gamble. Don't start doing that. Not yet. Okay. No, don't gamble, SM. Don't do it.
Told reporters, I think we established a good basis. He said the US and Canada both want to move forward with trade talks and that he discussed auto industry competitiveness with Trump. He also
We're going to get this front run strategy down. I think it's just a matter of managing the ATM and the break evens. And I think we're going to start catching these 40, 50, 60 point runs. I think we can do it. On the NQ, on the ES, it'd be like 10 or 15 points, depending on volume. Kind of excited about it, to be honest with you.
Around 9% last Thursday. This is after the Quebec-based jet manufacturer's first quarter numbers came out. Their adjusted earnings, EBITDA, and revenue did miss analyst expectations. The company also reintroduced its 2025 forecast.
It's been fighting the short. It's been fighting the short.
Above 155 billion, I should say. Keep in mind the ADR is down about 10% year to date. With more on the company's business, where we are so delighted to have with us Eric Martel. He is the Chief Executive Officer of Bombardier here at Milken. Welcome, welcome. Tell us about the experience here at Milken.
Oh, boom, MOC. What do we got? What you got? What you got? What you want? There's your short.
A lot of our customer here, so it's an opportunity to have conversation with our customer.
How far do we go?
This is a great conference. You know, there's a lot of interesting topic I would say we discuss these days. So we are happy to be here again for I don't know how many times. Stop counting.
How far do we go?
What's great about talking to someone like you, or someone who's really leveraged the supply chain across North America.
Yikes.
And I'm curious, what are some of the lessons that you've learned from building that out that maybe you could share with other folks who are looking at, maybe I've got to do it, but it looks like it's just insurmountable?
I think in the early days of COVID, I would probably talk about fall 2020, we've made a very different decision at Bombardier. Instead of cutting people in supply chain, we added people, which was very different than the normal crowd. So I think that's what explained probably our ability to better forecast over the last couple of years the number of airplanes we're delivered. So we have a
There's the short.
proactive approach.
Yeah, I know, dude, but
coming up like 18 months before they come so that you have time to sort them out. So it's
well, then don't tell me about it. Yeah, no gambling, man. It's still gambling, you know. If you win this time, you're just, you know, it encourages you to do it more. And then you get wrecked. Don't tell me how I know. Or don't let me tell you how I know.
First, that side of the business, because several of the big carriers, not necessarily the ones that use Embraer, use Bombardier jets, have basically said, look, things are going to be a little slower than what we thought in terms of passenger travel. Have you seen any real ripple effect of that down to the types of jets that you sell?
Yeah. So as you said, we're focused on business aviation, so we just do private jet. But clearly, COVID was an accelerator for our.
Now, I got to say that if we bottom out and it bounces off that line of resistance, I'm kind of liking that long.
So the people who could afford it maybe didn't buy their own airplane, but they bought shares, you know, from fleet.
It's almost to my zone.
And started to fly private. So we've seen an explosion of hours. If I look at the hours our jets were flying in 2019, today it's about 40% higher. And it's the new normal. It's been going up another 3%.
I'm kind of liking this long, to be honest with you.
Our business, it created a new normal of activity. And since then, it's been just growing, keep growing.
So what ails?
See, there's a difference between going in before and then like waiting to see what the action is and then going with where it's heading. It's not as much gambling. No long? All right. Yeah, I'm good. Yeah, I'm not going to do nothing. I'm pretty happy with what we worked on today, to be honest with you. If we can get dialed in and just catch like one of those a day, one of the front runs a day for 30 or 40 points on the NQ. I mean, that's all you need, man. If you can just manage that. It's easy to get out of the trade too, you know. How do you stop from entering again? Like snooze, like, come on. We're not talking about that right now. All right? That's something for like when I No, I know what you mean. You don't do it. That's what you don't do. See, like I made 1,000 and I should have just been done. I talked about taking that trade down. Yeah, I know. I'm totally FOMOing for a long right now, but I'm not going to do it. I'm not going to do it. Maybe not. Fuck, dude. It looks juicy, man. Not going to do it. I'm not doing it. No, but you're right, Snooze. You gotta like if you get tapped out on your break even and the control EMAs are starting to rotate back against the trade idea or back against the cross, then you're done. I mean, we did a good job, and then I stayed in. I shouldn't have let. I stayed in, and it wrecked me through that one candle, and I said I was going to take that off, and I never did. So we just got to talk through that portion. If we can figure that much out, then I think we'll be fine. Right here is the long, dude. This is the long. Oh wait, maybe not. All right, never mind. No gambling. Oh, we're in my zone. We're in my zone. Been waiting all day to get the zone. All right, we blew through the zone. VWAP bounce. VWAP. I don't know. How do you how should I stop from re-entering? Just stop? I think I should just stop. Like, just don't do it. This next candle is so juicy looking. Like, when the next candle hits. Yeah, I know, because you can lock yourself out. I know, but the problem is, I know. If I could program that into NinjaTrader, I'd use it every fucking day. I would. I probably would have locked myself out after that 1,000. Especially if I had a funded account. You know, if I had a funded account, it'd be easy to lock yourself out. You just, like, it's guaranteed profit. But when you're on an eval, you're like, you know, I just need a little bit more. It just becomes a mind fuck. For Top Step X? Oh, okay. Yeah. Yeah, I wish I could program that into NinjaTrader somehow. That would be, that is a very good tool. It's a very, very, very good tool. And there's a reason why they did it. I'm not the only person like me in the trading world. Yeah, I know. You can just go over there and like, if it, you know, if you got your profit. Well, what's best is if we can get to the live account, you can take a payout every single day. So if you're up 1,000, lock yourself out and give yourself 500. Send 500 to your bank account. You know what I mean? You grew the account, you took some money back. You know, it's like it's like little stress at that point. And then if we can get this EMA cross figured out, see, there's the cross there. There's the EMA cross, but it doesn't mean nothing now. 3 minutes till end of day.
Right here on Bloomberg. Context changes everything.
Why is Baltimore so important to you? It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on
I like To get that control EMA cross early in the day, that's a really good trade, but it's only good during that cross. And you gotta just. But sometimes, you know, I don't have everything turned on in time. If it hits before 8 o'clock, I'm just not on before 8 Eastern.
So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know.
You're coming in at 1 in the morning?
You encapsulate in a paragraph or two about what people should know
every
about the
morning?
state of Maryland.
I would say Maryland really is American miniature. You tell me.
Is that when Europe opens up for you, or no? What is 1 in the morning for you?
Within 2 hours. We're the home of
3 a.m. is London Open. Really? How many like? Are you 5 hours?
One of the reasons that people are so excited about the growth trajectory we're on.
Are you like 5? Are you 5 hours east of London? Is that what it is? That's your time zone?
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find.
Yeah.
In Bloomberg Wealth, I'm going to take
One is just the alarm. Yeah.
the people that I would like to have managing my money.
The dollar as a reserve currency.
Oh, New York time. Yeah. Oh, yeah. 1 in the morning is London Open, right? New York time. 3 a.m. is London Open. Oh, okay. Yeah. Yep.
Would be to have a weaker dollar.
It's 10 in the morning. Oh, that's not bad. And then in the afternoon, we open up. That's a good trading day. I kind of like that. Here's my short I was trying to take earlier, finally. I was trying to take the short over here.
And I love just how broad the conversations are, right? I mean, ultimately, this was basically a debt conference when it first started.
There's the close. So what's the bottom? What's the low of the day? Oh, we're not going to get to the low. Here's the low.
Magic Johnson, and a little bit later, he's on stage with our very own Jason Kelly. So you get a nice cross section of things.
15:30, but yeah. Oh, we open at 4:30 your guys' time.
Closing bells in New York, right across the screen for a second straight day. Fractional gains for most of the indices here, but an interesting setup heading.
That's a good trading day. You know what? If you're in the game.
They're still going to have to say something, or at least they're going to be asked to say something. I doubt they'll say anything.
Listen, it's all about what Fed Chair Jay Powell has to say and what comes up in that conference, that press conference. So 24 hours from now, we're good. You know, be all over it.
You see the numbers on your screen, a percent loss for the Dow Jones Industrial.
All right, I'm pretty excited for tomorrow to work on this more.
As well as the Russell 2000. Your big decliner on the day, the big laggard, that's actually Dow Transfer.
I know.
Down about 2.3%.
All right, well, the world's biggest
I know, that was a hell of a short. All right, I'll quit. If you want to gamble, you gamble. The thing is I'm always going to say I'm against gambling if somebody asks me. But if you're going to do it anyway, I'm going to root for you, like Shades.
It's great to be here. I'll have to watch Magic Johnson session soon. That sounds more fun.
Hey, tell us a little bit about your clients. Are they having fun right now? Or
You have a way to catch 82 points?
The clients are having fun. They're obviously
Yeah, I know.
markets. It's been 6 weeks of
That's how regret feels. Write that on a piece of paper. Write regret, and then write blown eval, and then tape it to your screen. And then that's what you'll feel. It'll remind you of how you feel right now the next time you want to gamble. How do you catch 82 points off that snooze?
I could see them starting to make some different decisions than they otherwise would have made. But right now, I'd say what's happening is not causing any of our clients to accelerate deals. If anything, they're hitting the brakes just a little bit. But I think it's
Shit, I gotta make a call.
be a sea change in the way they allocate.
what is the thing that creates a sea change?
Oh,
Is
fit.
the thing that we are talking about?
Oh, okay.
Is it tariffs? And
Okay, so you're trading the action at that time frame.
curious if we just get resolution,
So
is that a good thing?
okay, so you're trading into the close. You're trading into the close. Yeah. Okay. Trading into the close is good. Trading during the close is bad news. Yeah. Yep.
Play and the challenge they have between
Yep, I don't like watching people trade during. You can't trade during it, but if you trade into it, you can get out okay if you're on the right end.
That are taking place, and there's a hope I think around the world for our clients that gets to a better place soon.
Do you share that hope? Because there's been a lot of discussion about this idea.
Yeah.
Even if we do start to see meaningful movement.
All right, I got to make a call. I'll be back in a few.
Just do in like 30 or 60 days or how much time we have left. Typically, a trade deal is like a year-long or even multi-year process. So does that mean that this uncertainty lingers until we actually see them sign a piece of paper?
It's a great question.
Yeah.
I think what you'll see is almost some term sheets done in trade deals with other countries that are more high level. They'll have to be ironed out over the course of a year, but it will provide a template to the market to look at what the other deals might look like that get signed up. And I think, of course, the cone of uncertainty I mentioned earlier won't be totally closed until those deals are done, to your point. But I think if you can get 4 or 5 of these done, the world can look at them and say, okay, if we did this with X country, it probably looks like Y with that country. And I think that'll relieve a lot of concern that's out there.
I am curious about the recent market turmoil and whether that has generated new interest from new clients or potential new clients in private assets, alternative assets, real assets, et cetera.
Well, what you see is there are certain assets in a lower growth environment or in a high volume environment that might lend themselves on the private side to having clients being interested. So secondaries, you might have heard some of your clients mention those. In periods of lower growth or uncertainty or lack of liquidity, secondaries do really well. We've got a big business there. And so we're hearing a lot of questions from clients on that. Private credit comes up in every meeting that we have here at the conference, and there's certain slivers of the private credit market that would do quite well in an area of lower growth or uncertainty. And so nobody's really changing their allocation policy yet because it's only been 6 weeks. But the question we get a lot is, if this were to continue for the next 2 or 3 years, what do you think would do well? In that environment. And so those are the conversations we're having.
I kind of chuckle. He said it's only 6 weeks. It felt like 6 years, right?
It does.
But he's right. It's only been 6 weeks.
We've lost the concept of time, no doubt about it. You mentioned the secondaries market. I'm really kind of intrigued by that. How much is it growing, especially in this environment where it does feel like there are situations increasingly where that market needs to be tapped to kind of help a company keep going?
You know, what's really interesting that's happening is, for a long time, the deal environment has been a little slower than it was before. And the return of capital for general partners like ourselves to their LPs has been slower than it normally is.
Right.
And so our clients are looking for ways to get liquidity for their existing private equity investments, for example. One way for them to do that is through the secondaries market. And so if you look forward and you assume the next year might be a little slower in terms of M&A activity, secondaries could step in and really fill that hole and provide liquidity. And so that's why we're all talking about it so much.
So the growth that you're seeing?
We're going to see the secondaries market continue to grow. I would say, the private credit market is probably growing the fastest.
Okay.
That one's probably got the most innovation. I think if the world continues the way it's going, we're going to see real growth in secondaries as well.
You mentioned before slivers of the private credit market that are kind of in this environment particularly doing well. How much can you drill down with us to talk about
Sure. So the private credit market has a lot of different elements to it. I mean, some of the questions that we're getting here at the conference include talk about investment grade private credit. So a lot of our clients have very big liquid fixed income books. And the question they're asking themselves is, should I take 10% of that liquid fixed income book and put it in private credit where I can get a little bit more of a yield and not give up on the liquidity quite as much as well because it's a smaller segment of it. So we're talking to clients a lot about investment grade private credit. ABF, asset-backed finance, which I'm sure you're aware of, is a huge and growing, burgeoning market. We're having a lot of conversations about that. In a slower deal environment world, where clients are trying to sell the company, let's say, and they can't get it done, but they need to keep financing themselves, hybrid credit could be a good solution to provide them with financing without necessarily diluting their investment, allow them to fight for another day, improve operations, potentially sell the company later. So hybrid debt equity solutions we think are a good product right now as well.
It's pretty amazing. I just got to say, the amount of levers, right, for companies that are out there that need to kind of extend.
Right.
Yeah,
That's
fascinating.
All right, I think we got to go. Matt, really appreciate it. Matt Gibson is Global Head of the Client Solutions Group over at Goldman Sachs Asset Management. And Carol, I think we do have some breaking news on earnings that we do have to get to. I'm going to start out first, of course, with Rivian. That is the EV automotive maker. The shares have been oscillating between gains and losses all day long here. And now in the aftermarket session, no different. Revenue in the quarter coming in above estimates at about $1.24 billion. The street on average was looking for about $981 million. Cash and cash equivalents below estimates, $4.69 billion. But for the full year, the company does say that it is going to stand by some of its previous outlook ranges for adjusted EBITDA. That is a loss, but still standing by that previous forecast. But it does say deliveries, Carol, will be slightly lower than expected in the 40 to 46,000 range.
Yeah, we also have Wynn coming out with their earnings as well, and they are reporting, let me just pull it up here, having a little slowdown in my internet. Wynn Resorts first quarter adjusted EPS missing estimates, so we're seeing that number just cross the Bloomberg as well. So a few more earnings coming out, not surprising to see. And I guess what we really want to care about is what they have to say when it comes to their outlook.
All right, we're still waiting for earnings out of AMD. We should point out Electronic Arts is out as well. Those beat on both the top and the bottom line. Our special coverage here at Milken continues, and we want to go down now to the stage, the big stage, where our very own Jason Kelly.
He's going to leave us now.
He's leaving us. Our thanks to Matt Gibson. Just down to the main stage with Alex Rodriguez, Jason Kelly, and Magic Johnson.
And I said, Lon, can I get 30 minutes with the guy? And I'm thinking like, yeah, maybe in a couple years. He's like, hey, how's tomorrow night? I'm like, bet, I'm there. So we sat in a room. It was supposed to be 30 minutes. He comes back. He goes, I got to make a quick call. And he comes back and goes, we got a little bit more time. So that led to almost a 3-hour dinner where I had like 9 pages of notes. And there's no question in my mind that how Dr. Buss impacted Magic, Irvin has impacted me. And without that dinner, because here's a man of color, here's a guy that was a Hall of Fame basketball player. He comes from humble beginnings, all things that I can relate with. And I said, if Magic can do it, why can't I? I certainly wouldn't have A-Rod Corp today because he gave me the blueprint of how he built Magic Johnson Enterprises. And we've had this beautiful relationship that I just admire him so much, and he's been so good to me. As a matter of fact, my mom texted me the other night. She goes, call me's important. I go, Mom, we just won. I'm in LA. It's like 2 in the morning back home in Miami. And she says, Irvin Johnson, I screenshot it. He tweeted about us. And I see my good friend A-Rod. So anyway, I wouldn't own a team without Magic. I wouldn't have A-Rod Corp without Irvin. And I just want to say thank you. And I want to share a story with you.
Around here someplace, not this one, the other one.
Let me ask you.
There it is behind me.
We love Alex.
And it's really a work of art.
Like, what did you see in him
Bernard
back
and Alex,
then?
where are you?
And what do you remember saying to him?
Well,
Okay,
the
good.
greatness
They have
of
no lack
him
of
as an
cash.
athlete,
I know
but
that.
also too
They're
the way
great.
the
And
way
they're
he
great
carried
people. We've been
himself,
friends for a long time.
not
Thank
just
you
on
very
the field
much
but off the
for being
field.
here. It's a great honor
And
to
then
have you both. We're also joined by Senators Shelley Moore Capito and Todd Young. Where
when
are they?
athletes
Where
are
they?
thirsty
Hi,
for the
Shelley. How are
knowledge,
you?
and they
Hi,
show
Todd.
up,
How you doing?
show
You're
up on
getting younger looking,
time,
Todd. I'll tell you.
ask a
It's
lot
pretty
of
young to
questions
start
that
off with,
really
right?
impressed me with Alex, and
Oh,
I
you
knew
too.
that he was
She
serious.
said, what about me? What
while
about
he
you
was
two?
playing,
Even more so,
he was
Todd,
getting
right?
himself ready
That's very
for the
cute.
boardroom, and so
Representatives
it's the same
David
thing for
LaHood
me, right?
and Brian
I was getting
Stahl,
myself
thank you very
ready,
much.
taking
Thank
all
you very
those
much,
meetings
fellas.
with
Thank
Dr.
you.
Buss
Good.
to get ready for
FBI
life
Director
after
Cash Patel,
basketball.
who's doing
And when I see a
fantastic
young
job.
athlete,
Thank you very much,
especially
Cash. Appreciate
when
it.
you're great at something,
And
right,
our executive
then he
director,
understands
Andrew
the
Giuliani,
discipline,
just got the
work
post, and he's
ethic
going
it's
to be great. I
to
know him for a
take
long time. He's
to become
a
not only
highly
great as a
competitive
baseball player,
golfer.
but that
which,
same
I mean, really good.
mindset and attitude.
And he's also a highly
he had to
competitive
take it
person, and
in
he
terms
loves
of
what we're
learning
doing.
to
So I
become
want to
a great
congratulate you and your
businessman.
family and,
And
your
so
father. Your
I'm
great
so impressed.
father,
I'm
who's
so
the
happy for
greatest mayor
him
in the history of New York.
because
I
now
want to congratulate the family.
what I
It's a
gave
big-
him,
it's a
he's
big
given
post.
to others.
You
right?
better do well,
We always
Andrew.
still got to pass it to other
Tell him,
athletes
is my golf game okay too?
and other people of color,
Oh, so
not
he
just of
knew what
color,
to
but
say.
whoever wants the knowledge,
Oh, he's a smart
come
person.
get it.
That's
So
why I
it's a
appointed him.
blessing to see
Together,
him
this group
and
will
to be
help
on the
plan
stage
the
with him
biggest,
today and
safest,
see
and
where
most
we both
extraordinary
are.
soccer
Right?
tournament
We
in
both
history.
have
That's what it's going to be,
grown
Johnny.
so much from
In
that
my first
meeting,
term, I negotiated
and
the
where
return
I
of the
am
World
today
Cup
and
to
where I was
America,
then
and
is
now
I'm in
my
a
second
completely
term, I'll have the
different
honor of
place
hosting
today.
the World
Well,
Cup
let's talk
for
about
the
that
first
because
time
what you have
of any
done
president
over the
in
course
more
of the
than
last
30 years.
30, 40
and
years is a
remember,
series
we
of
also
unbelievable
have a few
deals.
other events. I must tell you that
one of
we
the
have
most
the
interesting
2028
things,
Olympic
and Alex
Games.
and I talk about this all the time,
We have
is your movement to
the
ownership. You know, you have a partner,
250-year
Mark Ein, here
celebration
in the
of
front row with
America. That's a
the
big
Washington
one. I don't know,
Commanders.
maybe that's
We
the
spent some
biggest.
time with your partner Josh Harris last week in Miami.
But that's going to be
a seminal deal
It's going to be
for the NFL.
essentially, Todd, that's
I
going
would
to be a
argue
year-long
it's a seminal deal for
celebration.
you. Would you
have
agree?
the G20,
and how do you put that in the
that'll be
context
in
of your deal making?
December of 26.
No, it's the greatest deal I've ever
We
done.
have the G7. Used to be the G8, by the
first
way.
as a kid, I'm
And
already
that's
a
in
football fan. I played
2027.
football.
And,
but I knew I was better at
that's a
basketball,
lot
so
of
I gave
action
it up
we have going
in
for
high
the
school
next
to concentrate on
4 years,
basketball.
3.5 years.
But
It's
to
really,
know that I've
it's
been
going
a
to be
big
amazing
fan
for
of
the
the
country, I
NFL,
believe.
not
Starting this
knowing that
June,
a
the
man of
United
color
States
could
will host
actually
the
become an owner
2025
in the
Club
NFL,
World
but
Cup,
I had
which will feature 32 elite soccer clubs from all over the world competing in 63 matches across 11 American cities, including Cincinnati, Ohio, Charlotte, North Carolina,
Alex Rodriguez, I should say,
Charlotte,
of
North
the deal.
Carolina,
Alex
Los
Rodriguez
Angeles,
and Bloomberg's
California,
Jason Kelly. They do this
Nashville, Tennessee, Philadelphia, Pennsylvania. So we have it in
Is this like just because I'm a
11
girl, you think I don't
American
know
cities all
sports?
over.
Aren't you a New Yorker?
And
I thought you.
these are great cities
I
too,
grew up
and they
watching the
like
Yankees with my
soccer more and
dad.
more. I guess
Giants with
some
my
of those
dad,
cities
four
in
brothers.
specifically, they really
I know
love
the
it.
difference between
And next summer
I know
we'll
you know
host
more
the
about sports
official
than I do.
2026 World Cup tournament,
all that good stuff.
where 48
I like
national
sports.
teams will compete in 78 matches right here in
That
the
looked like a
USA.
pretty good interview.
Actually,
And that'll be something very, very different and very
people should
special.
really listen to it because he talks
These
a
events
lot
will attract
about
millions
his
of
entrepreneurial
passionate
spirit,
fans
even
around the world,
back when he was
including
first starting out
my
his
son.
career in
I have
the
a son
NBA. That was always a goal of his. And you look at the
loves
success that he's had
soccer.
since he left the NBA,
Barron.
which
Nobody's
probably
ever heard of Barron.
is more
Have you ever heard of
notable than the
He's
time
a
in
good
the
soccer
NBA.
Which is
player
kind of
too.
fascinating
He's
to
a little
even
tall
say
for
that,
soccer,
but there's
but
some
that's okay.
brilliant, business
And
moves
over
and
1
so
billion
anyway,
viewers.
if you missed any of
Gonna
that
have
conversation, be sure
one
to
of
check
the
out
big,
the
I
deal
guess,
with
one of
Jason
the
Kelly
biggest
and of course
viewerships of
to
any
Magic
sport
Johnson.
at any time. This will be
He's funny.
Did
a
you know my
once in a
wire was
lifetime
showing? Were you not gonna
opportunity
tell
to
me?
showcase the
really
beauty
funny.
and the
No, I'm
greatness
not
of
gonna tell
America,
you.
and we
Coming up,
can't wait to
everybody, we've got the
welcome
CEO of
soccer
Guardian Health
fans
about
from
their mission to
all
improve
over the globe. I don't know if I'm
outcomes.
supposed to
We're
say
gonna talk a little bit about
soccer or
cancer
football,
testing
because
that's
every
coming
time I say soccer, Barron and Eric say
DraftKings hit a milestone in the second quarter of 2024.
But we
For the
know it
first
more
time
soccer.
as a public company, it turns
These
a profit.
events will also generate
Is this
tens
a
of
new era
billions
for
of dollars
DraftKings?
in
There's an
economic
inflection from
activity
when you're
for
cash
local
flow negative
businesses
and
that
you're
create
operating off
thousands
of
and
equity
thousands
raises
of
from the
jobs
past
for
to when you're
American
self-funded
workers.
and you're
I've
cash flow
directed
positive
my
and
entire
able to
team to
control
do
your
everything
destiny a lot
within
more.
our power
You've had your
to
first
make the
quarters of
World Cup
profitability now.
an
Does that
unprecedented
take pressure off?
success, and
Does
that's
it
what it's
increase
going to be.
pressure?
We're going
I
to make
think
sure
it
of it.
increases pressure.
The
I
State
mean, once you
Department,
start
the
making
Department of
profits,
Homeland Security, and every
more, and
part
all
of
a
the
sudden
U.S.
you're
government will
valued
be
on a
working to
multiple of those
ensure that
profits
these
as
events are
opposed to the
safe
theoretical
and
what could be.
successful,
So
and those
very
traveling
important,
to
I think.
America
When
to
you're
watch
cash
the
flow negative,
competition
you
have
have
a
sole
seamless
vision of what the
experience
company should be working
during
on, and you're
every
very
part
focused on
of
working
their
on that
visit.
and
It's going to
delivering
be very
against that.
special.
When you've
Together,
pivoted
we
to
will
profitability,
ensure that the
the world of
2026
what you
World
can
Cup
work on is a
will
little
be
bit
the
open,
best
and
run
there's a lot of
soccer
different
tournament
ideas, and
the
it requires
world
more
has
focus
ever
than ever to
seen.
make
This
sure
is
that
going
you
to
are
blow every other
prioritizing
tournament
on the
you
most
did.
important
You're
things
going
that
to
are
be
going to deliver the
you're
most
going to say
value.
how
DraftKings'
terrible
solid
a job you did
standing
in the
in a
past,
booming
because this is so
sector
much
gives
better,
them the
Gianni.
luxury to play
This
the long
is going to
game.
blow them
They're
all
not
away.
under
I don't want to
pressure to
insult
cut
my other
costs.
friends from
When you
other
have really
countries, but
strong
we're going to
revenue
blow them
growth, you
away,
don't
right?
need that. If you
So
look at
now
where we
I'd
are
like to
today and where we
introduce,
want
and he
to
has
be
been
and
a
where we
friend of
believe
mine.
we
We
will
fought
be,
very hard to
the
get the
vast
event, and
majority of the
I think
incremental
before the
EBITDA is
media
not
came
coming
in, I
from
said
any
that
cost reduction. It's coming from
I was
increased
very
revenue.
disappointed
We don't
because
feel
I
like we
got
need
the
to cut
event, Johnny.
costs
I think we can
because
say
we're growing
that
our revenue
strongly.
so
And then
much. We want to grow our
I said it
revenue
won't be
into
in
our
my
existing
term,
cost
and I won't
structure.
be
There's no
able to
need
see
to
it. And
reduce
then
the
bad
costs as
things
long as we're
happened
being
with the
efficient
election, and now we
with
do
what
see
we
it.
allow our cost
So
growth
I
to
just
look like.
repeat that because for
Is
the
this a
press to hear, I'm sure
negotiation
they're
or
thrilled
the
to
new
hear
rules
it.
of the game?
It could be
but I'd like to ask FIFA President Gianni Infantino, really one of the most powerful men in sports. It's amazing that he does such an incredible job with soccer. Followed by Vice President J.D. Vance and Secretary Christine
and clarity you need as the tariff and global economy story evolves.
To say a few words. So Johnny, and then we'll go in that order. Thank you very much,
covers
everybody.
Tariffs like Bloomberg. Context changes everything. Tomorrow, the Fed decides.
It is the central banker's dilemma. Downside risk to growth, upside risk to inflation.
They are wait. This is a serious moment. I do not think the Fed can just sit on the side.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
They're expecting stagflationary-like environment.
They are going to be on hold until they have hard evidence one way or another.
Bloomberg surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
That the World Cup of 2026 will take place in the United States, Canada, and Mexico, that we thought will actually bring another World Cup
as well. Welcome back, everybody. We're live at the Milken Global Investment Conference. I'm Carol Master along with Romaine Boston. Before we get to our next guest, we do, don't forget, we're still in the middle of earnings. AMD
Did you notice where he said
earnings,
that?
also their
In the
outlook.
United
Let's go right
States,
to it, because that's what really investors care about. AMD seeing second quarter revenue
That's the way it's supposed to
$7.1
be.
billion to $7.7 billion, quite a range. The estimate is for $7.23 billion. And that probably explains that more than 5% pop that we are seeing in shares of AMD in the aftermarket.
Yeah, kind of interesting too. I'm looking for any sort of commentary about any of the issues with export controls, of course, with the CapEx spending and the AI boom. I'm finding it jumping out here, but overall, we're talking about the most recent quarter, a 36% jump in revenue, but the expectation amongst analysts is that run rate will start to come down a little bit through the rest of the year.
Yeah, interesting. We should just point out too, in terms of first quarter, operating margin a little light, operating
United States of America because of this big event. 32 best club teams in the world with players from over 90 different countries will come here for the first time in history to compete.
That too was larger than what the street was expecting. Again, the stock up almost 6% in the aftermarket. Hey, when you think about stocks that have really been on a tear this year, you want to hear about this one.
World
Guardant
Cup,
Health,
of course,
their
next year.
stock,
So in
first of all,
40
jumped
days,
11%
less
intraday.
than
That was just last
40
Thursday.
days,
After the
on the
diagnostic
14th
test maker
of
boosted its
June
revenue forecast for the full year.
Miami
Firm also
will
reported
open
first quarter
the
sales
FIFA
that topped
Club
expectations.
World Cup.
The
Opening
stock
game,
is up
the
about
final on the 13th
37%
of
year
July
to date.
in
And the
New York,
company recently
New
announced a
Jersey,
strategic
and in between
collaboration with Pfizer
63
to develop new cancer therapies. It is
games of
something
the
that
best
Guardant
players
CEO is
of the
talking
best
about
clubs
here at
in the
Milken.
world
Joining
who
us
want to
right
win
now
this
is Helmy
trophy here
El-Toukhy. He's the
crafted by
co-founder, chairman, and CEO
Tiffany,
of the $5.4 billion
I'm
market cap
thanking as
biotech
well
company.
the
We were talking about
Agnew
Guardant Health.
family
So
for
good
being
to
they
have
are
you
in
here
soccer
with
as well
us.
now. In
Quite a year
Paris,
for you
they've just been
guys. Investors
promoted
definitely like
to
what
the
you're
top
up to. You
division.
can see it in the
So
share price. You
congratulations
boosted your revenue
for
forecast
that.
for the year.
Actually,
What
Mr.
is
President,
driving growth
soccer
for
or
the company?
football,
Yeah,
maybe we can
we're really firing on all
clarify
cylinders this year. It's
Here,
this
I'll do
journey
it.
that we've
Let
had
me
for
give it a
12
try,
years, developing
if I
breakthrough
may.
technology
So
where we use
basically,
biochemistry, DNA
everyone
sequencing,
outside of
and
this beautiful
AI
country,
to see
we
disease
call
much earlier
football
than
a
ever
game we
possible
play with our
to the
feet.
blood. And so
Right.
we do that
That's why we call
in
it
three
football.
parts of the
Makes
business.
sense.
We help
Makes sense.
advanced cancer
You
patients, stage 3,
in this
stage 4
beautiful
cancer
country,
patients,
you call
essentially
football
get matched
a
to
game you play
precision
with your
treatments
hands,
without
right?
needing a biopsy, with just
I
a
don't
simple
know
blood
who's
draw.
right,
So we
but
now
the
test
important,
something like
Mr. President,
25 to 30%
whether we call
of
it
all
soccer
U.S.
or
cancer
football,
patients.
this is
That has been driving a lot of
that
our
we
revenue
enjoy.
today.
That's
been
what
on
FIFA is
fire.
about. FIFA is, I say this
how accurate
well
is that
to all
without
the media
relative
present
to
because
actual
everyone
biopsy?
else knows
It's
it.
very
FIFA
accurate.
is
It's FDA
an
approved.
official
It's covered.
provider of
What's
happiness to humanity.
99%.
And in the next year,
it's very high
we are
specificity.
providing happiness
If you
to
see it
humanity
in our blood test,
from
it's
the
there.
United States
And then we have the other side
America.
of the
And
business
that's
that's
why
just launching,
we are
which is
happy
early detection.
to
That's
be here.
obviously
So
the
we
sort
have
of exciting
the Club World Cup this
sort
year.
of
We have
thing
the
that
World
people have
Cup
been waiting for
next
many
year.
years, and
United
we just got
States,
FDA
Canada,
approval
and
last
Mexico.
year for a
Of
test that
course,
can detect
104
colorectal
games,
cancer
Mr. President,
with a simple
104
blood test.
Super Bowls
For those
in
individuals who don't want to get a
1 month.
colonoscopy
We'll
or
have
a stool
6
test,
billion
this presents an
viewers.
amazing new
The
option
final
for them
alone
to be able
will
to get
attract
screened.
between 2
I
and
think
3
it's kind of
billion
fascinating. We
viewers.
all,
This is,
unfortunately, have people in our
15,
lives,
20 times more
friends,
than
colleagues,
the
family
Super
members,
Bowl. The
where
entire
cancer has
world
touched
will
them. And I'm just
focus
curious
on the
about what you are
United States of
seeing when it
America.
comes to
America
cancer
welcomes
diagnostics,
the world. I'm very
the
happy
business
to
of
say
how it
that,
is
Mr.
evolving,
President,
how it is
because I
changing,
know
because
you
that can be
had
super
meetings with
complicated, super
several
difficult, but I'm just
members
curious
of
about
your
what you are
cabinet
seeing.
as
So
well.
one of the
You have
challenging things about
established this
cancer,
task
I mean,
force.
ever
America
since,
will welcome
Nixon
the world.
sort of declared
Everyone
war
who
on cancer
wants
in
to come here
1972,
to enjoy,
is the fact
to
that
have
we've
fun,
always
to
been one step
celebrate the
behind.
day. We'll be able to
You know,
do
it's
that
growing
in the
somewhere
whole
in the
cities,
body. You
in the
can't
11
see it. You
cities
don't know
all
where
over
it
the
is.
country.
Early detection is
In
so important.
Exactly.
all
And the
these
ability
fan
to see it in
festivals
blood.
that we will create.
So a lot of the, we
have
work with almost
10
200
million
pharma
tickets
companies
for
because we can
sale.
actually
So
see how it's
anyone who
evolving,
doesn't yet have a
changing. You think
ticket, go
about
on
COVID, how it's always changing.
FIFA.com/tickets.
Cancer is
10
exactly the
million
same way.
tickets.
So we're able to
3.5
take
million
one
for the
step
Club World
ahead
Cup,
of it.
6.5
Not just early
million
detection, but
for
allow
the
our
World
pharma
Cup.
partners
How
to
do we
develop
measure
new drugs
success,
which are much
Mr.
more
President?
accurate
Well,
as well.
many
How
ways,
does that
of
fit
course.
into the whole
Full
debate about
stadiums
healthcare
is
costs?
one of the
And particularly when we talk
impact
about
is
big
another one
diseases
of that.
like cancer, which are incredibly
Dear
costly to treat.
Secretary,
No,
these 2 World
this is
Cups
something
will
we
bring
founded the
almost
company
50
on, is
billion
that I believe new
in economic
technologies
output to
can
the
lower
United States
costs
of America.
and improve improve
will create
outcomes. And
almost
I think this is what's been
300,000
exciting
jobs
is that,
in
you know, the
America.
U.S. spends
For
$15,000
the celebration
per individual in terms of GDP, $5
two
trillion per
World
year.
Cups, which will
We're
bring the
2x
world
more than any other
to
developed
the
nation in
United
terms of
States.
healthcare
Few
costs.
million
And
fans
we're seeing
will come.
outcomes that are not
Few
as good or
billion
about the same as
will
Vietnam.
watch it
So
from
there's
home,
so much
but
opportunity
everyone
with
will
these
be
new
happy and everyone
technologies
will
to
be
essentially
celebrating
detect disease
how
earlier,
the
where
United
it's
States
cheaper
of
to
America
cure
will
and you get better
put up
outcomes. We just
the
deployed
best
this technology in
events
England and
ever
the UK,
that
and you know
the
they're
world
very
has
cost
seen. Not just
conscious.
sport events,
We saw
but the
that
best
once we
events.
deployed
We're
our
here for that.
technology
We're
for
here to
screening
work
of all
for
lung
that.
cancer patients,
We're here to
we
work
were able to
all
improve
together
outcomes
as
and
a
lower the
team
cost to the
to
NHS by
celebrate
millions of
the
pounds per
United
year.
States, the
So this
250th
is
anniversary,
there's proof there.
as
This
well
is
to
not
celebrate
hypothetical.
the
Do you
world
see more
and
of
the
an
world
effort,
around
not only here in the U.S.
soccer,
but in other developed
ball,
countries as
football,
well, to take a more
to
proactive
make sure
approach to
that everything
healthcare, meaning
happens as
much
well,
more of a
as you
focus
said,
on
Mr. President,
prevention
safe,
rather than just
secure
waiting for the diagnosis and,
environment. So,
of course, the cost to treat.
we
This
have,
is
and
what
the
I
world
think has been
has,
very pleasant to
of
hear
course,
from the new
full
administration,
entire confidence
Dr. Oz and
the
RFK
United
Jr. in the
States
sense that
and
they're
in all
very
the
focused on
partners,
prevention.
the
You know,
agencies
the problem
to
in
make sure
healthcare is that
we will
we don't
bring
measure and we
to
cut
the
3
world
times. We should just
something
measure
that,
twice and cut
they have
once, and that's
never
where we
seen,
come
they will
into the
probably
picture.
never
So we're helping
again.
Developing
Thank you very
countries
much.
in terms of
We are
detecting
here for
cancer
that,
earlier,
and
where
we're
it's
looking
cheaper,
forward
where
to
there's
these
more
2
access, and we can do that in the U.S. as well. Just on a personal level too, and this gets back to the accuracy. You know, I went through my own battle with cancer.
Well, thank
I
you,
went
Mr.
through
President.
a
Thanks to
barrage of tests over
this
several months
incredible
before
group
anyone
that we've
actually
assembled. I'm
was
proud to
able
be
to
the
tell
vice
me
chair of
exactly
this
what I had.
for a couple of
In using
reasons. First of all,
one of Guardant's
the
products,
last time the president
how much
had
does
me
that
around
speed up
a
the process?
national
Because
or
if I
international
get a
sports
test and
trophy
it
was
shows
the college
me
football
there's a red
playoff
flag in
national
it,
championship, and I
I
almost
still have
broke
to go
it.
to the
And so I
an
appreciate
actual
the president
doctor
giving
and
me
go
a second
through
chance here.
another battery of
But,
tests.
so I'll give you an example.
What happened in the UK
soccer
when
is
we
a
deployed our
sport of
technology for lung
incredible
cancer
grace
patients?
and
They were
finesse
waiting
and beauty.
120 days,
These are 3 things that have
4
nothing to
months
do
to
with
get onto
politics,
treatment
and so we're
with
thrilled to have the
biopsies and
FIFA
so
World
on.
Cup in the United
With our
States of
technology,
America.
we
I think
short-circuited
that you'll
that to
see
2
the
weeks.
very best of the United States
And
of
that's
America,
because
both in athletic
you're
competition,
obviating
but
the
also
need for
hospitality,
interventional
something our
radiologists,
boss knows quite a bit
pathologists,
about.
all these
And
sort
so
of
we're
army of
excited
medical
to have
staff
you.
to
We're
be in the
excited for this
picture.
event,
If you can
and
just
we
do that
will
with a simple blood
everything at
test,
the government level
you
to
can
make
get
this
to
thing
the sort of end
successful.
result very
So
quickly.
And I will say,
not as much
before I turn
of
it
the
over
damage to the
to the
body.
next speaker,
And
that
just
of course
we all have
everybody is
people, like
welcome
in
to
our
come and
lives
see
where
this
this has
incredible
impacted
event. I
us.
know
I think in
we'll
my
have
family,
visitors
I
probably
had
from
a mother who
close
passed
to
away from
100 countries.
pancreatic.
We want them to
my
come. We
husband's side
want
of
them
the
to
family
celebrate.
who's
We want them
seen
to watch the
pancreatic. That
game.
is a cancer
But
that
when the
you
time
don't
is
detect
up,
it often until
they'll have
it's
to
too
go
late.
home.
So
Otherwise,
can
they'll have
every
to talk to
cancer
Secretary
have
No.
an early
Who I'll turn it over
detection
to now.
blood test? Can you guys ultimately, is that the goal? Can we get
Well, thank you,
there?
Mr. President.
You're
Thank you so
music
much
to my ears.
for
So the same test that
dreaming
detects
big
colorectal
dreams
cancer today,
and doing
we
unprecedented
just
things. Your
presented
entire
data
life, you have
at
stood for
ACR,
doing
the
things
American
that other
Association
people
of
thought they
Cancer
couldn't
Research,
do,
on 10
and
other
accomplishing
cancers. And
unprecedented
pancreatic was
events
one of them.
and
We're seeing
achievements.
amazing
And so this is
sensitivity,
one of
very
those
high early
events
stage
that I think is
sensitivity
going to
for
be
liver
remarkable and will
cancer,
stand the
stomach
test of
cancer,
time
throat
as
cancer,
the world's
pancreatic
greatest
cancer,
sporting
lung
event
cancer.
ever held and
And so this is just a matter of time.
You are
It's
honoring
essentially
us
just
by
turning
agreeing to be the
software
chairman
on
of this event. The Vice
existing
President has
test
greatly
to
honored
be
us
able
by
to
being
detect
the
those
vice
additional
chair.
cancers.
And also we have a remarkable leader
you're not really
in Andrew
treating,
Giuliani
but when
who
you talk
stepped
about
up
leveraging
and
AI
will be the executive
diagnosis,
director
how
of
is that
making
also
sure
being
that we're not
applied
just
to making
conducting and
the
hosting people
treatments
from all
more
around the world,
efficient
but
and
that we're also
hopefully
doing it
less
safely.
costly? The challenge
You
right
have
now is the
tasked our
treatments
department, the Department of
are
Homeland
very
Security,
coarse.
with making sure
You know,
these
it's sort of
events
one
are
size
safe
fits all, but
and secure,
every cancer
and
is
it will
very
be
different.
a
And
challenge,
so
but
the
one
way
that
we
we
look at
welcome
cancer
because
today
we
is
know
like
that
black and white
America
television. It's very
is
coarse
in
and
a
so on.
place where
With the
we
technology we
invite
have,
people
where we're
to be
looking
a
at
part of
billions of
our
data points for
livelihood. We
disease,
want to
we can see
expose
the
all of the
exact
American people
subtype,
to
like
the
8K
wonders of this
resolution
sport.
of that
And I
disease. And so
believe
if you know
that
this
the old
person is
proverb that
subtype A,
says
this
what you
person
see
is
with your
subtype B
eyes,
and this
you carry
person's
with your
subtype
heart.
C, you can
Is
develop
what will
drugs that are
happen
much more
when we host
targeted.
this event.
But if you don't know the subtypes,
Carlos has agreed to
you're
step up
driving
and be a
blind.
senior advisor
Well,
as
a
well to the
fascinating
task
topic,
force,
and obviously your company is
knowledge
right
and
in the middle of
expertise
it.
has been incredibly
Helmy
valuable
El-Touki
in all
is
of
the CEO
meetings and
of Guardant
organizational
Health.
efforts that we've already
All right, a lot more coming up here
So,
on the
sir,
Milken
you
stage.
know,
Carol, we're going to
as
sit
all of
down
us
in
do
just a
that
few
have
minutes with Ken
participated in
Kinsella.
sports, that
Of course, he is the president and
there's
CEO
something that
of
happens when
Churchill
you're involved
Asset
in
Management. And I like him
competition.
because
You spend
he's like
time
one
with
of the
people, you
OGs. I don't know if he was at the original
you were out
Milken,
there
but he might
enjoying
have been.
success, but also recognizing failures and challenges and overcoming them. There's a bonding
Maybe we'll just have him
that happens
regale us with
among
stories
people, and I
about his
believe
Drexel
that's
days,
what you
or we
were
can ask
doing,
him,
is
I don't
creating
know,
an
about the economy
opportunity
and markets
for the
and
world to
everything else.
become a friendlier place. We will
All right,
welcome
everybody stick
over
around. We're live
2
at
million
Milken Trail
visitors
Master
that will come
Renee
here from
Boston,
other
and
countries.
this
We will have
Bloomberg.
10 million different tickets. 22 million people will interact with these activities, and it is an opportunity to have people bond with each other, to create a friendlier world where we will be able to do business, we'll be able to enjoy their visits here, we will take care of their documentation and travel documents, and it will go smoothly, and we will make sure that they can come and enjoy and bring their families and friends and make memories together. It's going to be incredibly special. So Thank you for leading at an unprecedented time and doing so with big visions for the future. Thank you for doing this.
Thank you very much, Christy. Appreciate it. Sean?
Thank you, Mr. President. I never thought I would be vulnerable to a scam. This ruined me. And I didn't have any real good explanation
11
for it.
U.S. cities, 78 games in the U.S., and I think you said it's
Wildlife trafficking
just
is
like
almost always driven by
78
greed.
Super Bowls next
Once
summer
you start
in the U.S. So
focusing
this
on
is
money,
massive,
you
Mr.
lose
President.
sight of what is best.
Thank you for putting
That's
together
where
the
things
task
can
force.
go
You know that great events don't happen unless you have great planning and starting well over a year in advance, putting your team together to make sure this event goes off without a hitch. Thank you for that.
Represent more of a disinflationary
as part of the
risk
DOT,
than an inflationary
again, we're going
risk.
to move a
You
lot
think
of
of,
people
for
around the
example,
country.
products coming from Asia looking
American
for a market.
spectators, but a lot of foreign spectators
Them
are going
offering
to come
lower
into the
prices
country.
to find access to the market, but
security and
actually
safety
could
is
get
key.
trade
We're going to work
diversion
with
from the EU
Homeland and Christie to
because
make
the
sure
UK
we
has lower
secure our
tariffs.
airspace
It
around
all
these
depends on
events.
how much
We're
substitution there
moving
really
people
is.
from city to city,
Don't miss the
and from
Pulse,
hotels
live every
to
weekday.
the fan festivals to the stadiums, making sure we have enough transportation, whether it's
What's the
trains
best
and
thing
buses
and
in the
what's the
cities
worst thing
that host this
about
great
trying to
event.
put money to work in
We're
this
working
market?
through that.
Technically, we're an endowment, but
as
we
well
use
as
the
making
best
sure
of
our
the
airlines
endowment
and our
model and the
airports
hedge fund model,
are ready to
so we can
facilitate the
react
travel
very
throughout the country. And so
And I
this
think
is
we're
everyone
very
working
good,
together. But I think it's great,
I
Mr.
would argue
President.
probably one of the
I have
best
to
in the
imagine
world
this
at
was part of the
connecting
plan.
the dots
You're like, let's bring
across
in the
asset
World Cup
classes.
in the year of America's
And from our
250th
perspective right now,
birthday.
the
So not
volatility
only
is
is
great.
America going to
I think
celebrate
market
our
structure is
250th,
still
we're going to bring in
challenged
millions
in
of people
that
to celebrate with us.
liquidity at
I
moments
know
in
State
time
and
when there's
Homeland
a
and
lot of
DOT and all of us
volatility
are going to
is
work
challenging.
together to make
So
sure
you can see
it
a
is
great trade,
seamless
but
travel. We want
sometimes
everyone to
buying
come
as
to
much of it
America.
as you
We want
want
everyone
is
to spend
easier
a lot
said
of
than
money
done.
in America.
Do you have a favorite trade
By the
right
way,
now?
as part of
So
the
we are
DOT's
tactically,
250
at
celebration,
the end of last
we're going to
year,
encourage everyone to go on
we
a road trip,
bought
Mr.
call
President,
spreads
to
on
celebrate
Hong
our great
Kong
country. And so if
equity
you're coming to
indexes.
see some
and I continue
soccer,
to like that
not
trade.
football or football
we're
or soccer,
holding that position. And again,
go on a road
when
trip.
you
See America.
kind of
Don't
the,
overstay
the
your visa.
micro,
Don't stay too long. But
macroeconomic
when you
data
come,
coming out of the
actually
U.S. and
see
you
this great
see the
country that we're
data
going to celebrate
in China,
over the course of the
I
next
think
year.
you will
And again,
see
we welcome
a
everyone.
tactical deal
This team is going
out
to
of
work
economic necessity
full-heartedly together
between
to
China
make sure
and the U.S.
These events
and
go off
I
without a
think
hitch.
when you look
And
at
we're all able to
investors
celebrate the great
generally,
athletes from around the
they've
world,
left
48
China
countries
for dead.
coming in to
So I think
compete
there's going to be
in
money
our great
forced into that
Thank you,
market.
Mr. President.
Thank you very much, Sean.
Listen carefully.
Would you have any
Can you
questions
hear
of these great people or anybody around the table? Please go ahead.
Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI.
Are you worried about any
There's
problems
music
with
in
that
the
joint
markets,
partnership?
and if you want to learn to listen for it, we'll
No, I don't see any tension either. We get along very well with both. They just got to pay a little more money, They're just getting away with things that they shouldn't be, and they understand. We had a great meeting
All right,
today,
welcome back,
actually.
everybody, to our live
The new
coverage
Prime Minister is a
of the
terrific
Milken
guy.
Global Investment Conference.
And
Pearl
we had a
Master, along
very
with
long
Romaine
session
Bostic,
with
private
JD
credit. Yeah,
and
we
Marco
tend to
and
talk about
everybody.
that a lot here at
And
Milken. It's grown rapidly
it
in
went very
recent
well.
years to become
No, we
a
had a very great
$1.6
meeting.
trillion
And no
industry.
tension.
That
We want
expansion and
to do what's
relative lack
right
of regulation, though, has
respective
fueled some concerns
peoples.
about the quality of
And that's
private
what's
credit
gonna
loans
happen.
if the
And,
economy deteriorates.
Also
Which
with
begs the
Mexico,
question,
I think
amid all the talk about a
the
possible US
relationship is
recession,
really
or
very good with
could it be
the
stagflation,
president of Mexico,
might
as you
we
know,
be getting
probably
there?
heard.
Ken Kinsella has invested
And
in
we're going to have
numerous
a very
credit
good
and
relationship
economic
with
cycles.
regard
He's
to
laughing at me
FIFA.
right
I have
now.
no doubt about
He
it.
is the
Johnny would
president
know
and CEO
better
of
than
the global
anybody,
private
but
debt
you
manager,
understand.
Churchill
I
Asset
think the
Management.
relationship is
The
very good.
longest
Thank you
sister
very much.
company,
Question? Yeah, please.
Berkman Asset Management, comprises Nuveen Private Capital. I'm trying to get through it. $78 billion.
Long intro.
Private- Can't you just have one name? $78 billion private
Here we
capital.
are.
You
It's
are
total,
the OG when it
complete.
comes to private capital.
We talked about it even today
You
at
were
our meeting
laughing
with
at the introduction. Why? Because
Canada.
you don't think?
And the level is total. It's
Churchill,
going to be
right?
perfect.
Oh,
It's going to be
okay.
Know
beautiful.
me as Mr. Churchill.
They're very
so I'll
excited
take
about
that.
it.
Yeah.
Hey, listen, I
Yeah,
think it was
please.
roughly, let me just look, 2 years ago, you talked about the golden era of private credit. We always bring it up right now. Is it still golden Is the shine off a little bit right now? How would you describe it?
I would say still very much so. I mean, if you think about the dynamics today, we were on a roll, right? Third quarter, fourth quarter, first quarter.
So we'll start with Christy in terms of the
interest rates
applications.
stabilized.
Absolutely. This summer, by hosting the club championships, we're processing those travel documents and visa applications already and working with Carlos and Johnny and their team to make sure that they're done timely and being proactive of it. And that is obviously going to be a precursor to what we can do next year for the World Cup as well. So it is all being facilitated, and we appreciate the partnership that we've got on all of this with the State Department as well.
Wasn't a private credit market to step in.
The Attorney General and Cash at the FBI too interested in
if you look at the largest managers like
all
ourselves,
hands on deck to make sure this
we have
goes
$13 billion of dry powder.
Thank you. Sean?
Very much open for business.
So basically these are going to be short-term needs. So we're going to have to bring in buses and additional forms of transportation. Most Miami doesn't have the capacity with their transit system to carry all of the people. We're going to go from hotels and restaurants to stadiums and the fan centers. So we're going to have to manage those assets, bring them in from around the country to move people, but they won't be needed there
what do spreads look like in the direct lending space? And I know it's probably very
changes.
specific
This
to each
is a
individual
short-term
company and
push
scenario.
of
But I
folks
assume
coming in
those
to
had to have
see great
widened out.
soccer matches.
Interestingly, Romain, they have not at this point.
Okay.
What has narrowed in are the companies that are getting financed, right? So A-plus credits with little to no tariff impact, yes, still very much being financed. In fact, we didn't have a single deal that, as we went from March to April, that actually went on hold or was otherwise pulled back. So I would say
that was thought
spreads
of
have not
years.
yet widened
Jim
in
Dolan's
private
going to have
credit,
something
but
to say
the
about
kinds
that.
of deals that can get
I've,
done have narrowed.
Not heard of any recent plans. They tried to do that for years. They tried to move it. But I think Jim probably likes his location sitting on top of all the trains. I can't blame him necessarily. There's not too much of a move. They are going to do something with Penn Station. We'll be involved in that. We'll work with the governor. And we'll be involved with that very much.
We've been busier, like as a result of what happened with the tariff news?
What we've seen are larger companies that would have gone to the syndicated loan market or the BSL market. Their market's essentially closed. So what we're seeing is they're coming to private credit managers and saying, look, can we club you guys up? Can we get 2 or 3 direct lenders?
I support really whatever that takes. And any money that's spent will make up many-fold in terms of all of the economic development. These events, especially what we're talking about, you have FIFA and then you have the Olympics. And these events, if properly done, make a tremendous amount of money. And prestige, I think it's a great allure and prestige for our country and for the cities where they are. It's going to be amazing. But we're going to we won't hold back at all in security, most importantly.
In our world, we've seen them, right? But I would say as a general matter, in the liquid markets, not so much. So I think it opens up larger deals. It opens up deal flow that enables us to step in. It's interesting. If you look at the GFC, there was plenty of private equity, but the banks weren't lending, and there was no direct lending. Today, tremendous amount of dry powder.
We're talking to a lot of them right now.
A lot of dry powder and
I think
private
I don't want to bore
so
people with that. I give a very long definition this morning in the Oval Office. We're in very, very good shape. This country's never been in better shape.
That it'll play out in a reasonable period of time, and hopefully shorter rather than longer.
Every country in the world virtually, and now we're not being ripped off anymore. It's very simple.
When you say that, then, if you're looking for new opportunities, a lot of people said, okay, we're only looking for companies that, domestic companies or companies that don't have a lot of international exposure or tariff exposure. Is there argument to be made that maybe you should be looking at those names, assuming that their valuations might have come down because of the tariff
really
pressure?
terrifically in the
I would say
debates.
maybe,
I
but
like
not
him.
for
He's
us.
a nice guy.
I would say,
we got along very well.
here's
We
an
had a great
interesting
meeting
stat.
today. I think the relationship's going to be very strong.
92%
Thank you.
of our borrowers today, we have about 600 companies in our portfolio, 92%, no impact, no tariff impact at all.
Say it again.
So private credit, by its nature, is mid-market U.S. companies that tend to be more domestic, that tend not to be as international as maybe some of the large cap businesses are. So
he's the boss. I'm not the boss.
Services, healthcare, software, business services that tend to be more domestic.
But you're picky in terms of who you choose.
That could be a good incentive.
So, I mean, that percentage is impressive, but I'm just saying, you're really careful with who you pick.
The 5,000 young people a week are being
tend to
killed.
focus on those,
It's not even
sectors
believable.
that are less impacted.
The Russian soldiers and the Ukrainian soldiers mostly, but also people in towns every once every 2 weeks.
You sort of
Horrible
back
things
here,
going on over there.
1998,
So
whenever that was here.
we're going to get that war stopped.
Is this an evolution or is it just growth?
It's absolutely an evolution.
Yeah.
And I would tell you, it changed in a number of ways. Early days, it was more of a policy conference. It's retained that policy, which is great, and I think attracts a broader audience. But the investors are all here, right? And they're all looking to talk about their stories.
Well, Russia
and they're
used to be
exchanging ideas
a
with
member
each
of
other. I was
what
saying
was
earlier
called
to
then
both
the
of you,
G8.
some of the most interesting conversations
I don't
I've
think
had
I
here
was really in
have been the
politics at that point,
one-on-ones
but I know that
with other
President
investors.
Obama didn't
We
like
don't
it.
get to see each other very
And
often, right?
they
We're on the road raising money,
voted
but
Russia
we're all
out.
here,
I say
right?
if they
So it's an
didn't
opportunity to
vote
share
Russia
ideas,
out, which I
think
thought was
about,
a very
okay, have
foolish
we thought
decision
about
because
different
it's
angles from an investment standpoint? So in that way,
group
it's really
of people
evolved
sitting
quite a
around
bit.
the table. I've done it many times with them.
A great pleasure.
And you get to know them. And I say that if it was the G8, if Russia were in it, I think you probably wouldn't have this
10 minutes ago.
ridiculous, deadly war going on
Sometimes I
right now.
listen.
It was a
Ken
very
Kinsella,
bad decision.
Churchill
It
Asset
was headed
Management
by
President and CEO.
Trudeau,
Let's toss
by
it
the
back to New
way,
York and
and
Bonnie Quinn.
Obama.
Thanks,
They were the
Romain.
ones
Yeah,
that
because
really
there have been some
fought
very
hard to get
interesting
Russia
earnings
out. I
out.
think if Russia were
AMD,
in,
not disappointing. That
you wouldn't
stock
be,
is
they'd throw
up
'em
around
out.
about 5% now in
And
the
because
post-market.
of that,
It came out with a
maybe,
strong forecast. Adjusted earnings in the previous quarter,
millions of people
96
are dying.
cents. That beats
Millions,
by 2 cents.
millions. The numbers
CapEx
are
forecast
far
and so
greater
on
than
beat.
you think.
Although the adjusted
millions of
operating
people are
margin
dying.
was 24%, which was
If he was
light of
sitting around the
estimates,
table
it
with
does
other
see that
people, 7
operating margin
people,
improving. Now, that could
hammering
bode
him
well
and
for
saying, let's
NVIDIA
not
later
do
in the month.
this. You would,
We
I
know
think
that
you wouldn't
analysts
probably
and
have
investors
had
are looking for NVIDIA's
problems that
margins
you've
to
had.
start improving towards the middle of the year. That's what NVIDIA has said. Now, in
No,
terms
I
of
think
other
it's- I think it's
earnings,
not good
we have
timing now.
Rivian cutting its
No, right
forecast
now,
and saying
it's,
that
we
tariffs
missed that
will
gate, didn't
impact
we, huh? We
their
missed that gate
business.
with another
The
great
loss per share,
decision by
48 cents,
some
with a
people
tariff
that
impact of
shouldn't
about
have been making
$3,000
decisions.
per vehicle. Perhaps not as
yes,
bad as anticipated. Shares only down about 0.75%. They have been oscillating in the post-market, but full-year deliveries are lower than it was anticipating, between 40 and 46,000, as opposed to the previous forecast of 51,000. Another headline for you: Weight Watchers
Well, I don't know what you mean
International
by
is
that,
filing a
but
prepackaged
people
Chapter
that have
11C
taken part
bankruptcy
in protests, I think
immediately.
people are allowed to
Shares down about
protest.
49%,
Have to do it
as
in
you
a
might imagine, post-market. It had a
reasonable
loss
manner.
of 91 cents per
Not
share, which is much
necessarily
better than
friendly,
last
but
year's
reasonable.
loss, but it's
Otherwise,
now in
Pam will come
substantive talks
after you
with
and
an
you're
ad
gonna have
hoc
a big
group of
problem.
lenders, so that
You're
company
gonna
in
have a
trouble,
big problem,
filing
right,
once
Pam?
again for bankruptcy.
She's doing a good
Overall,
job, too.
in the session,
Well,
we
my
had the
whole
S&P
team here is
500
doing
down
a
0.75%
fantastic job.
for
We're
a
very
second
proud
day
of
of
them.
declines. The Nasdaq 100 was
you have a
down
right to
9
protest,
tenths
yeah,
of
thank you.
1%, and yields were lower to
ahead.
the tune of about 4 basis points across the curve. Now back to the Milken Global Institute and Carol Nasser.
If Hamas doesn't agree to a deal to
These are very strange questions.
All right, Bonnie, thank you so much.
I never like when they read them off a
New
machine.
Energy Finance. The
Who's
global
sending you the
carbon
question
market
to
is
you?
already substantial. It's
And let's
valued
not talk
at
about that
$800
now.
billion
We're talking
in
about the World
2023 in
Cup. Go ahead. What else? Anything else? I think we're pretty well set. I want to thank everybody, and we're going to make this tremendously successful. And you can see Johnny's a very enthusiastic man. He's got great enthusiasm, and that's one of the reasons that you've had such success over the last number of years. That you've been amazing. He's like somebody that just woke up on Christmas morning as a young child and saw those toys under the tree, and that enthusiasm really plays a very well, I have to say. And you've done a fantastic job as the head, and we're going to do what we have to do. And thank you very much. Thank you, everybody, very much. Appreciate it.
Most recently as head of ESG business strategy. I mean, you are just all in, it feels like, from a lot of different perspectives. How would you today, what's cool about Milken is the intersection of finance with everything in our world. So how would you describe the intersection of finance and climate right now?
Absolutely. Look, as you mentioned, the carbon markets really are that intersection of climate and capital markets. And we really believe that they can be part of the solution to help us decarbonize and transition the global economy to a low carbon economy with energy dominance that's focused on clean energy. So carbon markets are really at that epicenter. As you mentioned, it's almost $1 trillion today. This is not a small asset class. It is not a small market. But a lot of people focus their effort and energy on the voluntary markets, which today is $1.5 billion. So fraction of the total carbon marketplace. At Artemeter, we're carbon investment managers at our core. We're focused on applying capital market savvy and experience plus science and integrity to help create a solution to the amount of carbon that we have in the atmosphere, which is just fundamentally out of balance.
Is the interest still there? Because there's been a lot of talk about the U.S. this commitment to climate change goals, and the idea that if governments start to pull back from some of these goals, then there might be less incentive for investors to also to pursue those types of investments.
These are the exact topics that the market is wrestling with today. We need to see clear demand signals for carbon assets. In the compliance markets, which make up the bulk of the hundreds of billions of dollars of assets in this space, they're clear demand signals because they're obligatory. They're compliance markets where there's an obligation from those entities operating in those jurisdictions, like the California cap and trade system, for example. Where we haven't seen that same demand function is coming in the voluntary markets. And I like to kid, but it starts with the name. It's voluntary carbon markets. It's voluntary. What do we need to see? More compliance, regulated, required activity.
Well, good luck with that, because you have a president who has taken us away from the Paris Climate Agreement. So how do we get there?
Well, it's interesting. The first speaker at Milken on Monday morning was Scott Bessent, the U.S. Secretary of Treasury, and he's talked about the idea of a carbon border adjustment mechanism to match the competitiveness and leveling the playing field for our U.S. companies here in the U.S. compared to the European CBAM that has an export. Anytime you export into the European markets, you're going to have to pay a carbon tax. Do you want to send, as a U.S. company, do you want to send your tax dollars to Brussels, or do you want to fund the government activity at the U.S. government? So I do think that there are parts of the U.S. administration today who are serious about carbon as being part of a tariff plan and program.
So do you think you'll see renewed interest? I mean, Bloomberg had a great story last week about how a lot of financial firms have actually scaled back their ESG departments, some sort of saying that they overhired, given where we are now. But is this just sort of kind of almost cyclical to a certain extent, and then at some point, I don't know if we're talking to you 2 years from now, it'll just be a totally different story?
I think that you're consistently hearing in sustainable finance, so carbon as being an offshoot of this concept of sustainable finance and sustainable investing. I think you've got clear kind of consensus among institutional investors that climate, carbon, other sustainability factors are just a core part of your research function. If you're not focusing on those factors and you're insuring homes in California, you're missing the boat. You're not doing your job right. So these factors are critical as part of the research function, absolutely. But I do think you're seeing a step back, particularly in the venture markets. I think you're starting to see real interest, deep interest in infrastructure, project finance, where you're starting to see the technology risk has passed, and now you need to deploy and scale. And I think you're seeing billions of dollars being deployed into infrastructure, project finance related activities.
All right, Olivia, really interesting. There's still a lot more to go. Olivia Albrecht, she's the CEO and founder of Artemeter. All right, let's toss it back to Vonnie Quinn, who's keeping an eye on all the market-moving news. Vonnie.
Exactly, particularly the post-market earnings, Romain. And we got good news for investors from AMD, Advanced Micro Devices, forecasting strong revenue for the current period. It says that's driven by demand for high-end computers, which of course capable of creating and running AI software. We're looking at this for a little bit of a nod to what NVIDIA might say towards the end of the month. And as you can see, shares are higher, up about 4.4%. They were up as much as 8% earlier in the post-market session. Now, margins are improving towards the middle of the year, according to AMD. The current margin at the moment, a little bit shy of what Wall Street was looking for at 24%, but it sees a second quarter adjusted gross margin of 43%, and that's inclusive of export charges. Now, on to other earnings. Rivian cut its revenue forecast, although revenue in the last quarter beat at 1.24 billion versus less than $1 billion for the estimate. Shares were oscillating. They are down about 0.75% because its full year deliveries are going to be less than what it originally forecast. Now, between 40 and 46,000 vehicles, the forecast had been 51,000 deliveries. And it does say there'll be a tariff impact of about $3,000 per vehicle. And then another company filing for bankruptcy in this case, Weight Watchers, or WW International, a loss per share in the quarter of 91 cents. But the bigger news is that it's filing a prepackaged Chapter 11 bankruptcy imminently. Shares down 42% post-market. It says it's in substantive talks with an ad hoc group of lenders. Not the first time, of course, that company has filed for bankruptcy or bankruptcy protection. In the regular session, we had the S&P 500 down for a second day by 0.75%, and the Nasdaq 100 down 0.9%. So we'll see what all of these earnings, plus of course the earnings before the bell tomorrow and the earnings after the bell, they all include Disney and many more companies, what that will bring. Back to the Milken Global Conference now, and Romain Bostick. Romain.
All right, continue our coverage here with the focus now on technology and AI. And of course, with the promise of AI also brings risk. The technology fueling new and more efficient types of cyber attacks. So how do you fight AI-driven crime? Well, with more AI. Cybersecurity company Darktrace uses unsupervised machine learning techniques to build so-called patterns of life for your network, your computer, your phones, whatever. And then they use those patterns of life to detect abnormal
It's like you know what they're doing.
That's right. All right, well, let's talk to a person who really knows what this company is doing because she's the CEO of Darktrace. Jill Popelka joins us right now from the Milken stage. Great to see you.
It's great to be with you.
You are at the center of the universe now, although a lot of people may not talk about it publicly. But every company, and for that matter, individuals as well, have much more of a renewed focus on protecting their computer systems and networks here. Are you seeing that actually translate into new business?
It is absolutely a hot topic. Today we serve over 10,000 customers. We're a little over $1 billion in revenue. We have three main products: network, email, and cloud. So we're protecting quite the coverage of your IT landscape.
We talk about this idea of patterns of life, right? So you're using this technology to sort of learn how I use my device or how I use my network. Right. If you see something that does not necessarily fit that pattern of life, what happens?
We run it against models. So we have a number of AI models. We actually used a multi-layered AI to evaluate, is this truly a threat? We can take a number of events, put those together, compare them to our models, and we can say, is that anomalous behavior compared to what your organization normally is doing? And so by recognizing anomalous behavior, we can categorize that as a threat and then prevent it from hurting you.
Jill, one of the things I think about is, right, AI gets smarter, machine learning, large language models.
Sorry, I'm done. I'm back. Is that better?
Especially when it comes to cyber attacks, we're constantly figuring out new things to do.
So,
the AI that's going to help us
okay, cool.
or catch them.
All right. So this, where was your entry? Is this your entry zone, or is this like this fair value gap looking thing? Is this your entry?
We're like your human immune system. We are going to understand when something foreign comes in that shouldn't be there, and not only detect it, but prevent it from harming you, prevent any data exfiltration.
Bottom green line.
An unknown actor from coming into your environment.
That
allows us to stay completely ahead of even novel threats. So we saw an increase of novel social engineering, about 135% increase the month after ChatGPT was launched. That means that, exactly as you mentioned, AI is
need to pay for the subscription.
To act more sophisticated, act with higher velocity. We can stay in front of that because we are using AI to combat it.
You've been your own deep fake, right? Like that created a system. You started at a company, right? And one of the workers there got something that they thought was from you.
That's exactly right, Carol. It was in my first board meeting, too. I came out of my first early session in the board, and they said, Jill, there's been a deep fake of you. It's been sent to some of our employees, and they're asking for a response. Luckily, our employees are fairly astute when it comes to dealing with these things, so they knew that it wasn't me.
But they're getting more sophisticated. That's the point.
Very much.
The dash, right? The dash is the entry. Bottom green line. Oh, this one. Before the shaded area. Okay, cool. So how did you make this? Do you have an indicator that does that? Or how did you say? You said in there how you figured that. Oh, you're playing the MOC. You're playing the MOC. So you're saying that based off this action, the MOC is going to be short, basically. That was a really good indicator.
Infrastructure will always be a place where we're going to see a lot of demand. Healthcare is really looking at how they protect their environments as well.
Yeah, I know that really wasn't very technical, but I'm sure there was something that went into how this is drawn.
Needs to understand how to protect themselves, and luckily we can serve strategic customers.
That was a no-brainer call. Yeah, I'm going to try and fine-tune these EMA crosses so we can get the entry in the. That's my goal now. Get the entry in the trade management down. And if we can just hit one runner a week, like, some of them you're going to get stopped out. It's going to hit your trail and you're not going to be able to catch it because of the way the candles end and the price action and stuff. But you should be able to catch one or two of those a week. We get at least 2 a day and catch them for 40 or 50 points. And if we can do that, we can minimize our trades and feel confident that the next one we can get paid on and we don't have to go crazy and be better mentally, I think. You know, especially once you start building a count up. But all right, cool. All right, I'm gonna sign off, Snooze. I got a couple things to do, and I got some. I got leads coming in. But all right, we'll see you tomorrow. Have a good night.
Listen, Magic Johnson, one of one. I mean, just an unbelievable success, obviously on the court here in Los Angeles. But what he's built over the past 20, 30 years is unrivaled in terms of, you know, you think about insurance businesses, movie theaters, Starbucks partnership, and an owner of the Los Angeles Dodgers, and most importantly, we talked a lot about this, one of the big owners of the Washington Commanders. And he said that is his best deal of all time.